Deposits coming through to India would result in liquidity being flushed.
Correct.
And this is something that the RBI had spoken about even during the policy. At that moment, though, and we spoke about this last evening, what did RBI governor say when there was a specific question to him to say, are you going to shut this early? He said, at this moment, there is no policy.
There's no proposal.
There's no proposal.
Yeah.
And that's exactly how it panned out.
Yeah.
In all likelihood, based on the updates that they got over the course of the last couple of weeks.
I wonder if you will see a rush coming in the next couple of weeks, because the deadline has been pulled
31st.
forward, right? So you could see a huge rush of FCNR deposits coming in as well, because the scarcity premium has now
it's
been
another
created.
2 weeks that they have in hand.
Yeah, I don't think it should be looked at as very negatively for banks, because the fact is that the plan was a hit in a sense, and it's worked so well that they've decided that they don't want any more. But we'll wait and see how banks react to this. You might see some initial impact as well when markets open. So watch out for banks. I think the big one, of course, is Q1 earnings have wrapped up, and focus will now shift to stock-specific moves and global interest rate expectations and persistent FPI flows. I believe close to about 16,000 crores in August coming in. So that shift and momentum is now beginning to be seen. Nifty is towards a near-term consolidation with a mild downward bias. The technical picture is long-term bullish, medium-term neutral, and short-term cautious or bearish. Supports at 24,315, 24,290 and 24,250. Resistance at 24,395, 24,425, 24,465. The key downside breakdown zone is 24,250 to 24,200. A decisive break below 24,200 risks further selling towards 24,050 to 24,000. The key upside resistance zone is 24,500. A sustained trading above this level reopens short-term targets of 24,700 to 24,800. For the Bank Nifty remains structurally healthier on medium and long-term charts. Supports at 57,405, 57,330, 57,215. A pivot resistance at 57,635, 57,705 and 57,820. Just want to quickly take you through Rajiv Batra's take. This is the JP Morgan India strategy. Talking about earnings, since we've wrapped up that period, they're saying it's the highest earnings growth since June 2024. They've reiterated their Nifty 50 target for 27,000. MSCI India companies' revenue and PAT has grown at 19% for revenue, PAT at 16% year-on-year in Q1. Key highlights is that beats came in at 58% and misses at 24%. There was better sectoral breadth of earnings growth. Resilient domestic demand continues to offset an unusually noisy external environment. Materials, utilities, industrials, discretionary reported higher earnings growth. Beneath a healthy top line, aggregate profitability was dragged down by a handful of heavyweights. The clearest structural bright spots were power demand, the capex, grid, defense cycle, autos, and a volume-led recovery in consumer staples. Overall tone was broadly constructive but prudent. Companies are emphasizing profitable expansion, and they estimated MSCI earnings to grow by 11% and 13%. That's for 26 and 27 respectively. Preferred positioning leans heavily towards high-growth domestic cyclicals. The base case Nifty target remains 30,000, and the bull remains the bear case, bull case is 27,000, 30,000, 20,500. So that is the base, the bull and the bear for the Nifty. So a bull case of 30,000 for the Nifty actually sounds interesting at this point. Let me go across to Puneet, whether any of that optimism is seen in the F&O setup this morning.
Well, unfortunately, the last week has been in a consolidatory range and still not seeing any sign of pickup in the F&O side of things. Now, we ended close below that actually 24,400 mark. The GIFT Nifty, of course, implies a start in the red. So we are hoping for some triggers that will lead the markets this week. Earnings largely being done. Strong set of earnings as mentioned in JP Morgan note 2. But when you look at the screen, there's not too much that you see as of now. Similar on the Nifty as well as on the Bank Nifty too, which has been below that 57,500, 600 mark. These are not levels where you are visibly seeing the next level of acceleration come through. So you look at 58,200, 58,800 as important levels, but how we get there is currently not visible, at least on the screen. The cash market also has seen some bouts of buying by foreign investors, and hence the index long too, even on the FNO side, continues to be largely in that 11 to 12% range. It's not a trend at all. It's just better than July is what we can say at this point of time. Also, the open interest distribution, because the put call ratio has largely been stable. So you've seen active call positions on 24,500 as well as on 24,800. And on the downside, you're looking at 24,000 with the big red candlestick on the left of your screen. So what this does mean is that we'll be in this range for a while. You have every time a downtick towards that 24,000, closer to that mark, the lower levels get activated and the upper band also gets activated once we come back into that middle band of 24,500. So this isn't a trend. What you are seeing is out of money call and put options being looked at every time there's a volatile swing, and hence from the current levels, minus and plus 500 points, seeing some interest. But when you look at stock specific action, last week was one where you saw some decent one on Max Health as well as Page Industries. Similar one on the open interest loser side was visible on Apollo Hospitals as well as Amber Enterprises based on commentary. LIC continues to see that momentum on the stronger side. Yet again, short coverings being seen, now close to that 413 mark. But overall, as you look forward and get done with earnings, the next leg of trigger, what that could be, will be a crucial thing to watch this week.
Okay, I agree. The question is that the overall view is that earnings have been good. Has it really shown its entire impact in the markets and how stocks have reacted, or have external factors weighed on them? Having said that, let's get to the watch list. The first on my radar is Voltas. Thumbs up. Revenues were up about 19% to 4,674 crores. EBITDA was up 49% odd to 266 crores, and margins have grown from 4.5% to 5.7%. Net profit was up 52% to 214 crores versus 140 crores. Here's what Jefferies is saying. They've maintained a buy, raised their target price to 1580 from 1530. In any case, way above where the current market price is. They're saying room air conditioner market share gained sharply to 17.3% from 15.9%, with volumes up 44% and channel inventory normalized to 4 weeks. Voltas now plans a 50-50 joint venture with Attenberg to manufacture 2.5 million RAC compressors over 1.5 to 2 years, aimed at securing supply amidst import restrictions. I found this particularly interesting because Attenberg, of course, indigenous company known for its new kind of compressors that they use in their fans, etc., now tying up with Voltas for RACs. Just keep in mind that this market share growth, the question is, going forward, will it come at the cost of margins? But overall, if you look at the numbers, definitely a positive. Can't say the same for Satwik Green Energy, frankly. The numbers do show some pain this quarter. Revenues are down 44% to 511 crores. EBITDA is down 80.5% to 33.8 crores. EBITDA margins at 6.6% versus 19%. There's been a complete crash there. And net profits are down 95% to 5.5 crores from 117 crores. Satwik Green Energy was weak, led by lower execution volumes and cost volatility. Margin pressures continue due to geopolitical issues. Customers adopted a wait-and-watch approach due to regulatory changes, and many projects were deferred instead of being commissioned. Could not fully pass on higher input costs to customers either. So profits fell sharply because fixed costs were spread over fewer shipments. Management expects higher volumes in Q2. Margins may not improve materially, at least immediately. The third one on my radar is Physicswala. The numbers are, I would say, in line and slightly a beat in some aspects. So revenues were up 24.4%, 1,054 crores. Losses have narrowed from 76.3 crores to 56.9 crores. Net loss has gone from 120 crores to 77 crores. JP Morgan has upgraded the stock to an overweight from a neutral, with a target price at 148, which is why look out for the stock and maybe a positive reaction. They're saying the Q1 print beats maintain their guidance of 30% revenue growth in FY27. To divest their NBFC arm, FinZ Finance, due to its focus on building the core education platform rather than lending business. The stock was down 18% in the last 1 month on worries surrounding NEET exam delays. There's also announcement by the Prime Minister that he has made on the occasion of Independence Day, talking about free online educational classes that the government will provide to students. And there was a statement from the Physics Wala founder Alak Pandey on this, saying that they are very happy to collaborate with the government on this. So wait and watch for those developments as well as far as the stock is concerned. But the results were not half bad.
Yeah, absolutely. I picked a couple of results as well. Kingfa Science and Tech, I looked at the numbers, they looked incredible. And then I looked at the company. Very interesting company, by the way. It's a subsidiary of a Chinese company. I'll come to that in just a bit. They've seen significant growth in multiple metrics as new capacities come on stream. One of their new plants, actually in Bhiwadi, Rajasthan, has started commercial production on the 22nd of February. Bhiwadi. I'm not talking about Bhiwandi. Bhiwandi, my producers actually tell me it's Bhiwandi. No, it's Bhiwadi. That's in Rajasthan. Strong demand in auto may have bolstered volumes, and better operating leverage resulted in higher margins. In case you're wondering what this company is about, it's a specialty polymer compounding company. It's a subsidiary of Chinese group Kingfa Science and Technology Co. Limited. It makes reinforced polypropylene and engineering plastics and thermoplastic elastomers, among other things. So take a look at some of these numbers. They look incredible. 49% uptick in revenue, EBITDA as much as 94% higher. The margins have improved to 16.2%, and that's where you see that operating leverage come through. And the PAT number has doubled to 80 crore rupees. So looked incredible. PTC Industries, not too much in the way of details here, but take a look at some of these updates. You had a strong year-on-year growth in revenue and PAT, but the revenue and PAT has actually degrown on a sequential basis. Margins have contracted on a sequential basis from that multi-quarter high of 32%, but they still look robust on a year-on-year basis. The orders received in defense and aerospace business have likely aided revenue growth. So they are in that precision engineering, making of titanium alloys, etc. And so they have applications in aerospace. They also have an application in the BrahMos missile system to a certain extent. And so revenue uptick of close to 100%. You have EBITDA at 49 crore versus 8.3 crore. Margins have expanded substantially on a year-on-year basis, and the PAT number is a multiple of as much as 6 times or close to that. There's a certain element of inventory gains that has come through that's doubled on a year-on-year basis, but it's mostly a good set of numbers. Ashok Leyland, finally, I've picked a brokerage note. This is CLSE on Ashok Leyland, and a number of people have written in, but they've maintained, outperform and hiked their target price to 196 from 183. They say that the demand outlook remains steady and better than expected Q1 growth amidst adversities. The margins are set to gradually normalize from Q3 as key commodity prices stabilize. So all told, good set of numbers. It should react, well, ought to react positively. Let's see how it goes.
Absolutely. In fact, even I have one very confusing one. We'll come to that one. But Puravankara is the first one on my list. A thumbs up to this company because it's been a turnaround quarter. They've actually returned to profitability. The total revenue has been supported by a higher property handover as well. If you talk about the pre-sales value, a 28% growth is what you're talking about, a 9% sales volume growth as well, and your collections have gone up by almost 40%, and this is the highest ever first quarter collection in 3 years that Puravankara has actually managed. A 61% revenue growth. Your EBITDA number is coming at 189 crores versus a 67. Margins have also improved substantially. I mean, I would say nearly double, 22.2 versus a 12.7. And they've reported a profit this time around versus a loss. So a thumbs up coming in for a Puravankara. Now, Zaggle is very interesting. I mean, optically, yes, on a sequential basis, it's a thumbs down because your revenues have gone down 31%. EBITDA is down 47%. Your margins have come in at 7.2 versus a 9.4. And their profits have gone down almost 56 to 57% at 17.5 odd crores. However, if you have to compare on a year-on-year basis, the growth has remained robust with 27% growth. Their user base has also expanded 18 to 19%, and their incentives and cashback costs have improved as a percentage of revenue. Usually, we do look at a Zaggle on a sequential basis and hence a thumbs down. But if the street is actually looking at the year-on-year numbers, don't be surprised if you do see a positive reaction on the counter. And the last one is Knowledge Marine and Engineering Works. A thumbs up on this one because they've delivered a massive multifold growth in profits. driven by expansion in its core operations. The board has actually approved a 1:5 equity share split as well. The revenues have come at 115 odd crores versus 48. Your EBITDA at 73 crores versus a 20 odd crores. Margins at 63.6% versus a 41.2, and a net profit number of almost 61 odd crores versus 11.5 crores. And this has been on investors' radar, and there has been a lot of interest on Knowledge Marine as well.
Yeah.
I think Zaggle is pretty clear. If there's such a bad quarter, even a year-on-year
that's the reason I'm thinking it was very
improvement.
confusing to actually look at it, and that's why I wanted to point it out that sequentially it looks horrible.
Yeah.
But year-on-year is what is looking decent.
Would be great to speak to the management
as well.
What's happening? We welcome you on board. All right, let's talk about FCNR. So the RBI has closed the FCNRB window, even as record inflows have come in. What was the FCNR there for? It was there to support the balance of payments, right? And as per Bank of America, the Q2 current account balance stands at minus $3.1 billion. That's at 0.3% of GDP. Meanwhile, foreign inflows remain weak in Q2, and the overall balance of payments have turned negative. The inflow estimate, they have now increased to around $80 billion from $60 to $70 billion on FCNR. They believe the shorter scheme window may cap inflows, and RBI forex reserves have crossed $700 billion and likely to keep rising. Dheeraj Nim, economist and FX strategist at ANZ Research, with us this morning. Dheeraj, great to chat with you. Hope you're doing well. Why do you think the RBI decided to curtail this window? Is it because the scheme was a bigger hit than expected, or the costs were too high?
Right. I think it has to be a balancing act. I mean, there are a few things we need to keep in mind. One, the inflows were stronger than we at least had expected, or perhaps even the RBI expected. I mean, our updated guidance would be above $70 billion just for the FCNR, even though the window will close on 31st August. I think the bigger point here is that what was the scheme doing? Look, we have to realize that, given oil price risks and the dollar risks, the rupee remained susceptible to global forces. This was very unlike 2013, when the scheme had turned the sentiment around for the rupee, and the rupee had appreciated by about 10% in just over a month's time. And I think that is what has not materialized this time. The confidence channel did not really work to prop up the rupee materially. And what the scheme was essentially doing was, of course, to build up the FX reserves, which was a significant positive, but also accumulate external debt on the RBI's book, which would have to be repaid in due time. And that could have been a lumpy development had the scheme gone on till 30th September, because inflows would have been much, much larger. So I think that this, to me, looks like a balancing act between all of those costs and benefits. The RBI has accumulated sufficient reserves. I mean, the reserve adequacy was never really questionable even before the scheme, and now it's even more fortified. So I think, in all good chance, I think this is a decision well taken.
Dheeraj, the moot point, though, is what is happening with the rupee. And ultimately, is there enough stability now, based on what you've studied over the course of the last couple of months? And of course, at one point of time, you were talking about, not you, but everybody was talking about the possibility of going beyond 100. At this moment, it's been stable for a while. What do you think about the trajectory going forward?
Well, we think that the rupee stability could persist a while. I think, our December end forecast is 95.75, which is not, particularly adverse from where we currently are. I think the important point here to realize is what's happening to the underlying balance of payment apart from the FCNR flows. I think two positive developments are important to note there. The first one is that the current account pressure is not as acute as we were imagining it to be. I mean, you look at the Q2 numbers, because the RBI put out the monthly BOP series, it's not looking quite half as bad. And the second is that, there's been a bit of a turnaround in portfolio inflows, especially equity inflows. I mean, if you look at the last, a few weeks, you would see a significant turnaround, in net equity inflows, which to me is a good sign. Of course, we will have to wait and watch how long does it mature. But there has been a positive development in the BOP as such, which to me sort of portends more rupee stability in the near term, absent any risks. Of course, I mean, we're living in a very uncertain world. What happens to oil prices, what happens to the US dollar remains, very much in focus in the weeks and the months to come.
Dheeraj, as Alex was just talking to you about the rupee, my question to you then is, there is rupee liquidity that has come into the system, right? So now when you're talking of an early closure, does this imply that the liquidity conditions could tighten sooner than expected, number one? And if that happens, should the debt market participants actually prepare for a reversal of some kind of support from here on?
Look, I think it's a slightly more intricate question than just that. I mean, we have to marry it with the RBI's inflation outlook. Look, our own reading is that price pressures are actually broadening beyond food and fuel baskets, and there are early signs of second-order impact, but the overall process has been pretty much non-disruptive. I think the Reserve Bank of India is fairly cognizant of these developments, and they have cautioned that liquidity will be in accordance with growth inflation outlook. And I think, therefore, it is somewhat discomforting that, the scale of these inflows have, increased liquidity. I mean, it hit about 3.4 trillion as of the last available data, which can make any central bank slightly uncomfortable, given the kind of inflationary world we are living in. So I think we will have to marry it with their growth inflation outlook. Look, currently, the Reserve Banks of India's stance is of a neutral stance, which means that they would neither be looking to tighten liquidity or make it abundantly loose. So I think, like I said, this is a balancing act from an FCNR perspective, but also liquidity, domestic liquidity would have been a key consideration.
So therefore, at the end of this, what is your anticipation of the total flows that would come through by the end of August? Because you could probably also see a few people rushing to get into this window.
Right. Look, I think $75 billion could be a fair bit of an expectation. It could be higher than even that. But the bigger point is that, does it prop up more confidence towards the rupee? Does it create organic results for the RBI? That, to me, is a slightly far-fetched point at the moment.
Very quickly, what does this mean for banks who were ready with their schemes and had gotten into a bit of a competing situation as well to attract the most FCNR deposits? All of those plans have now suddenly got truncated.
Right. I mean, those who missed the bus have missed the bus. What can I say?
Okay. Thank you for that. Dheeraj Nim there from ANZ Research on his take on what the FCNR scheme being curtailed means, of course, for banks, why the RBI could have done it. And if you're someone who was looking at it with interest, a lot of NRIs were, then the time period that you have to now take advantage of that scheme has gotten curtailed till the end of August. We'll take a very short break. I want to look at the implied open before I go into that break. We'll be back on the other side with all the top ideas and strategies of the day. Don't go anywhere.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu.
All right, welcome back. You're watching India Market Open. Kush Bora with us in the studios this Monday morning. Avinash Gorakshakar joining in. He's founder and head research of Avinash Mentor Research. Kush, let's start with the outlook. You know, are we going to finally get out of this blockade? I'm calling it a blockade. It's not the Strait of Hormuz only that's been blocked. The Nifty also seems to be stuck behind some blockade.
Yeah.
Are we seeing signs of it opening?
Not yet.
Okay.
Not yet. First up, a very good morning. And here, I didn't know we had Wolverine and Jean Grey in the studios.
absolutely.
We didn't get the memo. Varna hum bhi.
That was,
That was a surprise element.
If I looked like Hugh Jackman, no, it would be a completely different story.
I mean,
Have you seen the initial movies of Wolverine?
Nah.
Pretty much there.
wow.
That's a huge compliment. It's not. I will not take that
This is
compliment.
a fan club of two.
So let's talk about the benchmark now.
If you insist. No. So, more of the same. Honestly, more of the same. Just take a guess for how many sessions, consecutive sessions, has the Nifty made a lower high formation? Take a guess, guys. For how many sessions?
How many sessions?
Has the Nifty made a lower high, a consecutive lower high last few?
Five?
5.
9.
9, okay.
For 9 sessions, we've had a lower high formation. Of course, sometimes we've not had a lower high, lower low complete formation, but a lower
Correct.
high, suggesting that there is definitely selling pressure at upside. I mean, aisa kya kharab ho gaya hai, right? I mean, we know the issues that are persisting, but has it really gone so bad? For now, we are respecting the 20-day moving average near 24,300 and the 24,250 support that we've been talking about. But other than that, no momentum. The stock-specific action has also gone very, very stock-specific, because if you look at the market breadth, and especially if you look at what the SMID indices did on Friday, they also ended with cuts, right? So some caution definitely warranted. If 24,250, 24,300 is given up, then I think there is a gap at 24,000 and 23,800 that might come into play here. So I will be a little cautious right now. I'm not going to buy just because the Nifty's had these lower high formation and has been consolidating with a negative bias. I need an upward trigger, and the cleanest of them all would be Nifty closing above the previous day's high. So wait for that trigger and then go out and buy. FIS still continue to pile on short, so wait up.
Okay, but Kush, to add to that, I was just looking at the last 5 sessions data that we were talking about in the setup as well. Levels of 24,265 and 24,298. If you have to look at this range, there has been strong support coming in there. And there is a good amount of accumulation that's happening as well at these levels. What would this then actually mean for investors? The moment Nifty comes to these levels, should they start actually accumulating then?
Hiril, on a normal day in a normal scenario, I would have said yes to that. Look at the options data. When this weekly series started, which is going to end tomorrow, the 24,500 straddle was at play, and then the range was about 250 points, right? So I was looking at 24,250 and 24,750. We never even tested 24,500 in a meaningful way and went above that. So even if we had that kind of volatility, where we were testing those resistance bands, I would have said yes, that's a good idea. Range play hai, niche mein buy karo, ऊपर में sell कर देना. ऊपर में जा ही नहीं रहा है market. That is my concern. And right now, the 24,500 straddle has shifted to 24,500 call option and 24,300 put option as a base. And hence you're seeing Nifty rebound from 24,300 levels, that much more consistently. So I don't think you should buy right now at lower levels. Let the market give you that trigger. एक दिन का trade miss होगा चलेगा. At least we need a confirmation on the trend.
Okay, what about stocks?
Yes, stock specific. Oh, by the way, देखो 3 stock दे रहा हूँ, ठीक है? Monday है तो obviously weekly pick, but I'm not giving too many stock ideas also. I'm rehashing a couple of them from the last week because of this very reason. If the markets aren't doing well, there isn't as much stock specific action. There's no need to play around into too many stocks. Whatever's got momentum, you dabble into those. So the weekly pick, by the way, this week is GNFC. Very strong moves last week. Friday also very exciting moves. Ended at the high point of the day, high point of the week. Volume action also very encouraging. Momentum indicator supporting. So for targets of 595 and 625, GNFC is the weekly pick, stop loss at 545. And the other 2 calls, you would have heard them last week, Ajanta Pharma and Ram Ratan Wires. Now, Ajanta Pharma saw some traction, moved higher. So the targets then were 37.30, 38.60. You can bump up the stop loss now from 35.20 to about 35.90. Ram Ratan Wires also consolidating with a positive bias, 491, 505 targets, 462. That's where you keep your stop loss.
Got it. Okay. Avinash Gorakshakar, founder and head research, Avinash Mentor Research with us this morning. Avinash, thanks as always for taking the time and good morning to you. Just your initial view on this announcement of FCNRB deposits being closed 1 month early on the 31st of August. A lot of the major banks have already mopped up a significant amount of money, and I think the broader collections have overshot even the central bank's projections. So is this a negative at all, or would you take this as par for the course?
No, I think, good morning, Alex. I think clearly, I think the kind of flows which came in via the FCNR were much higher than what the street expected and the banks expected. So I think, the deadline getting cut before, the due date is definitely something which was surprising. But I think clearly the government seems to have understood that a lot of money has come in, much more than what they expected. And that could be the reason. And I don't think that is going to be a major negative, because I think this kind of currency inflow is going to stabilize the rupee. And most importantly, I think banks which actually did the groundwork earlier obviously benefited. I think, people who have missed the bus will now obviously regret. But clearly, I think it's not such a big panic that the markets could actually look it down as a big negative. So net, I think it's definitely not a negative. But yes, maybe, for a day or two, I think some of the banks may show a little bit of weakness here and there.
PSU bank side, Avinash, or the private sector banks?
I think my guess is, the private sector banks are fairly priced to perfection. So I think it's the PSU banks possibly, which could possibly hold on to the show. The private sector banks like Axis, ICICI Bank, could possibly see a little bit of weakness. But again, this is not a big fundamental issue according to me. And I think this can definitely be considered to be a more of a neutral kind of issue in the markets.
Before we get to the quarterly review, Avinash, over the weekend and post markets on Friday, of all the companies that reported, any picks, any favorites, any winners or losers that you spotted?
See, I think the hospital space seems to have done pretty well. If you look at numbers from Apollo Hospitals, Yatharth Hospitals, even Park MediWorld, this is a space which has done remarkably well. And I think despite, reports in the market that the government would be capping room rates, I don't think this looks possible. And, in all these companies, the management commentaries, from all the three companies have been very solid. They're expecting, room bed capacity to increase significantly over the next, say, 6 to 12 months. And most importantly, a large player like Apollo sounded off very positive that FY27 could be a very strong year as compared to last year. So this could be an interesting space in case the market corrects today. It could be a good opportunity to accumulate these stocks. My guess is, Tamanna, this could be a space where possibly one could still get an alpha, despite the fact that valuations are not cheap. They are fair to expensive.
All right. Over the weekend, of course, we had quite a treasure trove of companies to choose from when we were looking at our 3 stocks each, because the last gasp of the earnings season, the first quarter, was coming through. But you had the Nifty 50 earnings get over last week. And so therefore, this is a perfect opportunity to talk about how those numbers stack up, how many have actually beaten estimates, and did the cohort as a whole perform better than expected? Mahima joining in to tell you just that. Mahima?
Right, so Alex, overall the earnings momentum has continued. That's, the one line to conclude the entire Nifty 50 earnings. I mean, if you take a look at the report card as well, there are 20 out of 50 companies that have beaten estimates. 18 earnings out of these 50 were largely in line with what the street was expecting, and just 12 of them have kind of missed street estimates. Now, if you take a look at the top outperformers, the top 5 companies that have outperformed and have beaten estimates by quite a large. The first one was L&T, where steady core growth, despite of the Middle East disruption that we saw an order book uptick of around 14%, and the stock also reacted very well on the back of numbers. You also have Bajaj Finance. In fact, both the twins did very well, but Bajaj Finance strong Q1 was driven by good AUM growth. Margins have also sustained and have remained steady, and asset quality has also improved for this one. The third one on the list is Apollo Hospitals. Came in the last leg of earnings, of course, but strong IP volumes with 4% growth growth in the pricing led to that stock performance uptick as well. In terms of SBI, it was a strong quarter, healthy, and NII growth also came in. Margins have improved. FY27 loan growth guidance was also raised. So this was also very strong. And the last one on the list is Tech Mahindra, where 11th consecutive quarter of margin expansion happened, and the company is on track to achieve its 15% guidance by FY27. So these were the top 5 outperformers. In terms of the top 5 underperformers, the companies that did miss street estimates, you have Tata Motors topping that chart. Of course, this also came in the last leg of earnings, but lower JLR volumes and higher debt impacted the margins for this one. You had something like an HUL where volumes did come in lower versus what the street was expecting. Just that part, because of volumes being lower than what the street was expecting, the stock took a knock. BEL is the other one where product mix, higher semiconductor costs did impact margins, and on the back of that, there was pressure in terms of whether counters stock goes. Dr. Reddy's is the other one where North America business was a weak spot, and that's why the stock was under pressure. And lastly, HDFC Bank was the other one where margins moderated on low yields, ROA declined on high credit costs, and that is why it did, of course, miss street estimates as well. So these are the top 5 performers and outliers. But all in all, I think it's been a good momentum, a good quarter per se for Nifty 50 companies as a whole.
Okay, so good numbers coming in there, overall, if you have to look at Nifty 50. Avinash, if you have to pick the top 3 outliers from Nifty 50 earnings and from the report card that Mahima got for us, what would you actually say outperformed in terms of a sector? And 2, your top 3 picks coming in on the back of performance and commentary.
No, I think, Hiral, from the auto sector, Mahindra & Mahindra has delivered very strong numbers. I think 6,000 crore consolidated PAT in Q1 and a very strong management commentary. The stock has been moving up steadily, but I think clearly the next 2 to 3 quarters are going to be equally strong. So M&M looks pretty solid. I think numbers for the tractor, the UV and the electric vehicle business continue to grow rapidly. And I think clearly, as Mahima mentioned, L&T has been a very steady performer. So I would say that, the first quarter is typically a slow moving quarter. The second and the third quarter, typically you see business momentum picking up very solid, and order book has been up despite the fact that there have been lot of tensions on the Middle East side. So, these are the stocks which we have been recommending to our clients. We feel that structurally these are very strong bets for the next financial year. And hopefully, once the geopolitical situation cools off, I think you could see a lot of good accumulation coming in here. Of course, from the chemical sector, something like typically, Aegis Vopak or typically even a Navin Fluorine. I think these are companies which are now going to move up because the chemical cycle has also turned positively. So clearly, I think, one could look at these companies, but from a longer term perspective, because valuations are fair to expensive. But yes, the cycle has turned around, and I think hopefully we could see a very strong second half there.
All right. Watch out for all of those spaces. We'll talk about some of them in some more detail. We have to slip into a very quick break. On the other side, we'll get you R. Velusamy of Mahindra Electric talking about the new launches that came through over the weekend. Stay tuned for that.
A new Nepal, new possibilities. A new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored.
back. You're watching India Market Open. All right, let's talk a bit about the auto space. Ashok Leyland, one of the companies that have reported, and Goldman Sachs has maintained a neutral on it and raised the target price to 175 from 162 rupees. While the gross margin fell about 90 basis points year on year, higher cost inventory could pressure margins further in the second quarter, is what they are saying on Ashok Leyland. The demand remains strong, and the management sees high single-digit truck volume growth in FY27. The price hikes of 225 basis points in mid-heavy vehicles and 350 basis points in the light category taken in FY27 so far. So that's one of the stocks that we have on radar. I'm talking about Ashok Leyland, not Bharat Dynamics. So let's just get that in a row and then go to it. But I want to go across to Puneet if we can, because he spent the 15th August weekend working. Puneet, that's always a good thing, especially when you're covering the auto sector, which you look at so closely. But you got to cover a lot of auto launches, and I believe there was a lot of festivity around those launches as well.
Well, most certainly, I mean, 15th August as an event is something that Mahindra has taken on. They had actually a very interesting launch of a pickup truck. It's something that the Indian market hasn't seen. And a global pickup truck that's visible on your screen right now is going to be launched in April 2027. They are branding it in India called the Scorpio Lifestyler, and globally it will only be called as the Lifestyler. So the price is interesting at 19.79 lakh rupees, actually less than that is what they've said, because this goes in direct competition with the likes of the Hilux, which are priced at over 36 lakh rupees. So the interesting factor and what to watch is how does the Indian market actually accept a product like this, because you do see, and we'll show the images, that the product is open at the back, so you can have multiple storage options there. But it's something that the Indian market hasn't seen in its lifetime. Mahindra mentioned that they'll better be early rather than later on any particular new category launch. That's the reason for the electric vehicle ventures as well. On the 15th, they also had a new product launch under the BE6 brand, expanding with variants. But this was a very interesting one, and hence could be something to watch next year when they have higher capacity come through. This is part of the Scorpio N lineup, and hence a key product launch to watch for the company.
Point of the pickup, right? It's a bit of a cult play, but the SML Isuzu pickup truck was something that a lot of people spoke about with a lot of favor, and ultimately Mahindra did buy SML. SML Mahindra is what it's called right now. So how much of an inspiration, if you can call it that, is being taken from that vehicle when you talk about the pickup that you saw this weekend?
Well, most certainly, I think there's been a lot of inspiration. They're still not using that platform, mind you, because they've used the Scorpio N platform here. But there has been a lot more, something that they've looked at this market very closely. And the other factor that I also wanted to mention was the fact that this is a big export product for the company. They are looking to launch it in Australia, South Africa, as well as the UK starting next year. And hence, they will be looking at more traction in the established pickup markets. They are targeting the global market, which is somewhere between 19 lakh units, so much ahead of what we see in the Indian market on an overall basis as well. But hence could be an interesting one to watch, Alex, because you've not seen India's export push rather than Maruti for now. They've also been selling out a lot of smaller vehicles as well. So with a product like this, which has a higher price tag as well as better margins, I think that is something that Mahindra is trying to solve, and hence could be one to watch and succeed both for the company as well as for the industry as a whole.
All about diversification, isn't it? Puneet, thanks so much for that. Ultimately, it is when you're looking at tractors, you're looking at automotive, diversifying there. Within the automotive space, they're trying to push more exports so that they have diversification in markets as well. Avinash, quick thought on Mahindra and Mahindra. Would you be a buyer at these levels?
Yeah, I think, Alex, definitely, I think from a medium-term perspective, Mahindra still looks attractive. I think we feel that, this year could be another strong year for the company, and we look at a profit of around 21 to 22,000. Last year, they posted a profit of 18,000. And I think, the mood in the market, especially as far as UVs and, tractors and EVs are concerned, especially the car range which Mahindra has, put out. Definitely, volume growth is very live and kicking, and I think you could see better numbers in the coming 2 to 3 quarters.
In fact, Kush, coming to you, M&M on the charts. One, in terms of how the first quarter has been. Two, fundamentally, you're talking about new launches. And you have iSure as well in the two-wheeler space, which has come up with launches. Are you seeing any momentum today on both these counters?
So the interesting bit is that in this four-wheeler space, Mahindra & Mahindra is the only one that has enough and more momentum, right, to move ahead. Correct. Other than that, if you see, you take Hyundai, you take Maruti. I'm not even considering Tata Motors, for now. A lot of these, at least the other two, are now consolidating, mild positive bias, but still under their key averages. So they will face headwinds. So if I were to pick something, I agree with Avinash. From a medium-term perspective, this would be, this would be the only pick for me, Mahindra and Mahindra. Eicher Motor has done well, continues to do well, but now you're seeing a negative divergence. So I think there is some profit booking, around the corner, and closer to 78, 78.50 is when I would consider Eicher Motors, as a buy.
While we're speaking of the automotive space, why don't you have a look at the pair of commercial vehicle players that we generally talk about, Tata Motors CV and Ashok Leyland. That pairing, because Ashok Leyland, a lot of brokerage notes coming through after the numbers.
You know what? I don't think Ashok Leyland is going to go beyond 175, tops 180, because while that has been the high that it made on Thursday. Look at the options data. Heavy consolidation or heavy congestion at the 175 mark, premium of about 2.753 rupees. So there is going to be near-term headwinds on Ashok Leyland. So avoid for now.
Okay, avoid for now. Let's actually cut across to the conversation that Puneet had with the management of Mahindra & Mahindra about their new launches. Listen in.
You mentioned about affordable price, so let me start off with that, because a product like this, there are multiple key aspects to watch. You have to watch the customer behavior, which segment you're putting in. At less than 19.79 lakhs that you mentioned, there's been questions of how you've positioned the Thar. Is this also looking at the customer there, giving them an attractive proposition and the rationale that you want to get into a newer customer segment within the mid SUV size?
Of course, when you price it, you have to take care of all the financials, and therefore, this is coming from the scale effect. So whether you take the body-on-frame technology, which is coming from Scorpio, and the deep expertise of certain components, which is coming from our pickup, the technology elements which are coming from our BEVs, all of them, if you put it together, it is the scale that is giving us the value proposition. I think the Indian customers will love this, and they will shower us or reward us.
I do want to talk about, we showed the back, of course, where you can see the tire as well. I just do want to take you to the front of the car as well, because again, a very, very different value proposition as we've continued to look at the vehicle. Big rear range tires, big front range tires as well. And you see that it's something that the Indian market hasn't seen. When you try to get a new product and under using that Scorpio brand name, what has been the rationale to bring back the Scorpio way back, started in 2002, getting back into a new avatar?
The Scorpio is known for its rugged, its 4x4 capabilities, its adventure capabilities in SUV space. That's the resonance that we want to bring it to the pickup for our customers. It is a derivative of the body-on-frame technology, and therefore, and also its 4x4 attributes and adventurism, and also the design. If you look at it, it is resonating with the Scorpio, and therefore we brought that name. It's a brand that you create under it. Yeah.
I do want to talk to you about one other important factor, that this will come in from April of 2027. So you will have a lot more capacity, which you've been selling out a lot of cars, so capacity has been a constraint. How do you see the market shaping up at that time? Because you've seen the GST rate cut benefits actually over the last 10 to 12 months. When you come back with this product, it will be some time away. So you feel that there will be an aspirational customer who is looking for a similar product, who will be attracted, and that's what you're targeting?
That's correct. So we build the brand, we make the product aware into the market. We have a key milestones that is laid out from August to April 27. The channel creation, product ramp-ups, all of them have been well planned. And this is not a smaller decade that we are looking at. We are looking at to disturb this mid-size pickup industry lifestyler.
Okay, that's an interesting launch that we're looking at, because apart from M&M, you also had iSure, which came up with a launch over the weekend. But as it's already 9:03, let's just quickly address the pre-open rates as well right now. If you could just pull up Nifty 50 and see what's happening on that front. Apart from that, in terms, I mean, there you go, pretty flat, 24,370 is what you're tracking on that front. DB Realty, you have Latent View, Kirloskar Brothers, Ipca Labs, but again, the movement is just 2 to 5%. And on the losing end, you have Schneider Electric, which is down 5% in pre-open, Star Health, Aster DM, Jupiter Wagons, Suven Pharma. So nothing major. The range that you're picking up right now is just 2 to 5%, except Schneider, Kingfa, okay. Doesn't prop up on mine, but yeah. And Schneider also now a 10% in pre-open. So these are going to be interesting
Uflex as well is doing well.
numbers that we're tracking right now. But let's also get it. Ashish Chaturmotha from JM Financial and Rudramurthy BV coming in. Welcome to the show, gentlemen. Always a pleasure. Rudra, as the pre-open rates are indicating right now, no major moves. There is that cautiousness that does prevail. What are the levels and what would your strategy be for Nifty and Bank Nifty?
Good morning. Thanks for having me in the show. See, Nifty is stuck in a range. On the lower side, if you see, yes, support comes at around 24,300, 350 zone. And again, you have resistance at around 24,600. So it's a tight 300 point kind of a range. And markets are giving good opportunity in sectors and stocks which are outperforming. And it is more a sector-specific, stock-specific market. And even if you see Bank Nifty, similar range on Bank Nifty is at around 57,000 where you have support. And again, resistance is kicking in at 58,200, 58,500 zone. So till we break out of this range, markets are more stock-specific. And I will be into only those sectors and stocks where you have outperformance. So when it comes to Nifty, I will wait for Nifty to break beyond 24,600 and then momentum will come on the long side. Similarly, support for the Nifty is at around 24,250, 24,300. So it is more a range bound. Every dip is a buying opportunity. I will still remain very bullish on market and use every dip as a buying opportunity.
Interesting. A few interesting names from the broader markets that are moving. One of them is Uflex, and I'm wondering, okay, Ashish Chaturmotha is with us. Let me introduce him first. Ashish Chaturmotha, Managing Director and Fund Manager, Apex PMS JM Financial, joining us this morning. Ashish, morning. So we've wrapped up the earnings season now, and the last few that have come through are actually reacting right now. Uflex is one of them. Seemingly the numbers were good. The stock is up in double digits at this moment. Anything to say with regard to this one?
Hi, morning. So I don't track it very, very closely. So yes, definitely, I think because of this raw material thing, there is a lot of inventory gain to a lot of these companies which are predominantly into this oil and gas and particularly into the raw material side. So our belief is that maybe some inventory gain and this will lead to some very significant profit growth for many of such companies. But we need to see what is going to take forward these companies to show strong stability in earnings in next few quarters. And that is where our belief is. We are looking for companies where there is a strong volume growth, not just the top line growth because of the raw material inflation which has taken place. We don't track it very closely, but definitely what we like is something into the CDMO, CRDMO space, into defense space, and also if you look at some of the wires and cables play. So these are the spaces which looks very, very promising at even at current levels.
Okay. Want to quickly go to the big brokerage call of this morning, and Aditya Birla Real Estate in focus as Jefferies turns bullish on the company while initiating a buy call on the stock. Sharad Dubey joining in with more details. Sharad.
Well, there's a bullishness coming in from Jefferies. They have initiated a buy rating and the target price is at 1,880 rupees per share. Now the company is transforming from just a textiles player to a pan-India developer. Looking at the numbers, the pre-sales have actually quadrupled to almost 8,100 crore rupees in FY25 from FY23, and 78% of the FY26 sales were outside the Mumbai metropolitan region. The project pipeline stands at almost, you could say, 5,000 crore plus, and the net gearing ratio, which is of course the debt numbers to look at, that has come down as well. The central Mumbai land forms almost 60% of overall NAV when it comes to the monetizable inventory, and the management is targeting 20% plus pre-sale CAGR and 20% plus ROE over the next few years. Also, the bullishness is coming on the commercial rental income front, and that's why we have taken Aditya Birla Real Estate as our big brokerage call.
Okay, take a look at Amber as well. JP Morgan has upgraded Amber Enterprises to an overweight from a neutral, hiked the target price to 8,350 from 7,950. They're saying the overhang of margin concerns are behind post a strong Q1 and guidance upgrade, and they believe the stock should catch up with peers. It offers the highest earning CAGR over the next 2 years, helped by PCB and mobile ramp up. Ashish, I wonder if you're looking at Amber closely?
Yes, so I think this entire EMS play look very, very promising. Most of these companies are growing in the range of 30 to 40% kind of top line growth, and particularly Amber, which was predominantly AC and AC component supplier, now entering into the PCB segment and also taking exposure towards mobile manufacturing. So our belief is that the next few years we are going to see very, very strong top line growth, and now the concentration from one space has also calmed down, and the entire PCB and then the integration within PCB is going to make sure that a lot of these companies, the margin profile is going to improve, which we have observed in the case of Syrma as well as Avalon in the last few quarters. So our belief is yes, Amber could be a very good play, and it has underperformed the peers at least for the last 1 year. So our belief is stock has formed a very, very strong base.
These prices and at this valuation, is it a buy at these prices and at this valuation?
Yes. So yes, it's a buy, and our belief is Amber, Syrma and Avalon. These are the three names which we like in the entire EMS space.
Okay, Coach, very quickly on Amber before I get Rudra's picks in.
Yeah, no, I'd avoid it. Falling trend line, support being broken, 7,500 immediate resistance. Maybe past it we'll consider, not at the moment.
Okay, Rudra, your picks this morning, and then if you have a view on Amber very quickly.
See, Amber has support at around 6,900 zones, and again resistance will kick into the stock at 7,500. So it is range bound. Let it cross 7,500, then one can look at buying it. When it comes to my picks, for me, Petronet LNG looks very, very strong. It has made a clear base at around 270, 275 zone, and now it is moving up with good delivery based volume, and even open interest addition has been on the positive side. So for me, Petronet LNG is a buy. Look at targets of 295, 300 to come, and one can have a stop loss of 274 for this long call. For me, new age and platform as a sector looks very strong. Look at the outperformance from Paytm, Nykaa, and now it will be turned for even Eternal. So for me, Eternal is a buy. I'm looking at initial targets of 350 to come, and even eventually 380, 400 is possible on Eternal. With a stop loss of 305, one can look at buying Eternal. So a buy on Petronet and a buy on Eternal.
Okay. Ashish, I'm wondering if you saw the results of Puravankara. They looked good, and the stock is up about 7% after the pre-open session. It looks like it's going to have a gap up start. Wondering if there are opportunities that you spot here?
So we are not tracking very closely the real estate space, but definitely the proxies like wires and cables look very promising to ride this trend, and our pick would be Polycab, KEI and RR Cables within this space.
Very interesting. All right. So let me then go across to Kush to see if he has a view on the real estate space and specifically on Puravankara.
Profit booking has set in. I wasn't really too gung-ho about the entire sector per se, except for a couple of names that we've been speaking about, Phoenix and Oberoi. But other than that, most names are seeing some selling at higher levels. So this one too very similar. Phoenix, I would still look at a buy on decline, but right now that fall, that profit booking dip still continues. So be a little cautious. We'll see once you see the kind of reversals on the on the price action, then you consider a buy. For now, just wait and watch mode on the sector.
I have 2 or 3 stocks from the broader markets that I want your view on, and I don't know if you're going to have enough data, so I'm just going to read them out. One is Uflex. It's looking like it's going to have a double-digit start. One is Rubicon Research, which has posted very good set of numbers, and I think it's not the first quarter that this is happening. It's actually posted in the past as well. It's up 5% after the pre-open session, and Knowledge Marine is also on the back of numbers 4.4% higher.
The last one actually brings a smile on my face because we had kind of put that out, as a call on our advisory a while back. The momentum on this one is very nice, steady uptrend. Today's, up move is a breakout actually. So I would be keen on buying on declines. The accumulation on this one, by the way, is also very, very interesting. Definitely something that I'm keeping on my radar. Around 50, to 25, 75, 25, 50 thereabouts will be a very interesting buy if you get it. Right now, this is more of a hold. I wouldn't let go of this stock if I had it in my portfolio. Uflex, by the way, on a weekly setup, very exciting. Now time to book profits. Rubicon, book profits, overheated.
What about a Schneider Electric? Because on the back of earnings, you're seeing pressure coming in on that one, down nearly 11% in pre-open.
Was already seeing some pressure over the last couple of weeks. I mean, it was consolidating, but prior to that. So for me, this is not really a buy even, on these kind of dips. I would actually look at supports near 1080, 1075, see if it holds in this kind of a downturn. So right now, if you have, you're better off exiting.
Okay, better off exiting when it comes to, Schneider Electric. Now, apart from this, a couple of other names that are in focus today on the back of Prime Minister Modi's speech on Independence Day. NIT Learning, Aptech, Physics Wala. Then you have the civil defense reforms and defense manufacturing push coming in. So HAL, BEL, Solar Industries, Bharat Forge, that one should look at. Rudra, 30 seconds, anything that you like from the defense pack?
So for me, yes, HAL looks the best among the pack, and then followed by BEL. So for me, HAL and BEL will be the top picks from the defense pack.
I wonder what BDL is doing. Bharat Dynamics also posted, and that was an okay set of numbers. That's something that we'll pull up as we get into this Monday morning opening. It's a flat start that you can expect. That's at least what your pre-open is showing you. There you have the Bharat Dynamics stock in the pre-open session about 1% up, but we have to see if that really passes through as we open up this Monday for trade. Remember, the Strait of Hormuz is now in the backdrop, still blocked. And quarter one is done. What's the next big trigger is the question in the minds of the markets. Clearly, the hunt for a trigger is on. Completely flat on the Nifty. The advanced decline ratio split the skew towards the declines slightly at this point. Your bank Nifty also flat. Not much impact, honestly, so far at least on the opening tick of the RBI truncating the FCNRB window by about a month. So that's about 0.3% now, not half bad. I want to just quickly see what Nifty IT is doing before we get to the heat map. That's also, everything is down in the range of about 0.25%. That's truly the big story this morning, including the Nifty 50 right now, actually dropping in a bit as we continue. Let me look at the heat map for you, and we'll start with the loser, State Bank of India. This is the FCNRB impact, and once we are done with the heat map, we'll pull up the intraday chart of State Bank of India. JSW Steel, not doing great this morning. Tata Motors PV also seeing a bit of a slide, but the range is very narrow, more red than green, but look at the range, it's very narrow. The biggest loser just about 1% up. Let me go across to the winning side, and Hindalco about 0.65% up. Eicher Motor showing some action, as is Asian Paints. Adani enters doing okay, but no clear standout winners. I think the Nifty points contributors will give us a bigger picture, because SBI is the one that is seeing pain this morning, and of course, in terms of heavyweights dragging down the Nifty, also contributing about 11 points to that 80-point downtick. Larsen and Toubro is the other one, so is HDFC Bank and ICICI Bank. Let's pull up now the intraday of State Bank of India, and then maybe the constituents of the Bank Nifty, and there you have it. This is completely FCNRB impact that you're seeing on State Bank of India. Was at the forefront of collecting all of those deposits and coming in its position as the largest bank. And you're seeing that impact across the Bank Nifty. But our analyst this morning saying that it's not going to be a big fundamental hit eventually. Sentimentally this morning is not looking that great, Alex, especially when you don't have any big trigger or movement to enthuse the markets otherwise.
Yeah, absolutely. And we were speaking about the India VIX. I think we should pull that up as well, because 11.3 was where we left off at on Friday, and it's not too much higher than that.
Anemic is how I would describe the India VIX.
A complete lack of volatility is not a good thing for the markets. Remember that, as much as you don't like excessive volatility. But let's talk about the sectoral heat map for you. And essentially you're going to see a lot of red on the screen, and don't be surprised by that. India Defence down about up about 0.7%. Auto is up about 0.4%. Couple of those constituents will be moving the needle more than anything else. Pharma is in the green, just about 0.2% or so. And in the red, you have PSU Banking Pack on account of State Bank of India's move. This is really par for the course, but a percent lower is not much to speak of, frankly, for State Bank of India, which has gained quite considerably in the recent past. FMCG, financial services, IT, all losing between a 0.6% and about 0.5% or thereabouts. Let's jump straight into individual stocks, shall we? And a lot of strong performers over the weekend and post-market hours on Friday in the way of earnings. So PTC Industries stands out with a pretty good set of numbers. There was a certain element of inventory gains that came through in the quarter gone by, but the margins have improved. Kingfa has actually slipped into the red. Very interesting, because the numbers actually stand out as a very, very strong set of numbers. You've got their plant in Rajasthan that has come on stream in the month of February, which has added to operating leverage in the quarter gone by. Max Estate had a pretty good quarter as well. Let's pull up Uflex, which was the stock of the morning so far, up about 15% or so. Suraj Estate also slipping into the red after trading in the green in the pre-open session. So too, Quality Walls, those gains are melting at this point. Patanjali Foods, strong operational performance, but it's still trading in the red. Turtle Mint is an interesting one because it actually had losses reduce on a year-on-year basis, but the street is impatient, wants to see it get into the black and do so consistently. The stock is down as much as 8%, and Physics Wala is up as much as 2.5%. Knowledge Marine, Purvankara, both had turnaround quarters. Both of those stocks doing well. Rubicon Research cooling off from the 5% uptick that you saw in the pre-open rate or session. It's down. It's up about 3.2% or thereabouts. Strong set of numbers. Revenue uptick of 50+%. Finally, on the losing end, let's pull up Schneider Electric. Operating profit numbers are looking weak. You have Satwik Green that is also underperforming in a big way, and Zaggle Prepaid. Wow, so that's a number that we spoke about. Hiral highlighted it for you in the early set of stocks that we looked at, and the numbers don't look good. In fact, we should like to speak to the management to find out what led to this and what the path ahead looks like. And finally, beyond earnings, just a few more updates to talk about. UPL has, or its arm rather, has acquired a company for the a corn business, and we'll get into the details of that in just a bit. It allows them to cater to certain markets, and this is in the Egypt region for $110 million. You have Aditya Infotech. The company is set to consider a fundraising, and the stock is down ahead of that, down about 5%. Hiral, I'm guessing there's more to talk about from the broader markets, but I think I've covered quite a bit of it.
Yeah, quite a bit of it. And I think IPCA just continues the 8 to 9% with the kind of gains coming in there. Triveni Engineering is another one. Balrampur Chini, I think some bit of momentum with regards to sugar stocks right now. Let's pull up the other ones. Let's pull up a Sri Renuka also on the screens and see if there's something happening there. Triveni is up in trade. Let's pull up a Praj as well if there's something to do with ethanol coming in. Sri Renuka is also seeing some good amount of momentum. Praj is down though 0.7%. Wellspun Living continues the upside, and this is post earnings. Endurance Technologies as well. In fact, I think Citi has gone ahead and increased their target price in terms of Endurance Technologies, and that stock is up nearly 3%. BSC is slightly under pressure today, 4% downtick coming in on a BSC. Godrej Industries, you have Finolex Cables as well, which is doing a good run. So interesting names coming in there, but sugar counters. Kush, quick one, are you seeing any momentum which could be an intraday call today in terms of sugar? Because that's not a sector which usually sees a particular trend, right?
Very true, and the trend fizzles out just as equally fast as your sugar rush does. So I will be a little cautious. The only one that I like in this space is actually Balrampur Chini, and that also is very close to the 650, 660 kind of resistance band. So while there is momentum, I would actually take this as an opportunity to exit or book profits in some of these names rather than build on positions.
Okay, now, so apart from the sugar space, I wanted to look at endurance tech as well. Endurance tech.
Citi has a brokerage note and they've increased the target price.
Citi has an interesting note on it, and we probably have those with us. They've increased the target price, and the set of numbers also looked pretty decent. I wonder, Rudra, if endurance tech is something that you've looked at, and then of course I'll ask Ashish if he likes that space as well. But I'll start with Rudra.
Yes, definitely on charts, endurance looks good. Can move towards that resistance zone of 3050, and only after crossing 3050, further up move can be seen. So I will be a buyer in endurance technology at current market price and keep a stop loss might be at around 2950 and look at targets of around 3050, and then furthermore from there it can move towards that 3300, 3500 range. So I will buy endurance at current market price.
Okay, that's Endurance Technologies. You know, let's pull up a BSE as well. You have Jeffries, which has gone ahead and downgraded BSE to an underperform from hold. The target price has been cut to 2,940 from a 3,520. And what they are saying is that the revenue from domestic prop traders could be at risk. And this is because during the cash session, your prop trading volumes have actually come down over the last 2 weeks. And probably that's the concern that Jeffries is highlighting. Now, this revenue is 50% of the notional turnover. And the headwinds due to STT hike, RBI bank guarantee norms and CAS is what they're highlighting. In fact, BSE's option MTD in August is down 12% versus July. And they've cut their FY 27-29 EPS by 5 to 12%. And the market share gains outside the T0 to T1 days have also slowed. So 4% downtick coming in on BSE. What do you make of this in terms of the view? Because Ashish, the stock has run up quite a bit. Now, the question is, are you in a spot where now you don't see a further upside coming in there? And probably NSE will be listing soon as well.
So our view is that Hiral, in the last 3 months, the stock has underperformed, the capital markets and the broader markets significantly after seeing a very, very stellar rally. Now, our belief is there are a lot of headwinds in the form of, these challenges with the proprietary traders are facing due to the bank guarantee thing. Now there's a CAS, which has also increased a lot of volatility, which is ultimately going to see a drop in the options volume. And now, obviously, with NSE IPO coming into play, a lot of money switch will start happening. So I think the underperformance will continue. Maybe the stock might see correction towards 3,200, 3,150, but the broader point is it is going to consolidate at lower levels rather than seeing a V-shaped recovery.
I wonder if State Bank of India is something that you would look at positively right now, Kosh. And I want to go back to SBI and see how it's settling, if at all. No, just still about 1% down. Not a big knock, frankly, but that inherent weakness in. And the fact is that it has had a stellar set of numbers this quarter.
Yeah, so not too worried about the kind of downturn that we're seeing today, even on Friday, the profit booking that we saw. My only concern is that banks aren't building enough momentum. You're getting those fits and starts, and you're getting those moves, every now and then, but they're being sold into. Now, while I remain constructive on Bank Nifty, but that was from the perspective that HDFC Bank is at long-term support zones, and perhaps see an uptick from here because of the kind of positive strength that is starting to show on the technicals. ICICI Bank also did well on Friday, right? So there are these fits and starts. They are in a consolidative mode. If you want to, buy and hold for, let's say, 1 to maybe 3 months or a little longer, I think then you're fine. I wouldn't really play them for an immediate momentum trade. But yeah, SBI not on a bad footing. On the downside, about 1,025 is where you keep your positional stop loss if you're buying into it right now.
Okay. Schneider Electric Infrastructure, the numbers not the strongest at this moment. And partly on account of disruptions, because the order book actually looks pretty good. Ashish, what's the view on the fundamentals? The stock is taking a battering today. So in your opinion, based on the order book strength, is this an opportunity to get into a stock that some might have considered a little expensive before?
So you rightly mentioned, I think this quarter, a lot of negative operating leverage kicked in where we saw the margins saw correction and the top line also was compromised. But what is interesting is the order book and I think the execution capability of a company. So our belief is there might be some correction and the move towards 1,200, 1,150 could not be ruled out. But at lower levels, there will be a lot of buying interest which will be seen. So overall, we have a very positive view on the entire power equipment transmission transmission as a segment, and Schneider Electric at around 1150 zone looks quite promising from a medium to long term perspective.
Okay, all right. Let's also talk about Endurance Tech. And this is on the back of its quarterly numbers that it's reacting. Pull up the chart and see where it's currently trading. It was, in fact, in the green. It continues to trade at very close to the high point of the day, up about 3% or so. Puneet joining in to give you the key details to focus on with regard to the numbers. Puneet?
Well, thank you for that. It's another auto ancillary company reporting blowout earnings, and even despite expensive valuations, you've seen brokerages come out and upgrade target prices, led by the strong growth potential that's visible. Now for Endurance as well, now Citi as well as Goldman both have actually come out and raised the target prices. Citi has actually raised the target price to 3,350 versus almost 3,000 rupees earlier, where they feel that the new strong order wins that the company is seeing across two-wheelers, four-wheelers and EVs, those will lead the growth momentum over the next 6 to 12 months. You've seen Endurance actually largely being flat in terms of stock price performance over the last 1 year because earnings have been flatter, but now they feel that the growth story for India is strong, and now the two new segments, which is the non-India part as well as the four-wheeler part, smaller share for Endurance right now, will lead the growth according to them. They're also seeing that, you could see some local sourcing coming in from the Chinese players because they're actually setting up production in Europe. And that is another growth lever according to Citi. Goldman also has a similar view where they feel that the aluminum cost inflation will be a pass-through, and hence the margin impact is something that will be passed on as well. But that's a quick take on Endurance Tech. Growth levers really strong for the company now.
Okay. Endurance Tech in focus. Thank you for that, Puneet. We're just going to take a look at another interesting company that we have in focus, which is Sai Life Sciences. And, they've had a good set of numbers. Just want to pull up that stock, if we can, down about 1% today. I have already seen their reaction coming in on their results as well. And what is exciting about what they're doing is their foray into the formulations business. I'm wondering, Ashish, if you've been looking at Sai Life or any of the pharma pack closely?
Yes, so we track Sai Life closely, and our belief is this entire CRO, CRDMO space is looking quite promising, and within that, Sai Life has posted very strong set of numbers, working on a lot of molecules, and our belief is now this entry into formulation is also going to be one very strong catalyst for the growth. So our belief is this entire CDMO space is going to see a top line growth of more than 20%, and the EBITDA and PAT is going to see much faster growth as compared to the top line. They are doing a lot of tie-up with the global innovators. So all put together, Sai Life is a very structural story from a medium to long-term perspective.
Ashish, we're just about to speak to the management. What's the one question that you would want an answer of? Ashish?
Yeah, okay. So, okay.
No, that was for you. So, okay, let me come with it again. We're just about to speak to the management. What's the one question for which you want an answer?
So I think we have been interacting with the management on con calls, and our belief is they're focusing a lot of new molecules. So we would just like to get a timeline of a lot of these molecules which they've been working upon, because in this business there's a lot of lumpiness, and we want to just get a clarity more about what kind of sustainability of earnings can be seen at least in the foreseeable 2-year time frame.
All right, Ashish, I'm going to have to thank you. Rudra, thank you so much for joining in today. And of course, Kush, thank you for coming in today. Let me go across to Varsha before we get in at the management of Sai Life Sciences. Varsha, what's a snapshot of their earnings this quarter?
I would actually be more interested into the transformation that Sai Life Sciences has been doing. One is, of course, they are moving beyond small molecule CRDMO, building capabilities from discovery to commercial manufacturing. And one of the highlights is their foray into formulation business. And one of the key questions that we should ask to management, they're entering formulation business to offer integrated API and drug product solution. The facility is expected to be operationally ready in next 6 months, and which will offer both custom APIs and drug products under one platform, and hence they've also given a long-term guidance which they've maintained, though revenue CAGR guidance at around 15 to 20%, EBITDA margin guidance at around 28 to 30% for long term, and H2 FY27 is expected to be stronger than H1, and growth is expected as new capacities become operational in H2.
Siva Chittor, the whole-time director and CFO of Sai Life Sciences, with us. Mr. Chittor, thank you so much for joining in this morning and welcome to NDTV Profit. I'm going to start with your review of your quarter. It's certainly been strong, but you've gone on to say that you expect the second half to be stronger. What is going to keep driving growth and sustainability of margins?
Good morning, and thanks for having us in the show. I think from a business perspective, I think there is a significant tailwind with respect to India as a destination for the CRDMO business. Second, I think from a Sai perspective specifically, I think the relationships that we have built with large pharma, which is kind of helping us mine more with an existing set of customers, that's kind of as a differentiator from a Sai perspective. So these are two major factors that will actually help us grow. And I think the third factor that kind of is another area of growth for us is kind of being able to do multiple things for multiple large pharma. We probably the only CRDMO in India that has end-to-end capabilities, starting from discovery until commercial manufacturing. So the ability to mine a large pharma, starting from discovery and going up to commercial manufacturing, I think for us is a larger play. That's really what we're looking to do. This does two things for us. One, the ability to get more from an existing customer. Second, it also helps us, de-risk, not be a one molecule play or one particular product play with a large pharma, but do different things for the same large pharma. So you're able to build a larger revenue portfolio without actually being, focused on one product that could kind of create revenue concentrations that you typically want to avoid. That's the thought process how we are planning to grow.
Siva, so very good morning, Alex here. So therefore, let me ask what my colleague was curious about, and when she highlighted the fact that you are undergoing a bit of a transformation, you have decided to enter formulations. And so therefore, can you describe what the strategy behind this is and how much of a contribution will you eventually have from your aspirations to the growth and revenue?
Sure. Alex, morning. I think the formulation business, Alex, this is going to be primarily clinical phase formulations. I don't think so we will enter commercial phase at this point in time, but the objective is to kind of see, if you look at where large pharma is, there's a lot of pressure in terms of getting medicines, new drugs to the market, right? The timelines for drug development and discovery have been shrinking over a period. And for pharma to get faster, you don't want to kind of be able to do a tech transfer from an API site to a formulation site in phase 1 or probably early phase 2. Our focus for the near term in terms of formulation business is to remain in the early phase formulation where speed becomes the most critical factor. So if you're already doing an API for a customer, continue to run the formulation so that they can focus on managing one single customer. And we've seen a lot of interest from our customers who were saying that they would like a facility that can help them fast track between API development and a formulation. And our focus for the near term will only remain clinical formulation, it will not be commercial formulations.
Siva, then from that perspective, I'm trying to understand what it achieves and what it costs. So is there an additional cost for you to build this out too? Will it deepen your relationships with your existing customers and therefore add more wallet share? That's the big question.
I think it will add more wallet share. It will also deepen relationships. I think that's the biggest factor. The incremental investment on this formulation development is actually very small because this is not a large scale. You're talking about a phase 1, early phase 2, where the volumes that you're trying to build is much smaller. But I think what this does for a customer who's saying, I want to go to an integrated site. So for a customer who probably otherwise would not have picked a Sai, or who otherwise would not have picked Sai for a specific project that is, let's say, critical in terms of time, we are now able to get that customer completely into SAI or get a particular project which may not have otherwise come to SAI, just come back to us. That's the whole objective. It's about how, everything is about how do you mine your existing customers. And that's really the biggest focus.
Mr. Chitor, good morning. Hiral here. How are you looking at the peptide opportunity? Because you spoke about formulations. Now, peptide is something where your investments are pretty high. So, how large will this business actually become in the next 5 to 7 years? And two, when do you really see it break even, on the back of the investments that you're making? When do you see returns coming in?
So, Herald, morning. The way we are looking at the peptide opportunity, I think most of what we are looking at is peptide beyond the GLP, because there's a lot of work around the macrocyclic peptides. There are things that we are doing outside of just the GLP domain itself. Peptide as an area over the last couple of years has seen a lot of attraction in terms of different therapeutic areas. The science is kind of progressing year on year, month on month as we speak, right? And if our understanding based on data that we hear from our customers is probably one of the largest peptide discovery team in India today. And we have significant programs that we run for some of our large pharma customers in terms of their discovery. The natural process from there for us is to actually build our development capability. And we are at this time, we are building a few development peptide labs at our R&D center in Hyderabad. We've already commenced operation on one, but that's kind of dedicated to one large pharma customer has picked up that entire capability along with the team. We are getting another set of labs coming over at Q3, and we'll have the pilot scale before the end of this financial year. What we've announced now, just seeing the traction that we are seeing and discussions with customers, is to actually go ahead and create clinical and commercial scale manufacturing at our second manufacturing site in Telangana. We believe that this will be a meaningful number as we start progressing over the next few years. I haven't put a number here today, but I think these are things that will start adding back to your overall pipeline.
So, Mr. Chitor, my question then to you is multiple businesses which are at the start phase, right? If you have to look at FY 28 and 29, from there on, is there a possibility of a hockey stick kind of growth that could be coming in because multiple businesses will start firing? And if so, what are you baking in?
At this point in time, we even put out a different guidance, but obviously, we are bullish about what we are seeing. And, when we come closer to it, maybe we will give a different differential guideline. But the thought process at this time is we are seeing good traction with our customers. The tailwinds with respect to outsourcing to India is kind of growing. And we have customer relationships and we have customer conversations that are helping us decide on different modalities, different pieces. And that's really what we want to capitalize on. Will that kind of change immediately to the next, revising of our guidance? We will come back to you at a later stage.
Okay. Mr. Chitor, just trying to understand about your basket of molecules that you have. And we actually asked one of our analysts who tracks your company very closely what he would want to know. And that is one question which came in. The timeline of how these molecules will really start materializing commercially. What is the outlook for the next couple of years?
So we've given, we have around 33 commercial molecules and we have close to 15 phase 3 molecules. Now, we've given an update in our earnings call. We have one molecule that has gone commercial this year. We probably have a couple of more that have the PDUFA date with the US regulators before the end of this financial year, and one more closer to the second quarter of the next year. As you will appreciate, these are material non-public information even from these companies. So we will only get as much information as is available in their website, and we don't get anything very specific. But these are molecules that we are excited about. There are, one that it kind of gets, it kind of solves some of the unmet medical needs that today is probably a gap within our overall healthcare system. And we are excited that we're going to be part of some of these.
Busters lurking there, which you're betting on, which can materialize the next couple of years?
There are a couple, but we are we're not at liberty to kind of give out these numbers because they're still estimates and projections from internal customer data. So we will not be able to provide this, but there are broadly molecules that are exciting within that cohort.
Okay, thank you so much for that, Mr. Chittor. Thank you for coming in, speaking with us, and answering all of our questions this morning. That's the management of Sai Life Sciences, and that's stock turning into the green while we were having that conversation as well. Let's talk about Prestige Estates, set to get a 3,000 crore rupee boost for its hospitality business, with Canada's CPPIB taking up a 28% stake in Prestige Hospitality Ventures. We're going to be chatting with Irfan Razak, something we always look forward to. But before we do that, Varsha setting up the conversation. Varsha.
Well, overall, the concept here is the Prestige Estates has entered into an agreement with CPP Investment Board Private Holdings. And then the CPP will actually invest 3,000 crore in Prestige Hospitality, and this deal will be executed in multiple tranches. Now, about the parties involved, so one is Prestige Hospitality Venture, which is a wholly owned subsidiary of Prestige Estates, houses Prestige's hospitality business. Current ownership is 100% of Prestige Estates. Now, who is CPPIB? Of course, this is a global investment management organization which manages Canada's pension plan fund and also represents 22 million plus contributors and beneficiaries. Now, why this deal is important? One is, of course, CPPIB brings deep institutional investment experience, and capital can support future growth when it comes to Prestige's hospitality platform, and of course has a potential to create more independent valued hospitality business.
All right. Thanks so much, Varsha, for laying that out for us. In fact, it presents a perfect platform for us to speak to Irfan Razak, Chairman and Managing Director of the Prestige Group. Mr. Razak, always a pleasure speaking with you, and good morning to you. This is Alex. Can you give us a sense of how you see this hospitality business going through? And it's a major investor in the form of the Canada Pension Fund coming through. And they usually invest for decades and not quarters and years, right? So give us a sense of the end goal here.
Good morning. Yes, we are also pretty excited. This is just the beginning of the journey. We've just signed the term sheet, and then we have applied for the CCI approval, which should come in its own routine. And after that, we get into signing the confirmative agreements, definitive agreements, and then the transaction will get culminated and fructified. Now, the whole idea is to get in some additional capital into our hospitality business because it is a capital guzzler, number one. Number two, today hospitality in the country is doing extremely well. Especially Prestige has got some amazing assets, both trading and under construction. And that is the interest shown by many investors. Finally, we took a call and chose CPPIB because I believe, like you said, it's patient capital, long-term investors. And I think exit route is always there for any investors, and that will be through an IPO at some point of time once the assets get matured. And that may happen a few years later. It won't happen today. So that's the whole idea. And currently, Prestige has about 1,450 keys, which are trading in various assets. And the company is building rapidly many keys. Eventually, we should be having, with the pipeline that we have under construction, under planning, almost about 5,500 keys. So that is the excitement, and that's the reason we believe that this additional capital will give us the bigger bandwidth.
Mr. Razak, I think that was one of the questions that everyone had as to why halt the IPO and get in a private investor. But this clearly tells you that the valuation that you're getting from a private investor and the appetite that they are sitting on is much larger, which then creates that value at the time of the IPO, which you mentioned is much later. But overall, if you have to look at the deal, it includes both primary and secondary investments, right? How much of the fresh capital that will actually flow into the hospitality business versus shareholder monetization?
See, like rightly said, it's a combination. So I think about 1,000 crores is what will be secondary in the sense that will be a takeout. But the rest of it will come into the company to clear off debts. And that just gives us a bandwidth to do more. So it's just because we need to get stronger, and this infusion, fresh infusion of capital, will definitely help us to get there.
You know, Mr. Razak, very good morning. Tamanna here. You started your answer by saying that we finally accepted the Canadians, the CPPI, as you know, a partner. Were there many contenders?
As usual, there will be because there will be courtship that goes on, and ultimately you have to choose which is a better partner for the long term, and who has got the patient capital, and of course the bottom line, it's who's trying to give you the best sort of valuation and deal. And I believe that this company that we are dealing with, we have done business with them earlier, and we have that comfort level, and it's vice versa. And we believe that this will be the route to go through.
No, so it was only interesting from the perspective that clearly a lot of value is being seen in your hospitality business.
Yes,
and, yeah, which is why I wanted to highlight that. What do you hope to achieve with this partnership, and how large do you want to grow the hospitality business? Because you're already well established in real estate.
See, now the hospitality is a separate segment of our business. And ultimately, it will be a separately listed company at some time of the other. Now, as I said, we already have 1,450 keys which are already trading. And the idea is we are, without any new acquisitions, we will be eventually having about 5,000 plus keys. And that will help us, get a better, larger revenues. And what we are witnessing currently is that hospitality is on a high, it's doing well. And most important is the product, is the location and product that does well. And that is the reason why there was an interest in our portfolio, because we have a very strong portfolio.
You mentioned that eventually you will list Prestige Hospitality. Do you have a timeline in mind? You said the aim is to get to 5,000 keys. Is that the point at which you look at listing, or is it a little earlier?
I think we have to play it by ear, depending on the market, depending how the appetite. And mostly, I believe the right way should be, since we've got now fresh capital, the right way would be to reach to the targeted number that we have and get there. And of course, I'm not saying that number will be stagnant. There will be opportunities that will keep coming all the time. And now we'll have, once this deal gets culminated, we'll also have somebody from the investor sitting on our board. And those decisions will be taken collectively.
Mr. Razak, my question is, currently, if you have to look at hotels, what is the contribution to the overall business? Because I believe it's a fraction of the overall business that Prestige Group does today. But that business, actually, say, attracting market capital is something which tells you that probably the momentum seems to be stronger. Do you think hotels then could become a bigger value unlocking story for a Prestige Group over the next decade? What are you targeting?
Of course, that is the game plan, because see, now Prestige Estates is only, sometimes please mistake it only for a residential company. Prestige Estates is a sum of parts. We've got residential, which we are pretty large in. I think maybe one of the first top 3 or 4 developers in the country that's doing volumes. And then the second part is we are in office pretty strong, but nobody understood that as of today. But I believe by the end of financial year 2030, we will be having a top line exit rental of around 2,800 crores. And similarly, we also have retail malls, and even those we will be much higher as we go along. And that again will be around 2,000 crores when all the assets that we are building right now get ready. And then, of course, apart from this, it's hospitality. And then we also have the property management business. So it's a full menu that is there. And if people understand that, this company is pretty valuable. And if we list the office business, list the retail business as well as the hospitality business, then it becomes four separate companies that will be doing business, and then maybe they'll have the same value in their own right.
Okay, so, separate listings for all the businesses, Mr. Razak, that's an interesting one coming in there, in fact, on NDTV Profit, because initially everyone was thinking of real estate and hospitality, but now you've opened the doors for multiple businesses that could be listed as well. But, okay, before, you got in the Canadian pension fund, that CBPIB as well, I'm sure you would have had a milestone in your mind that, okay, at this level, when I achieve this milestone, that's when I'm going to look at listing the separate subsidies. How are you looking at it right now? I mean, what would that number look like?
No, numbers looking good. Actually, now, as I said, 2029, 2030 is the time when all the assets that we are building in all the asset classes I talked to you about, that's office, retail, as well as hospitality, will fructify, will get ready. And that's the time I believe that we can do some serious unlocking of capital.
Just want to ask you a bit about the pipeline for the second half, Mr. Razak, before we let you go. A big bulk of it, the second half promises to be very eventful from your perspective. Can you just give us an overview there?
Yes, this year on the residential side, we had guided around 36,000 crores of top line, maybe more. But we have achieved in the first quarter about 6,500 crores. So there's quite a distance to go. Now, that distance is all about planning. It's all about how the teams are working. And then most importantly, getting all the approvals in time and the RERA number and then launching the projects. So it's a race every day, every week. So that effort keeps going on. And I believe that that's where we have working hard towards it. And I think we'll be on course. Now, it's very, very difficult to break it up into quarters. You have 2-3 big launch in a particular quarter, in a particular city, numbers pump up. And there will be some quiet time when there's no new launch and there's no new inventory. I think, but that's the thing about the real estate business in this country across the board.
But if I may, are your approvals in place, or is there still some friction with approvals going on?
No, there's never any friction. It's all smooth across the country. There are processes, there are systems. Only thing is the speed at which that we expect it to happen never happens. So we can't be, I mean, from our side, we'll always be saying that it's not happening at the speed at which we want things to happen. But if you really look at it, I think we should be thankful and grateful that whatever we are putting in for approval does get approved. But then the struggle goes on. There's nothing that without struggle, nothing happens. So I believe that we have accepted that, and our job is to see that we pump to see all these approvals come as quickly as possible. Once the approvals are there, we time ourselves when to launch. There's no such project where we've got the approval and the RERA number, which we've held back for launch. We go quickly to the market and launch it because there's appetite in the markets and we don't want to miss it.
Your pre-sales in Q1 did see a drop, and part of it might be because of a high base in Q1 of FY26. Does that guide you? Will that cause you to tweak your guidance, or do your guidances remain on track?
No. See, the FY25 first quarter, we had a very big launch in NCR, that is a prestige city, Indrapuram. So that gave us some huge numbers. So similarly, in first quarter of FY26, we did do a launch even in Hyderabad, which was very well received, and we got some good numbers. But the rest of the cities that we are working in, we didn't have inventory. So as and when we get in inventory, the launches will spike. And I think the only way I can say today is the guidance that we have given at the beginning of the year. It's very achievable and very doable. It's only a matter of which month, which quarter we get these launches. But the teams are very confident and they're really working hard on this.
Okay, thank you so much, Irfan Razak. Always a pleasure to speak with you, as always, and get a sense of what's happening with Prestige. Today, we've got a clear idea that many more IPOs and listings could come out of the Prestige Group. in the months and years to come. Let's play out an interesting conversation that my colleague Mahima had with Chalet Hotels. Chalet Hotels is looking to scale up Athiva as its first premium brand. She has gone to this property on the outskirts of Mumbai and had an interesting conversation on what the plans are.
India's hospitality landscape is changing. Travelers are paying more, hotel supply chain is actually catching up, and premiumization is where the bigger opportunity is. Now, where does Chalet lie in all of this? Let's try to understand. So today I'm here at the Athiva Resort of Chalet Hotels, and it's a very, very beautiful property that we're looking at. And I'm joined by Shwetang Singh, who's the MD and CEO of Chalet Hotels, who is, by the way, busy watching this beautiful view that we have here. Shwetang, thank you so much for taking out the time. Pleasure speaking to you. Let's also walk through your property and try to explore the different aspects of it and try to understand more about Athiva as well as Chalet Hotels.
Absolutely.
Shwetang, so far we've seen very strong operational metrics for Chalet as a whole, right? Just wanted more sense in terms of how RevPAR growth is going to look like for the next 3 to 5 years, considering that you have so much in pipeline as well.
Look, Mahima, the fundamentals of the industry are in great shape. Whether you look at the demand-supply arbitrage, especially in the space that we operate in, the supply is around 5.5%, and the demand is around 9.5%. So, there is a clear demand-supply arbitrage that will continue. The good thing about the industry is that it takes a while for anybody to build a hotel. So, competition can't sneak up on you.
Correct.
You can see it coming a mile away.
Yeah.
So, if you look at that, and then you put the other macros of the country into perspective, whether it's the earning capability of individuals, whether it's the earning capability of companies, whether it's the evergreen social segment. So, everything is very strong. There may be a few blips here and there like we are facing right now with the current Middle East situation. But in general, the trend is upwards. And what that means is that we should have a strong double-digit RevPAR growth for the next 3 to 4 years at least.
Okay.
Until maybe another cycle is around the corner, who knows.
Perfect. And then do you think that the next leg of growth is going to be led by occupancy, or it is still going to be led by average room rate increase? Where do you see that mix be like?
Look, especially for Chalet, if you see most of our properties, the ones that are not stable is a different kettle of fish. But the ones that are stable, especially the ones in Mumbai, it becomes very difficult to grow the occupancy beyond a certain number. And in our mind, that number is about early to mid 80s.
Okay.
Once you've hit that number, then occupancy growth becomes difficult because there is only so much you can sell. The inventory is perishable, unlike in any other industry.
Correct.
So what happens in this case is, therefore, your growth can only come through RevPAR. And that RevPAR growth is then driven by average rate growth. And that has stayed strong for a while, and it will continue to stay strong. But the beauty of our business, especially at Chalet, what we do is that we are very deep into what we call asset sweating. So we are constantly on the lookout for every square foot of space that's available. And how can we convert what is essentially a non-revenue generating area into a revenue generating area? And that additional capex when you spend comes at a very high rate of return. Therefore, the blended rate of return tends to go up. And that's what we do very well at Chalet.
Very interesting, because you talked about capex. Can you give us, a number, if any, you have internally planned for capex for the next, let's say, 3 to 5 years, and your focus still is going to remain in terms of being asset heavy rather than being asset light, because the industry right now is shifting towards asset light. So more perspective on that.
No, so we are continuing to be asset heavy for a while until we decide to go asset light at some point in time, which will actually mean that we are asset right, is what we call in the industry.
Yeah.
So having said that, if for our near term future, next 3 to 5 years, we will stay continuously asset heavy. And what that means is that we are going to invest in newer properties as well as our existing properties. And if we look at our 5-year business plan, we are looking at anywhere around 1,000 to 1,500 crores of capex every year.
Okay.
Which means over the next 5 years we should be at about 7,500 to 8,000 crores of capex.
Interesting. And that should be funded by internal accruals, or will you be looking at some equity, debt raise, etc.?
So equity raise is certainly not on the table at this point.
Okay.
But our internal accruals are very strong. If you look at our commercial business currently, that itself is taking care of most of the burden on the debt side.
Perfect.
And
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders.
All right, welcome back. You're watching India Markets Open. Let's talk a bit about Lumax Auto. Lumax Auto Technologies has delivered a good set of Q1 numbers with its top line and margin expanding year on year. We're going to be talking with Anmol Jain, the MD of Lumax Auto Technologies. But Puneet joining in first with a quick run through of what those numbers look like. Puneet.
Well, thank you for that. It was a strong quarter for the company yet again, and puts the perspective of growth on the back of the anvil on FY27 numbers too. Now, last year the company reported a 33% growth in terms of revenue. So the first question will be that since quarter one has seen, is that something that we can expect going forward as well? The other factor to watch will be margins, that despite pressure in this particular quarter, the company has managed to maintain that 13 to 14% range, and if that is sustainable going forward for the company. And the other final factor that, Mahindra and Mahindra is a big client for them. Almost 30% of the revenues come from them, and we've seen multiple launches over the weekend as well, with the export push now firmly on track for the company starting next year. So those will be some of the key questions as to how they are looking at key clients, both Mahindra and Bajaj, in terms of revenue growth. Both are export heavy now, so they want to look at that growth, and if that will be visible in Lumax Auto numbers, will be something to watch.
Thanks so much, Puneet, for that. Why don't we ask Anmol Jain what he thinks of that? Anmol, thanks so much for taking the time, and good morning to you. Congratulations on another good set of numbers. The question is, what is the expectation for the rest of FY27, particularly because we're talking about the high base of last year? Last year itself, you achieved 33%. So what's the outlook in the rest of the year?
Well, good morning, and thank you for having me on your show. I think, yes, the year was a great start to the year. Quarter one, as an industry, I think overall we did exceedingly well, whether it's a passenger car or two-wheelers, they grew at 17 and 23% respectively. The company continues to have very strong prospects for FY27. Q1, we did see a 33% growth. I think Q2, the demand pretty much seems buoyant and intact in a similar vicinity. But please be mindful that as we enter H2, for the industry at large, the base will start increasing. Last year, H2 post GST rationalization, there was a huge upsurge, and that's the reason the growth numbers in terms of year on year will start to reduce as we get into H2 for the industry. Having said that, I think for Lumax Auto Technologies, we continue to be absolutely on track with our long-term target of a 20% CAGR year on year. Last year, we grew at 34%. This year and in FY28 combined, we do expect to continue to grow at 20%, although the pace will keep on increasing.
Okay. Anmol, hi. Very good morning to you. Just want to understand what your big drivers have been. Clearly, Advanced Plastics division has been doing very well. Is that where the focus is going to go? What is the outlook for this space going ahead?
So I think our growth drivers have been primarily five. I think number one, we're talking about getting into new technology. Mechatronics as our business vertical is one of the fastest growing for us. Over the next 3 to 5 years, we expect mechatronics by itself to perhaps get to a more top line threshold of about 1,000 crores or so. So it will have an accelerated growth in terms of new technology products. Two, we are growing with a lot of localization of these new technologies. Most OEMs are still dependent on imports for some of these products and technologies. And hence, we will be the first ones in the country to localize these technologies, thereby giving a win-win advantage to both OEMs as well as tier ones like us. Number three, the whole premiumization keeps on pushing the content per vehicle. And number four, the wallet share expansion. A lot of the product lines which we are into, we're seeing that there is a significant wallet share we've been able to garner over the last 12 to 18 months. And we continue to drive that. So these four are primarily the growth drivers for the company. Apart from that, of course, inorganic growth story and aftermarket continue to remain intact. But again, those would be a little bit more longer term growth drivers strategically.
I just want to ask you a bit about mechatronics and the localization of technology that you talked about, Anmol, because it sounds very exciting. Can you give us an illustration of any of these drivers? What is the kind of output that you're expecting and what the targets are there?
So let's say within mechatronics, there are a lot of sensors which we will be the first to localize them. There will also be a lot of, let's say, new technology products like body control modules, which the company is pouring into. Most of these will get into SOP in FY27, FY28. The company is sitting on a very strong order book of about 1,600 crores. Almost 60% of that order book actually gets into the revenue stream next financial year in FY28. And hence, we're looking at FY28 to be an even better year in terms of our growth. So again, body control modules, sensors are some of the examples under the mechatronics. Also, the alternate fuels division of ours, the whole CNG play where we are. We will be the first ones in the country to localize the ferrulous tubes and fittings. And that's again something which most of the OEMs are currently importing 100% of their needs. That's starting from literally ground zero. And there's a huge potential for us as far as that product goes over the next 3 to 5 years.
Anmol, good morning. Hirala, you spoke about premiumization. How are you expecting electrification also to be a bigger opportunity? So EV and alternate fuel over the next 3 to 5 years, what will be that kind of contribution that you will see catering to these aspects? And then I'll take my second one in terms of overall FY27. But how are you looking at EV and alternate fuel opportunity?
I think alternate fuels and EV continues to penetrate extremely rapidly across passenger cars as well as two-wheelers. I think from a revenue point of view, EV specifically is about close to 10% of our consolidated revenues today. But again, we've got some strong order book with respect to certain EV models, both in pass cars as well as two-wheelers. Again, we are quite hopeful that at least as a part of our midterm strategy, we always say 20% of our total revenue should come from clean mobility and future mobility, which is where the whole electrification as well as alternate fuel segments lie for us. I think we're pretty much on track with that. But again, electronification in a lot of the products which the company does are actually fuel agnostic. and hence whether it goes on an ICE vehicle or an electric vehicle, for us it's pretty much part of the same thing. The cockpits and the interiors, for example, we pan across both of them, but we are pretty bullish on the alternate fuel segments specifically.
Okay, so 10% to 20%, and what's going to be the timeline to get there, number one? And two, talking about margins as well, they're at multi-year highs right now. Profits are growing faster than revenues as well. So is this just the beginning of a cycle where you will see a higher margin Lumax coming in picture? Or do you think FY27 is kind of a peak?
Well, I think coming to 10 to 20%, we do expect over the next 5 years, we should be able to get to a 20% of the revenues from clean mobility. Let's say 3 to 5 years horizon. Coming to margins, I think we've set a very clear goalpost that we would like to keep enhancing our margins close to 20% EBITDA. That's what the guidance is, over the next 5 to 7 years. While it's not a hard target to achieve a 20%, I think it's more of an aspiration to get closer to a 20%. But I definitely feel that we've not plateaued out yet. At a 15% EBITDA margin, which the company clocked for Q1, I think there is still a lot of upside with respect to expansion of margins. But I would be happy to get to maybe a 16 to 17%, delivering a 20% CAGR year on year. That would be a good place for Lumax Auto Technologies to be.
Anmol, very, very fascinating. Just a couple of questions on the client exposure that you have. And you have Mahindra and Mahindra, you have a large OEM in the way of Bajaj Auto. I'm just wondering, these large entities, how much do they contribute to your revenue if you talk about your top 3 or 5 clients?
Well, I think Mahindra is our largest customer with, I think someone mentioned earlier, about 30% of the consolidated pie. Bajaj is the number 2 with almost close to 14 to 15% of the pie. So I think 45% comes from these two, and then rest, pretty much everyone is in the vicinity of about 6 to 8 to 9% each. But again, as a part of our order book, I think we have a strong order book from the likes of Maruti Suzuki as well. So again, we're well entrenched with respect to passenger cars as well as two-wheelers in terms of a good mix, going forward. So I do expect that Mahindra will continue to be probably the number 1 customer, but it will be a similar vicinity of about between 20-25% or so.
You mentioned, Anmol, a couple of points on the localization front, right? And you were saying that, for example, the body control modules, you were talking about the pipe fittings for CNG. These are things that are going to pan out in the next few quarters, I would assume. Do you have clearer timelines? Because you said FY28 will pan out to be significantly better. So do you have visibility on when these products will come through and what the revenue contribution will be?
Yes, so I think most of these products will get into SOP in the current fiscal FY27. And again, in line with the growth prospects, the company is going to be putting up 7 greenfield facilities in FY27 itself. So again, to cater to the growth, cater to these product lines. But again, the peak revenue from some of these product lines will only kick in FY28, getting the full year advantage. So again, it's difficult to ascertain how much exact revenue we're going to get from these product lines, but I would say close to 1/3 of our order book would be coming from these new technology products for FY28.
1/3 of your order book, and that's executable within FY28 itself, Anmol?
So 60% of the order book will get into revenue stream in FY28, and about 20% this year and about 20% in FY28.
These new products, do you have to create additional capacity for manufacturing, or does it exist already? And will it take investment on your part?
As I mentioned, there are 7 greenfield sites which the company will be investing into in the current fiscal itself. Again, the whole capex outlay would be about close to 300 crores for FY27. And again, some of them will be brownfield expansion, some of them will be absolutely new capacity expansion for the first time.
And finally, FY28, therefore, when you're talking about a significant chunk of new orders coming through in product lines that you're starting out with, Anmol, your trajectory from FY22 to 26 has been nothing short of breathtaking, and you've been growing at 30+%. So is there a possibility of you outdoing that trajectory in FY28 and beyond?
Well, I think the guidance, we continue to maintain a 20% CAGR, which is much higher than what the industry is forecasted to grow.
But the definition, Anmol, of under-promise and over-deliver.
So, I mean, we always like to do that, but again, 20% CAGR on an increasing base is something we would be happy with in the back of expanding margins. But again, this is organic.
Yeah.
Inorganic has been one key factor for our last 5-year growth story as well, and we continue to look at further prospects of inorganic opportunities as we move forward.
Okay, absolute pleasure speaking with you, Anmol, and look forward to the next chat. Wish you all the best for FY27.
Thank you. Thank you.
Very interesting, and the stock is up about 1%, but you know what? Take a look at the 3-year chart maybe for Lumax Auto. It's been a story of success because well, the 5-year chart, it's make sure that you count the numbers in that. 1,271, right? Yeah, it's at like 1,271%. Talk about a compounding story, and it's par for the course, because if you look at FY22 to 26 right now, you've had an average growth rate of well over 30% for top line.
Question is that are valuations looking at a further growth or at that state? Because the stock has not moved that much recently, and of course in the 5-year chart it looks beautiful.
Yeah.
But for anyone looking at it right now, needs to look at the valuations.
Yeah, and because the sense on the street is that have your margins peaked? Will FY27 be a year that from here on you will see some bit of normalization over the next couple of years before again you see that kind of hockey stick growth coming in, right? So that's going to be the concerning area, and I think that's what the management is not really ready to commit to, and they are giving you something which is reasonable right now.
Yeah, but that update on a third of his order book in FY28 coming through from products that are being localized as we speak, and those coming through in FY27.
My question is, will the client base diversify? Along with that, because you have concentration of clients right now. But a lot to unpack there. Mark Matthews, Head of Research Asia at Julius Baer, with us this morning. Mark, great to have you on the show, and thank you so much for joining in. Want to get a perspective of whether there is a rejig or a relook of sorts as far as Asian markets are concerned, and what's the latest view on what's happening with Korean markets?
Yes, I think that the Asian markets are gaining more attention, and they have been for approximately the last month. I think that the idea rates in America might not go up as much as the market had been anticipating is a major factor. And a lot of markets in Asia are very interest rate sensitive, particularly the Hong Kong stock market, which is one of the biggest. Korea is very volatile, and I feel like the two big stocks there, which are the memory chip makers, SK hynix and Samsung Electronics, are probably fairly priced given the pullback that they've had. The 2026 numbers are pretty easy to forecast, but for 2027 and beyond, I do think that it's worth erring on the side of caution, because memory chips are something the Chinese can make, and they're making a lot of them. And that is one place where I think the Chinese can take away big market share, and they've proven their ability to do that in the past, from everything from solar power to electric vehicles and batteries. So those are my thoughts on Korea and Asia.
Okay. Mark, good morning. This is Hiral on this side. From here on, if you have to look at the Indian markets as well, you've seen the way earnings have panned out in the first quarter. The question is, what does that tell you with regards to FY27 as a whole? Because majority of the companies have over-delivered versus what the street was expecting. The question is, does the impact of the West Asia crisis flow into the second quarter? And do you really need to normalize your expectations for FY27 as a whole?
Yes, of course, it's so difficult to forecast politics in the Middle East. I can't do it. I don't think even the experts can. But we all know that if oil goes up $20, that's bad. And if it goes down $20, that's good. Right now, the market seems to think the oil price is going to go down. And I mean, logically, it should, because both sides do not benefit from a protraction of this conflict. But throughout human history, we've had, of course, many times when logic did not prevail. So I can't forecast it, but for the record, we do believe that the oil price will go down, and our forecast for this time next year is in the 60s per barrel. And that is essentially because we do believe, number one, there will be some kind of normalization of traffic through the Strait of Hormuz. I would also point out that a tremendous amount of work has been put into building land-based infrastructure to move oil out of the Gulf countries without having to go through the Strait of Hormuz. And there's a lot of oil in the rest of the world, from Australia to Canada, and at $80 or $90 a barrel, which is where WTI and Brent are now, it's certainly profitable to pump that oil. So anyway, long-winded answer to your question, assuming the oil price doesn't go up to $150 a barrel or something like that, I think things are getting better in India. We get a good sense of that in the earnings that you mentioned, the highest in 10 quarters, I believe, and the consumption seems to be picking up from what I read. We're approaching the festive season. The government usually spends more in the second half of the year. I suspect the positive news flow should continue, and that'll be helpful for the market.
Right. Mark, what's a specific view on India? And in the context of the recent decision, of course, by the Reserve Bank of India to cap FCNRB flows, and of course, this relates to what banks were offering to several international customers. But even beyond that, the stability of the rupee in the recent past has certainly boded well for foreign flows into the country, and you're seeing fits and starts of that. Do you think that more could take place on the fringes?
Well, yes, I think the RBI have probably felt that the amount of money that has already come in through that program is sufficient, and that's the reason they're closing it early. It probably has been helpful in stabilizing the rupee, but beyond that, I'll just go back to our view that the oil price will trend lower over time, and I would expect, therefore, less pressure on the rupee. And you have to remember that foreigners net sold about $50 billion worth of Indian stocks from the stock market's high in September 2024. It's a lot. I mean, so that was a major pressure point on the currency that I believe is behind us. And whether they'll come in as huge buyers, probably not. I mean, most investors do follow trends, and so India's not going up, so they're not really looking at it. But if it starts drifting up again, they will start looking at it. And I do sense generally there is an appetite for looking at stories beyond North Asia and China. And so India, of course, fits handily into the other part of Asia that's been ignored for so long.
What's the case for India right now, Mark? Because we know that crude will continue to trend higher. The Middle East issues are not getting solved anytime soon. What is the India case looking like?
Well, the case is primarily the strong revenue and earnings growth in the most recent quarter continuing into following quarters. And if the consensus forecast is right, the Nifty is on less than 18 times, which it's rarely been in the past. That makes it cheaper than the United States, which it also has rarely been in the past. So you can almost make a value argument for India at this stage. And if we do get a lower oil price, then I think people will be looking for inverse bets on the oil price having gone up so much this year.
Mark, thank you so much for speaking with us. It's always a pleasure to have you on. We're wrapping up with markets, or at least the Nifty, seeing a bit of a deepening of the red, led by IT stocks. IT has become one of the top losing indices this morning. Pull up the Nifty IT and you'll see what I mean. So an Infosys, TCS, etc., Tech Mahindra all leading that pain point going in. But that's all the time we have. So from Alex, Hiral and I and the team that put the show together, thank you so much for watching. Ask Profit up next.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. on Editor's Cut. Our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
At NDTV Profit, every day is a new day, buzzing with news, information, analysis. A lot of it. That is why we separate the news that is urgent and important for you from what is not. News that influences outcomes across markets,
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains above the $63,000 mark in a range-bound move. Thailand enacts a 0% crypto capital gains tax. Tokenized stockholders more than double as monthly volume surges. And lastly, UBS raises exposure to BlackRock's IBIT in the second quarter. The Bitcoin is remaining above the $63,000 mark in a range-bound move, but with a bearish sentiment. Now, the next move in technicals will be decided by the upcoming White House crypto meeting and next month's Clarity Act vote. Well, Thailand has enacted a 0% crypto capital gains tax till December 2029. Now, this is for individual gains on crypto trades via Thailand and SEC licensed platforms which are exempt from personal capital gains tax. This is a major incentive for the crypto community in Thailand. The number of tokenized stockholders has more than doubled over the past month to 1.31 million. Monthly transfer volumes have also surged nearly 180% over the same period to almost $23.13 billion. Monthly active addresses increased by almost 35% to nearly 5,72,000. On the transfer volume, which is nothing but the on-chain volume which tracks all the token movements across the blockchain networks. The recent growth in tokenized equities follows a wave of crypto platforms pushing into private market and pre-IPO products earlier this year. And lastly, UBS, which is a Swiss mega bank, has sharply increased its exposure to BlackRock's iShares Bitcoin Trust in the second quarter. The Swiss bank's directly held IBIT shares increased from almost 3,65,000 to almost 4,09,000. Now, these numbers show greater institutional participation in the crypto system from a large bank. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, it's been another range-bound move with, of course, Bitcoin, Ethereum gaining between 0.3 to 0.6%, a little bit of sell-off coming in XRP, Solana, but a very narrow, tight range of trade across larger coins as well as altcoins. Well, now is the time to take a look at the crypto strategy for the day. Here's what's there to keep in mind. The crypto strategy, the market sentiment is currently bearish, weaker technicals and low volumes. This week, very important meet in the White House, especially with the crypto leaders, SEC spokesperson, and from also representatives from CFTC. Long-term investors can have smaller accumulations at these current levels. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
welcome back. You're watching Ask Profit right here on NDTV Profit. Before we start taking your stock-related queries, pull up Ashok Leyland. That company is in focus after a strong set of numbers for Q1. Stock's not reacting too much. It's important to get in the management. Shenu Agarwal, Managing Director and CEO of Ashok Leyland, now joining in. Mr. Agarwal, thanks so much for joining in today. My first question largely being on what you've seen this particular quarter, led by raw material price impact. What has been the impact so far? What has been the pricing action to counter that raw material impact in Q1 and Q2 also?
So yes, as far as price increases are concerned, we have, I would say cumulatively, we have taken between 2.5% to 3% on the MHCV side. And on the LCV side, maybe a few percentage points better than that, which, like I said, the market has absorbed so far in a good way. But we would continue to look at more avenues on price realization because commodity cost challenge is also going to continue. So either through a direct price hike or through optimization of discounts, we will look at improving our price realization even in the remaining part of Q2.
Mr. Agarwal, I do want to ask you about the sales momentum though, because Q1 had absolutely a very strong growth that you saw in sales. That has continued in July as well, July being better than June. So what are you currently seeing on the ground? Is this largely led by the GST benefits that are still a big boost to buyers?
No, July was actually better than June. I mean, if you look at the growth rates of the CV industry, July was better than June. And July was better than Q1 also overall. And I think like I said, the two factors are working. The retail customers are seeing the benefit of this price cut in the economics of the truck. And on the fleet side, they are now realizing that it is better. This is the right time to replace their old fleet with a new one. So I think this situation will continue. However, I would say that last year, as we know, was a year of two halves, which means that the first half was pretty flattish and the second half seen a very strong momentum after the GST cut announcement, right? So while we are sure that Q2 will be much better than Q1 in terms of CV industry growth, we have to think a little bit more deeper and analyze a little bit more deeper that how Q3 and Q4 would be. However, even if I take a conservative estimate for Q3 and Q4, let us assume that the market would be flattish or small growth. Even then, I would say this whole year, FY27 is looking to be a strong year. I would estimate that MHCV industry should grow in high single digits and LCV industry should do even better than the MHCV industry in terms of growth.
Well, got that view, sir. So you've put in the guidance number as well, and thank you for that. I just wanted to ask you about the electric side of things too. The smaller commercial vehicles have seen a massive growth, especially on the electric truck side. What would be the company's current market share? And what is the utilization of a new plant in Lucknow as well? Is this ramping up as you had planned?
So on the EV side, we are very happy the way our EV story is panning out. You would have read this, that Switch buses were number one last year in terms of electric bus market share. And also on the ELCV side, we had a massive market share of 40% plus in the 2 to 3.5 ton segment. So I think we are doing very well. On the heavy duty truck side, of course, the market is yet to become large enough to even start counting the market share, etc. But I can tell you that between MHCV industry on the electric side, we have now about 100 or more than 100 trucks on the road. So I think our story is really panning out very well. You also know that Switch India had become EBITDA positive in FY25 and now it has become PAT positive in FY26, right? So on the margin side, also on the electrification, there should be no concerns. And when I speak to customers,
who are looking at EVs, I think it is becoming very clear, and this goes beyond city buses, that customers are looking at a very high degree of TCO parity between EV and diesel. So we are going to pursue this in a hard way. We are going to put a lot of investments on EV. That is another reason we decided a few months back to invest in a battery pack manufacturing facility. So I think EV is going to be a significant story for CV industry in the future, and Ashok Leyland would be trying to lead that phenomenon.
But just a follow-up, Mr. Agarwal, as well, because are you currently addressing almost 40 to 50% of the market in the small commercial vehicles on the EV side as well with the current products, or is there more plan to have a larger total addressable market going forward?
Yeah, that is true. Actually, on the bus side, we were number one last year on the electric bus side. Of course, we are number one on the diesel bus side for many, many years. But on electric bus side also, the Switch electric bus brand was number one in the country. And on the LCV side, we had a market share of more than 40% when it comes to 2 to 3.5 ton. Now, you should remember that we are only in 2 to 3.5 ton. We are not below 2 ton as far as LCVs are concerned. And therefore, we count our market share only for that segment. But in that segment, we are number one, and the market share is more than 40%.
But also, sir, because you have mentioned that the Hinduja Leyland Finance business is now going into the IPO process as well, and you've discussed that in the past. You also announced a new investment of 500 crores in Hinduja Housing Finance now. Now, there have been some concerns in the past of capital allocation. You have quite a bit of cash now on the balance sheet. Is that the rationale of investing in Hinduja Housing now?
So, see, this is a very simple, rational decision for us. I would explain you why. You know that we have lots of cash sitting in Ashok Leyland balance sheet. You know that both our financial subsidiaries have done very well, whether it is Hinduja Leyland Finance or Hinduja Housing Finance. We are on a journey to list Hinduja Leyland Finance, which we hope should happen in the next few quarters. The progress is really good. And on the Hinduja Housing Finance, which is a subsidiary of Hinduja Leyland Finance, we also think that this company has huge potential. We think that the kind of growth this company has seen, which is more than 30% CAGR over last 3 or 4 years, and it has already become the 4th largest affordable housing company in India. So we do think that there is a lot of upside on this. So we are just looking at how to utilize the cash in the benefit of Ashok Leyland shareholders. And therefore, we decided, with the board's approval, of course, we decided to invest 500 crores as part of the secondary share purchase of Hinduja Housing, because we do see that this company has a lot of upside on the valuation.
Well, Mr. Agarwal, we leave it at that. Thanks so much for joining in, giving us your time to NDTV Profit. Wish you the best, sir. Look forward to our next conversation. But that was the management of Ashok Leyland. Stocks up today. You've seen brokerage upgraded as well. But let me now welcome in our guest, Gaurav Sharma, Vice President, Equity, Commodity and Currency at Globe Capital, and Sameer Dalal, Natwarlal and Sons Stockbrokers on the fundamental side of things. Gentlemen, both of you, a very good morning. Thanks so much for joining in. Sameer, a quick view on Ashok Leyland first. You've seen good set of numbers for the company. Anything that stood out for you?
They were a decent set of numbers, nothing exceptional to write home about. Look, the management is also talking of the fact that the second half will be good, but they're saying even if it's worst case scenario, flat, profitability will grow. So, there's confidence. As much as they may want to portray, there's always a little bit of risk that remains right now, given where the global tensions are and how that affects things in India. We also remain very positive and hopeful at this point of time that Indian economy is going to be resilient, given what the first quarter has shown. So, Puneet, to put it simply, at this point of time for Ashok Leyland, valuations are a bit on the higher side. We hope that growth will come, so we want to see how Q2 and Q3 pan out. I'd not be in a rush to buy. I understand they're debt-free, cash-rich, and they're making all these investments in these finance subsidiaries. And, when what the person just said that we are going to list Leyland Finance, that will do a little bit of value unlocking. But all of that has been factored into the price as of right now. So for me, at this point of time, it's a wait and watch. corrections closer to 150 through our buying opportunities. I think we got that, I think, a month and a half ago. So nothing stops it from going back down there, given where the geopolitical issues stand.
Well, Gaurav, good morning to you as well, and thank you for waiting by. Would you also have a similar view on Ashok Leyland?
Hi, Puneet. Very good morning to you. Before I share my view, here is a disclosure here. We have a buy rating on this stock, so our clients or company could have a position here. So we like this company from a long-term perspective. We have recommended the same to our clients as well. As far as technical chart formations are concerned, slight bit of resistance lies around 180, 185 levels. So yes, I do second Sameer's thought that there is a chance of a profit taking here. Somewhere close to 165, 160 could probably be a resting zone again, as we are optimistic with a long-term view. So buy and dips is the call that I would like to suggest here.
Got it. And hopefully Sai, who's from Hyderabad, that answers your question. He wanted a short-term view on Ashok Leyland as well. But let's go across to the next question by Satyan. He wants to know about delivery. Stocks currently trading at 506 odd. He wants to know, Gaurav, if it's a good time to enter this counter now. What would you recommend here? He's bought it at 506. Should he average down?
Wait for some more time. I think a little bit of a correction is left here. 440 would be the price that he should consider averaging out. From a short-term perspective, do maintain a closing stop at 420, because if that is taken out, it may even drift toward 380.
Got it. Also, Gaurav, one more coming in on your side for BSC. Padma, who's from Bengaluru, wants to enter this counter now. Based on the charts, is this a good entry price? What would you recommend?
I would suggest to buy it on a staggered manner. The good thing is the stock has witnessed reasonable correction, and it is now approached the 200 period exponential moving average, which should provide some support. Apart from that, at previous occasions too, this price point has acted at a good hurdle point. So good room is here. Buying on a staggered manner is what I'm suggesting. Utilize further dips to add more positions.
All right, okay, so that's the view coming on BSC. The next one that we have is coming in from Ramesh, who's writing us from Bengaluru, asking about Supreme Industries. He's bought around 10 odd shares at the levels of 3565 and wants to know whether to continue to hold or not. Gaurav, I'll stick with you for this one. What are the charts indicating?
Stock is looking good, and there are bright chances that it will head towards 3850, 3900 odd zones pretty soon. So yes, one can consider taking a position here. Do maintain a stop at 3450.
3450, got it. So that's a view coming in on Supreme Industries, of course reacting post earnings. But the next one is on Himadri Specialty Chemicals. Our viewer Ishwar has actually invested in this counter at 788 and wants to buy more. Stock is around that particular level. Sameer's question is from the long term, if it's a good one to pick, and what would be the prospects of the same?
The company is doing all the right things, making all the right noises, investing in battery anodes, which is something that lithium-ion battery anodes, which is something that is going to see a huge uptick. Of course, the carbon fiber business is continuing to do decently well. So from that angle, on the profitability, I don't think that's a concern in the short term. It's the question of whether they will be able to capture that market on the lithium-ion side. They are going to be one of the few producers of that anode in India. Of course, I'm sure more will eventually get it and competition will increase. But given the fact that they have the lead, it's great. But unfortunately for me, the stock has already run up. If you go back about 5 years, I think the stock was trading at about 50 rupees. 50 has gone up to 780. So a lot of the juice, a lot of the known information is out of the system. I mean, people know that these things were happening, and that is why we've seen such a stark rally. Would I be in a camp to buy at this point? No, I would not. I would advise avoid it. Let now us see if that anode gets accepted, what kind of scale they'll be able to capture and what kind of profitability, because at the moment we know none of those things. So from that perspective, given high valuations, I'd say avoid HSCL. There are many other chemical companies which have fallen significantly, which are also going to be catering to different segments of batteries or of different sorts of products, which FMCG, blah, 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 which will have more upside, if you ask me, over a longer term rather than HSCL.
Okay, all right. So that's the view coming in on Himadri Spechem. But the next one is on Meesho. Not sure if you have a view on this, Samir, but Akash from Bengaluru wants a medium-term perspective of for this particular counter, at least for the next 18 to 24 months is what he is looking at, and wants to know if these are the right levels maybe to make an entry into this one. What would you recommend?
So we like the business model because, look, at the end of the day, we have very positive Mahima on consumption, right? We've been saying it for the longest time that consumption is something that in India is going to grow exponentially. So Meesho, being an online platform, having the low-cost products which cater to the mass market, will obviously get a lot of traction going forward. The point remains, again, the simple answer to this is, given where the profitability lies at this point of time, and buying it at this kind of market cap, what are your returns going to be over a 2-year period? That's the period that he asked about, right? So given the risk reward is not in your favor, even though the business has scalability, if you have a 10-year view, I say go ahead and buy it. If you have a 2-year view, I think it's avoidable. I think in the near term, what you're going to see is consolidation. They will want to see how they're able to scale up operations. And also the competition in this space is quite high. They may not have online, but the offline space plus Reliance Industries is doing its products, plus you have these new entrants coming in. I think it's going to be competitive and tough. So my upside is going to be capped. So from that perspective, Meesho at this point is an avoid.
Got it. Well, it's now time for the rapid fire round in this edition of the show. Gaurav as well as Samir, you know the drill. The first question coming in on KPI Green. Our viewer Kishore wants to know if it's a good time to continue holding the stock at 400 rupees is what he's bought at. Gaurav, what would be your strategy?
I'll suggest to exit.
Okay, the next one that we have is coming in on BEL. Prashant wants to know about BEL and wants to know if from a near-term perspective an upward trend can be expected into this one or not. Gaurav, your view?
Pretty much likely. 435, 440 is on cards. One can take a position. Do maintain a stop at 400.
Okay.
Sanofi India is the next one. Navendu wants to 1 to 3 year view. Stocks down 37%, Samir, in the last 1 year. Any view?
I don't have this one under coverage.
Anything on the charts, Gaurav? Is the correction done?
It's a difficult one to say. The correction has been quite steep, trading well below all the important support levels. I think it is more of a luck factor here that the stock holds the 3,000 mark. So maintain a stop at 3,000, then only some bit of bounce can be expected beyond 3,500 levels.
Okay, the next one is on HDFC Life. Anand from Goa has been holding it for the past 6 years and wants to continue to hold this for the next 5 years. Is it a good hold is what he's asking. He's not mentioned, his buying price is around 485. Samir, what would you recommend?
Yeah, so, it's a hold. Just the fact that the returns have been subpar, but I think the future for the insurance industry and HDFC Life is a hold.
Got it. The next one is Restaurant Brands Asia. We've got this query a lot because a lot of investors stuck in. Lalita was one of them, holding at 139. Gaurav asking if she should still continue to hold or book out in this gain.
Book part and hold remaining with a stop at 90.
Okay, I can see Samir smiling there, but the next one is coming in on Genus Power. Sabita from Hyderabad is holding since the levels of 305. Can she continue to hold or shift to something else, Gaurav?
Better to shift. Something like a CG Power is more attractive here, so it's better to shift on.
Got it. Samir, do you have any view on RBA?
I'm very positive on the entire QSR space and RBA as well, so I continue to hold that view.
The next one's on IEX. Samir, Ram from Chennai wants to know, and it's a very interesting one. He says, hopefully the decoupling hangover will get over in 10 years, so should he continue to hold?
I don't think it's major problem. Yes, it's news that is making the hangover, but hold on to it. I'm very positive. Market share doesn't shift that easily in the exchanges, and we've seen that through NSE, BSE, MCX, anywhere. Nobody's able to really capture much market from the competitor.
Okay, the next one is Hindustan Copper. Mana from Mumbai has bought at the levels of 500. 800 shares is what he's been holding. Wants to know if he should continue to hold or book profits at the current levels. What would you recommend, Gaurav?
Clearly hold. If he has some spare cash, can consider averaging here as well.
Got it. The next one coming through, is there a good time to add Jubilant Pharmova for the medium term here, Gaurav, is what Subrata is asking.
From a medium term, no, better to avoid. Some more downside is likely.
Okay, the next one that we have is coming in from Mahesh, who's this one is coming in from Mahesh, who's writing us from Bengaluru, asking about the recent listing that I think he's talking about, but I'm not sure if you'll have a view on this one, but I'll take the next one, which is from Jaideep, who's writing us from Mumbai. He's asking about Chennai Petro Chem and wants to know if the stock has run quite a bit, if this looks better on technicals right now, or should he book out? He's not mentioned the levels, but Gaurav, your view?
Yes, indeed, the stock has rallied too much. Better to take some part profit here, hold remaining with a stop at 1150.
Mr. Iyer is holding on to Tata Steel at 202. He wants to know if he should hold for the next 2 years, Samir.
I would say whenever you get a chance of a rally up, sell out.
Got it. Well, that was the last question of the rapid fire. Gaurav, we'll let you go on that note. Thanks so much for joining in today, giving us your views. Samir, stay on. A lot more stock related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha. Ideas across borders. The Nepal Dialogue. 27th August. Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global.
Welcome back. You're watching Ask Profit here at NDTV Profit. Let's try to pull up Uflex and see what it's doing, because it's been a stellar quarter for the company. It's gaining almost 19% at the day's high point. Overall revenues have seen an uptick of 37%. Strong net profit also coming in. EBITDA has also grown almost 94%. To understand as to how things have shaped up, whether this momentum can continue going forward in FY27 or not, we're now joined by Arun Kumar Sharma, who's the President and CFO at Uflex, joining us now. Arun, thank you so much for taking out the time. Mahima this side. I think my first question is going to be about this fact, right? Q1 has been very, very strong for you. Do you think that this kind of growth momentum can follow through in the rest 3 quarters? And if yes, if you can give us some perspective as to how do you think that top line will end for FY27?
Yeah, thank you for having me, first of all. See, Q1 has been very good for Uflex. And it's not just because of one quarter result. It has been consistent efforts what they made over the last so many years together. So a lot of capacities have come up on stream now, and those capacities are yielding results. And this momentum is going to continue for the full year, because we have installed 2 new capacities as of now. One is WPP at Mexico, which is going to give us a good revenue. And then our recycling plant has also been commissioned at Noida, which is also going to upstream a good revenue targets now for us. So for the full year, we are very bullish on this segment, and whatever results you see for Q1, we are going to see the momentum going on, and I think we are going to deliver as per the expectations of management and the market.
Very good morning to you, sir. Thanks for joining in. It's Puneet this side. You've seen roughly about 1.7% growth in your sales volume. So largely the revenue growth has been led by the value growth that you've seen. So what has been the increase on a YY basis in terms of plastic polymer prices, and where has Q2 essentially started off at? Have the prices gone in a bit lower in the month of July and the few days of August?
See, prices, because of this situation on geopolitical, whatever is prevailing, has gone up by almost 30% in the first quarter. And second quarter also, barring month of July, we have been seeing the prices sustaining at the same level. So August is a good month for us, a good beginning. September is going to be good for us. So these prices are going to sustain for Q2 and thereon also, because we are seeing the demand in the market, and Uflex being a fully integrated player in this field. So we are able to demonstrate a robust supply chain so that we are able to meet the demand of our customers, even in difficult times like this. Plus our reach to our customers, because we are near to our customers. We are present in Egypt, we are present in US, we are present in Mexico, we are present in Middle East, we are present in CIS countries, Europe, Poland, and Hungary. So we are not dependent on one region. So this is giving us a value advantage, because customers prefer us now to source material from us, to source product from us, because the consistent supply chain, very resilient form of sales and production, what we are doing across the globe now. So that is paying a good result for us, and we foresee that going forward also, we'll be able to sustain this momentum in coming quarters.
Got it. And what about margins? How do you look at them? Because it's coming at around 16.5% this quarter for FY27. What do you think is going to be the normative range? By the end of FY27, how can we look at margins?
See, FY26, we ended a margin around 12.8%.
Right.
But because of our capex, what we have done, and the capacity utilization improving every quarter, we see margins growing better and better. And we are hopeful that at least we should get a 20% extra margin going forward. Result of these capacities coming on stream now. And our supply chain has been very robust, because we have set up facilities near to our main suppliers, like we have Panipat Federation facility at Panipat, near to government refinery, plus Reliance, we are near to Reliance refinery also. So getting a raw material also a big advantage for us. And whatever we have set up in Egypt, which is the second largest facility for us, there also we're getting a lot of raw material supplies without any restrictions. So these things are helping us in improving our margins and a delivery schedule to our customer. So we are very confident that going forward, we should deliver at least 20% extra EBITDA margin. I'm not saying 20% EBITDA margin, but 20% extra EBITDA margin. We should be in the range of around 14 to 14.5 to 15%. That should be the decent margin we should achieve in the present circumstances. If circumstances pan out good for us, it can be higher also.
Mr. Sharma, just because of paucity of time, just one last question from my side. Because of the strong value growth in Q1, you've almost done 5,300 crores in revenue. Last year you did about 15,000. So is it a good number to estimate that your revenue will be roughly between 17 to 18,000 crores? And in terms of profitability as well, do you expect, because you've already done quite a bit of the profitability that you done in Q1 was for the full year of last year? So do you expect roughly 8 to 900 crores of profitability is achievable in FY27?
The FY27 is going to be a good year for us. And what I can say as of now, because Q1 has been an outlier for us, but going forward, we are going to deliver at least 30% on our top line. And if you look at EBITDA volume, like we have delivered 900 crores, but last year EBITDA was around 2,000 crores. We are going to deliver at least 30% more on EBITDA also for the full year basis.
Got it. So you'll be at roughly around 20,000 crores in terms of revenue. And we mentioned margin growth also. So your profitability, can we expect that number to be in the higher 8 to 900 crore range?
No, overall, you see, like for FY27, we are targeting, or you can say we can achieve a top line of around 20,000 crores. And EBITDA margin of 14%, you can take as a ballpark figure for this.
Got it. So 14% EBITDA, I got that, sir. So the question being on the profitability side of things, or if you don't want to give us a number, a quantification of where you might be, because you've done almost a lot of it in Q1, what you achieved last year, and hence the question.
No, I think your question is very valid. But what my submission will be that let's look at EBITDA margin.
Okay. All right.
Top line we'll achieve, and we should look at a 14% EBITDA margin. That should be the ballpark what we're looking at to achieve, which will be 20% growth in EBITDA margin percentage terms from last year.
Got it. Well, Mr. Sharma, we leave it at that. Thanks so much for joining in, giving us your time to NDTV Profit. Wish you the best. Look forward to our next conversation, sir.
Thank you. Thank you so much for your time.
Well, that was the management of UFlex. Stocks continues to fly up 19% now. But let's now start getting back to your stock-related queries. And on this side of the show, being joined by Ajit Mishra. He is the SVP Research at Relicare Broking. We still have Sameer Dalal with us. Ajit, very good morning. Thanks so much for joining in. Let me just go across and take the first caller right now. And this is Shankar joining in from Chennai. Shankar, very good morning. What's your query?
Very good morning, sir. I bought Nalco shares, 250 shares at the rate of 421 rupees past week.
Okay.
I have minimum time is just 1 month only. Any chance to cross 421 before September?
Got it. Well, I'll try taking this up with Ajit. But Ajit, definitely a tough question. What's your view on Nalco in the very short term?
Yeah, good morning, Puneet. So, Puneet, we were seeing that post numbers, the stocks, mostly stocks, in fact, in the metal pack was buzzing. And of late, in the last 2 trading sessions, there was a bit of a cool off. And same hold true for Nalco also. But the good part is that it's still holding above its short-term average. So this zone close to around 374 is the area basically where we have the immediate support lies. In case of a rebound, 400, 402 is the zone basically where we might face resistance. So risk reward is 1:1.5. So if you are okay with that, you can definitely continue. At the same time, since its time horizon is 1 month, do maintain a stop at 374, because in case if it fails to hold that area, then probably we may set for further consolidation, which can push the stock further lower towards 360 or maybe lower.
All right, so that's we coming in on Nalco. I think we've got our next question coming in from Shankar Mali, who's writing us from Karnataka, asking about Praj Industries. He's got around 1,250 shares at an average price of 464 and wants to know whether to continue to hold this one or not. He's sitting on a significant amount of loss. Any view on this, Sameer?
Yeah, at best right now it's a hold. Look, the ethanol story in India, when it comes to
Okay,
buy different.
I think there's some technical glitch with Sameer's audio, but while he answers that, Ajit, a quick look on the charts for Praj Industries.
So Mima, it's been almost nearly like almost 2 years now that the stock has been witnessing corrective trend, and in fact it was in a very strong attempt of a rebound, but it couldn't surpass the major hurdle close around the long-term averages on the weekly charts. So as of now, it seems like more of consolidation, which might continue with 300 being the immediate base. So the recovery to his level may take time because first we have resistance around 350 area, then 400. Once we surpass that zone at 400, then probably we may see a sustained rebound in the stock. So as of now, it's a hold with 300 as a stop.
Got it. Also, Ajit, staying with you on BLS International as well, our viewer Raktim has actually bought these shares at 225. He's asking if he should book out his profits now or should he continue to hold? What would be your opinion?
At least partial, definitely he should book because today we have tested the long-term averages and it's been almost like 2 years now that we are seeing this trend continuing. Means every time we inch closer to 200 mark on the daily charts, it usually witness profit taking. So after this recovery, probably we may again see a consolidation in this range of 260 to 285. So book at least partial and maintain a stop at 260 for the remaining position. In case if it manages to cross 285 hurdle, then probably around 300, 310 he can book complete.
Okay, I think we have Sameer back with us. Sameer, if you want to complete your answer on Praj Industries. Okay, I think we are still facing some technical glitch. I'll come back to you, Sameer. But the next one that we have is coming in on this is on Physics Wala. Not sure if you have enough data on the charts, Ajit, to give a view, but our viewer is holding 9,000 shares at the levels of 137 and sitting on, of course, a loss of over 1 lakh rupees. What would you suggest?
So Mahima, since listing, we are seeing very volatile swings. Means initially post listing, it was close to around 160 plus. Then we've inched closer to around 80, almost 50% retracement. Then again to the closer to the record highs area, and again followed by a profit taking phase. Today is witnessing a rebound, so maybe he's considering this as an opportunity to exit. So I believe that's a good idea considering the kind of volatility the stock has been experiencing. Now with stop at 120, he can hold his position, and close to his buying price 135, he can trail his stop loss to 125. So broadly around 135 to 140 is where we have the next resistance, scheduled for Physics Wala. So as of now, it's a hold, but around that area, he may consider reducing his position.
Interesting moves here on Physics Wala as well. You had Prime Minister Narendra Modi speak on the Independence Day about free online coaching, and this stock was going to be in focus today. We'll of course try to get your fundamental view from Sameer as well, but the next question on Man Infrastructure, Ashok Reddy, who's from Andhra Pradesh, is holding these shares at 113, asking Ajit if he should still continue to hold this counter. Let's look at the 1 week chart and the month chart if possible. What would be your opinion, Ajit, on Man Infra, because he's holding also a decent quantity of 2,000 shares. Seen a big jump up in this week. What's your view?
So definitely, Puneet, it's a rebound attempt, a decisive rebound attempt, and now we are seeing that after the failed attempt to cross its 200 EMA around 115 mark, we are again seeing profit taking. But on down days, the volume has dried. So definitely this is positive, but we need to see whether it manages to hold 95 area or not. In case of sustained up move, we need a close above 115 levels. Then probably we can say that the stock is out of woods, and probably around 130, 140 is something the stock might test. So as of now, it's a hold with 95 as a stop loss. Around 115, he should review his position again.
Got it. Well, the next question coming through, and this one's between NMDC or GMDC. Both counters have done well. Ajit, this question is from Uma from Bengaluru. Wants to know if a fresh buy can be done in either of those counters. Would you advise that?
So that depends. Basically, if the time horizon is very short time, I would recommend to avoid both because both are in consolidation or in corrective phase. So GMDC looks relatively better because we are still holding the long-term averages on the daily chart. Plus, the last consolidation zone close to around 550 still holds strongly. But for any momentum, we need a close above 620 marks. So relatively, it is better, but very short term, better to avoid.
Got it. Well, let me try once again to go to Sameer. This time, let me take the bullet. But Sameer, I don't know if you can hear me, but any view on Praj Industries?
Yeah, so I can hear you. I don't know what that seems to.
We're glad we can hear you too this time around. Go ahead.
So I was just saying in Praj, given the fact that the ethanol blending situation still remains quite positive in India, given that they focus a lot on setting up those factories and plants, the opportunity can still remain quite good. It's not only India, internationally also Praj is there. But we got to keep watching it, but hold on to it for the time being. We think the stock could probably rally to closer to 400 over a year and a half's time.
Got it. Also, Sameer, just a quick one on Physics Wala as well. You were discussing the stock with Ajit as well. And I don't know if you see any impact of what Prime Minister Modi said on Saturday as well regarding online coaching and how you look at the stock, or you think it's just a coincidence the stock's up 6% today?
So I don't cover Physics Wala. As for what Mr. Modi, Prime Minister Modi ji said on this thing, I'm sure there will be some companies that benefit from it. Who they will be? Will it be something like an NIIT who does some of those kind of things? Will it be somebody else? We don't have an answer at this point in time, but Physics Wala is something we don't cover.
Got it. Well, let's just cut in and across to Finance Minister Nirmala Sitharaman, who is delivering the opening address of day one of PSB Confluence 2026. Listen in.
So, the importance in terms of presence itself underlines the importance of this gathering. Big it is, I agree, but I must credit the Department of Financial Services for having worked on the 7 different topics which are very critical for us to discuss among yourselves, generate some kind of a consensus, so that shall be the template on which all of us can take banking sector forward, financial inclusion forward, credit forward, and so on. Yes, at some point in time, there was a discussion among all of us about what could be the content and the topics on which thinking heads from the banking leadership can speak. But briefly, as I was seated there, I have seen the materials, the 7 different topics on which you are likely to speak among yourselves. But for each one of it, and that is why I repeat this point, for the first time I would think DFS, at least as long as I've been here, the DFS has actually spent time looking into the details of what each of these 7 topics should be focusing on. So the content material for each of them is well researched, bringing in the best practices from around the globe, and also highlighting the need that we have to recognize and discuss and take things forward. Particularly the one document which I was looking into was on the youth. It classifies our youth nicely into different categories, both from the college experiences, age groups which are going to be in college, and otherwise the youth in different age, highlighting the fact 29% of India's population is between 15 and 29 years. So if you see the nuggets which come out of these documents, and I understand all these 7 documents have been in advance shared with all of you all, with the expectation that you would spend some time on each one of them before you attend this meet, and therefore be able to contribute from your point of view the critical thoughts for each one of them, so that this 2-day meet would conclude giving us a clear set of workable ideas. Workable because you have given the ideas, you're the ones who are going to take it forward later on. But this comes at a time when the intensive discussions of today and tomorrow comes at a time we expect the announcement on the high-powered committee to look into banking for Vikasit Bharat. Sooner the committee will be announced, and the material that you are producing from today's discussion, on the basis of a well-researched set of documents which have been shared with you in advance, will hopefully provide that substantive meat for the committee to also look at. So the committee would probably have that material before them, even as they deliberate. And even as they deliberate, to give us their thoughts and also the recommendations which will help us to clearly understand where the committee wants India to go towards Vikasit Bharat, and in that the role of banks. So I think 2 days, absolutely valuable. No one is going to have any FOMO, everyone is here. So it is your output that I am keenly looking forward to, because once the committee gives its input, it's for us to rapidly move in that direction, understanding that the Vikasit Bharat 2047 is actually not too far away. We are in 26. So less than or short of 20 years is what we have before us. There couldn't have been a better time to talk about banking for Vikasit Bharat, especially for the grind that all of you all have gone through. Come out of it with all the recognition of difficulties and coming out towards the route of reform. Your NPAs are at the lowest ever Indian bankings have seen, and therefore there cannot be a better position of strength with which you can take on reforms. You're actually having these 2-day confluence. The ideas are going to be from the field, from the executioners as it were. And once the committee, as I said, goes through all this and forms its view and recommendations, we'll be just ready to press the button or pedal to rev up the Indian economy. So since you're going to have me come tomorrow also, post your discussions with a complete brief that I'll hear in front of you, before you, about each of the 7 topics on which you've deliberated, I will stop my opening statement at this stage. Instead of repeating all the 7 categories on which you're going to be discussing, you've got the documents, you've done your work, so I will be keen to hear what comes out of it tomorrow. So thank you very much, and I think this will be one of the best meets where you're looking for your future action. All the top leadership is here. You have to set the tone for India's Vikasit Bharat. Thank you very much.
That was FM Sitaraman speaking at the PSB conference. She's set up a very strong base of what the expectation is of deliberations over the next 2 days, and hence a lot would and could come out of that meet as well. So we'll probably get you more highlights, more key aspects of what to watch out for over the next couple of days from the meet as well. But unfortunately, viewers, that's all the time that we had on this edition of the show. Thanks so much for watching and stay tuned. We'll take your rest of the queries at 2 p.m. on Ask Profit, the afternoon edition.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities. A new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA does not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law or being elected?
Because being a political science student, by the way, I am also interested in much in cephalology. I have studied little bit cephalology. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepted in politics. So it's not my cup of tea.
I'm going to ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said, "Man lo."
Absolutely no.
Because the whole system has been known to be...
Absolutely. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 20.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, especially on the industry as well as on their earnings and whatever is hot. Right now, of course, I've got a very interesting company for you. But before that, try to guess this company. Of course, a lot of action is happening in the sugar and ethanol space, and that's why I picked up this company. It's a Karnataka-based biofuels producer. One more hint, you'll try to guess it by now. It's India's largest ethanol producer. Look at that. This is the important point to talk about. Third important reason is it was listed, you could say, a recent listing on October 3rd last year. Company is backed by astute investors as well. And that's, of course, Madhukela related, promoted at NTT. I'm sure you must be guessing the companies by now. But remember, the stock is also trading below its IPO price. Interesting bet, right? Let's talk about it. And the stock in focus is going to be True Alt Bioenergy. This is the company which we are talking about, but why are we getting this company right now? What's happening? A lot of institutional interest is coming up in this counter, and especially with the IPO price coming down, there might be an alpha to be made here. Question is, where does the company actually stand in the circular economy? We'll try to understand that. Second important question we'll understand is the progress on the Govardhan schemes and the CBG segment. That's where the government is focusing a lot. Of course, ethanol discussions we will do, but this segment is also something which we should be watching out for. Third important reason, any impact from the feedstock availability which is happening, and this is because of the issues in the sugar cane industry because of erratic monsoon. We'll try to understand that as well, because that's a raw material for the company. The top line and the margin guidance is very much important. That's something which we watch out for, especially after a company has come out with its decent set or a good set of numbers in the first quarter. The key timelines for SAF. SAF is nothing but Sustainable Aviation Fuel Project. How it's panning out, and futuristically, where does the company actually stand? Also, we'll understand the capex plans and the utilizations. It seems like it's on the lower side, so there is a scope of growth in the current business as well. Also, the targeting of the retail fuel stations, a very minor business revenue coming in right now, but in the future, what happens? That's the big question to be asked. So these are the important questions we'll try to understand, but most importantly, how do we value this company when we get in the risk and threat, and how does the company actually mitigate? So that will be something which we'll be watching out for. And about the company, let's talk about it. It's one of India's largest biofuel companies. Second important reason on this company is India's largest ethanol producer. You can have a look at that. But moving on, let's understand something more. They're the early producers of compressed biogas under SATAT scheme. Also moving ahead, this is the first biofuels company in India to attain that OMC status. And the company's joint venture they are having for the CBG business, this is from Sumitomo Corp as well as GAIL. Also looking at the companies backed by Madhukela promoted Singularity Fund, so we'll be of course watching that as well. And of course looking at the capacities, installed capacity has increased by almost 43%. Another important detail I would like to point out for the capacity is that currently 65% of that is operating on a dual feed technology. We'll understand that as well with the management what this is, and the current capacity utilization is just 61%. Also, apart from the capacity utilizations, remember the full form KLPD is kiloliters per day. This is important if you're tracking, but there are some growth triggers also for the company. Of course, there is a structural expansion beyond the E20 segment which we are talking about. A lot of discussion here already. Policy-led multi-decade growth visibility is there. Third point I would like to point out is the global aviation decarbonization, and we are just at the start of it. Moving on, the last point would be the green gas platform. We'll try to understand that as well, as the whole economy is something which we'll try to understand. Apart from the growth triggers, there are key schemes we should be knowing, and these are the schemes which will aid this theme going ahead. First one is of course the galvanizing organic bioagro resources done, or Govardhan as we call it. Sustainable alternative fuel, SATAT is there, which is also important to track. Also, there are two other important schemes which should be there in your radar. This is the synchronization scheme between CBG and CGD, which is the city gas distribution companies, and the waste to energy program and central financial assistance. So there's a lot of B2G exposure here as well, and with that, definitely there will be a kind of a risk. But industry stalwarts, Abacus Mutual Fund, we have Singularity AMC Madhukela promoted, as well as ValueQuest from Ravi Dharamshi. All of them will be meeting this company from August 18 to 20th. So we'll try to understand some major moves can happen or not institutionally, but also let's understand what may work for the company. Let's try to get that. The valuations are attractive. The stock is below its IPO price, and company has performed strong financial and operational performance, and I have tracked this company last 3 quarters. They have delivered really strong. And the government schemes and initiatives, that's also started to benefit, but there is also a flip side to it. Another important reason what may work for the company is the return ratios. They have reversed and become much more better than their peers also now. And lastly, they are meeting some large players from August 18 to 20th, so there is some action. What may not work is the minimal participation in FIs. In the shareholding pattern, FIs haven't taken position. Why? That's the big question. Second important reason is the lack of analyst coverage. Only one analyst is tracking the stock. So we try to understand as and when the company grows, why not more analysts come up. uneven monsoon is impacting the sugar sector, and there might be second order effects also coming in as well. Another reason is the execution risk, the B2G risk, and of course the feedstock availability. This is where the concern starts coming in. Also, the unevenness in cash flows, that's also there in the business. So we'll try to understand that. So this is the entire picture about the company, but let's try to understand and make you get the KYC ratings, which is very much important. And which are the important KYC ratings? We have, of course, the income statement, balance sheet, cash flow, return ratio. These are the basic ones which we get into a company and talk about it. Of course, over a period of time, remember, it's just 1 year of public information we have when it comes to shareholding, street cred and valuations. We'll try to compare them with the IPO time and the current levels and the outlook. What does the management say going ahead? So let's start the first one, the income statement. What does this mean? Largely, income statement has been really strong, the 3-year CAGR. Look at the growth numbers coming in. Even in the FY 25-26, even after that, the Q1 FY 27 has also been on a stronger side. Looking at the margins also, they have done decently well. It's a largely, you could say, they have managed it around that 16% band. This is on the long-term basis I'm talking about. Just we could show, this is the number which I'm getting it, and this has been decent enough. Going ahead, what will be the margin triggers? That's what we'll try to understand. But as of now, the Q1 numbers have also been on the stronger side. So I'm going to give this income statement a strong thumbs up. Balance sheet is largely neutral in our analysis, especially with the equity size, how things have moved. Of course, there are some changes also coming in. We'll see that in the FY 27 balance sheet. Borrowings is slightly dipped from FY 25, and cash bank balance is also decent at around 90 odd crore rupees. So it's a neutral rating for me in balance sheet. So we spoke about income statement, we spoke about balance sheet. Let's talk about the cash flow segment also, how things are panning out. And this is where a little bit of concern comes in. Cash flows has been erratic here. One side it has come down. If you compare that with FY 25, there is a B2G risk angle as well. So that's why I'm going to give this a neutral rating only in my analysis as of now. Let's talk about the return ratios, and that is where the reversals have started coming in this first quarter. Remember this dip which was there because of course, the equity base going up in the IPO. Same story repeats for the ROE also. Let's see the flip which has happened. ROCE has been good. ROE also has been flipped up and it has gone up to 14%. So decently placed when it comes to the return ratio. So I'm going to give this a thumbs up as well. This is on a short-term basis. I've given my analysis. Just that's the caveat here. But apart from this, let's look at the shareholding. Nothing much has moved. FIs is a concern for me, just 1% holding, but the DIs are holding decently, and it's of course backed by ACE astute investors such as Madhu Kela. Already Singularity Fund is having 1% stake in the company. And who knows, you might get some more domestic astute investors as the institutional meets start coming in. So shareholding, it's a neutral rating from my side. But let's move on and understand the street cred, how things are happening. And this is the number to look at. From the IPO price, the stock is down 3%, but there was a good recovery also after the IPO from the lows. It was there from its lifetime lows, you could say from 2025, 2026 lows. It's up 51%. This year itself, the stock is up 19%. So good follow-up buying has happened in this counter, but it's still even Stevens here. So I'm going to give the neutral rating for street cred. And the valuations, however, is very attractive. Why? I'm going to say that the peak was 58 times when the IPO euphoria was there. 12 months trailing P I'm talking about. Even if you average it out, it's 44 times, and currently the stock is trading at 29.6 or 30 times right now. So this is where the valuations become attractive, and that's something which we'll be tracking as well. So as of now, valuations, I have given this a strong thumbs up. Let's also talk about the overall outlook, how things pan out. A strong industry push has come on the ethanol segment. That is where the bullishness comes in. Construction for these 4 CBG plants are in progress as planned itself. Third important thing the management has talked about is they're targeting financial closure, the SAF project, which is nothing but your sustainable aviation fuel project. They're targeting the commissioning in the next 24 to 30 months. And lastly, the phase 1 of retail expansion plan comprises of 100 fuel stations. So the outlook remains very strong. So I'm going to give this a thumbs up as well. So let's revise the KYC ratings of what this True All Bioenergy is having. Income statement has been really strong. Top line, bottom line growth has been really good. 3-year basis CAGR, even the Q1 numbers, but concerns definitely there on the balance sheet and cash flows. This might impact, especially with a B2G risk involved. Return ratios, however, have flipped and become very good, especially after its IPO. Shareholding street cred, we need to give it more time to judge the company. Either ways, the stock pays below its IPO price, and that is where the valuations become attractive, and that's why I've given this a strong thumbs up. While the outlook for their businesses, be it CBG, ethanol, or even retail fuel, is strong. So I'm going to give this overall 6 out of 8. It's largely above average numbers which we generally give to a company, and that is where we'll take forward our conversation as well. So net True Alt Bioenergy gets a KYC rating of 6 out of 8. But moving on, the conversation will continue and we'll have Vijay Nirani, the founder and managing director of the company. It's a very young second generation entrepreneur with more than a decade of experience coming in sugar, spirits and bioenergy as well, with education coming in from James Cook and SPJ IMR as well. But the conversation continues with the management just after a break. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA does not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law, or being elected?
Because being a political science student, by the way, I am also interested very much in psephology. I have studied little bit psephology. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepted in politics. So it's not my cup of tea.
I'm going to ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said, man lo.
Absolutely no.
Because the whole system has been known to be...
Absolutely. I don't think anybody will dare with me.
Hello and welcome back to Know Your Company. We are joined in by Vijay Nirani, the founder and the managing director at True Alt Bioenergy. Good afternoon, Vijay. It's always a pleasure to have you with us, and of course, a strong set of quarterly numbers did come in. We want to just understand, you are coming for the first time in KYC with us. You spoke about the circular economy in your presentation. Where does your company actually stand in this, and what's your actual moat? Vijay, please go ahead.
Also, thank you so much for having us on your show and for covering us. This means a lot. And just to tell you, it's been exactly about 8 months for us to having been listed, and we'll be close to a year old come October. And over the period, we've had a lot of ups and downs, and in fact, downs have all been on the macro levels, only on the psychological front, of course, without scientific backing. Today, True Alt is the largest biofuels company in the country, and we have seen the benefits that biofuels are giving to the country. And in order for us to be more flexible and to deliver better results for our shareholders, we have recently undergone strategic investments into converting 3 out of our 5 plants into dual feed, so that it gives us the better results as well as allows us to increase the capacity utilization. And that's exactly what is helping us deliver this set of numbers. If you see our Q1, which is almost as the same as Q4 of the last financial year, and this is just at 60% capacity utilization. Now that most of our capacities are dual feed and flexible to use different kinds of feedstock, our only objective that is left now is to increase capacity utilization and deliver the better results for our shareholders.
Fair enough. But Vijay, let's get in a little bit into the details about it. Now I think it's been almost 8 months now. I can ask also that your margin guidance or maybe the top line guidance, what we can expect. You're already out with the Q1 numbers also for FY27 or FY28. Any ballpark figure or number is there?
So I can give it in terms of our revenue. I mean, in terms of our sales target. So for the current year, we hold a sales target of somewhere about 44 crore liters for FY27. And let's consider an average price of 67 rupees a liter for ethanol. 67 rupees into 44 crore liters is the target that we hold. I mean, since this numbers are out and the multiplication can be done by most of us. So let's say we will be looking at somewhere about 2,800 to 3,000 crores of revenue. That's a good jump from last financial year. And we will look at an EBITDA of somewhere close to about 16 to 17% on a conservative basis for the current financial year.
Right, Vijay, there are some issues in the sugar industry also, especially because of this uneven monsoon which is coming in. Is there some feedstock availability issues are there, or everything is fine? Because you are an industry player also. Can you just give us an industry impact right now because of this uneven monsoon?
Yes, so this year the rains were late. We didn't have ample pre-monsoon and monsoon. However, we had a lot of rains in a very short span of time. Luckily, in our geographical area, we have had enough rains to fill all the underground water, as well as three of our big dams in our region are all full. However, India will face a shortage of sugar in the coming year, and there are expectations that sugarcane juice may not be diverted for use in to make ethanol. So that leaves us with alternative feedstocks like B-heavy molasses, C-heavy molasses, as well as rice and maize. We see ample availability of rice and maize for the coming year. For us, how we encumber this monsoon issue or the natural dependency is by us being flexible in terms of use of raw material. So we shouldn't see a lot of concern in terms of our operation, irrespective of syrup being banned for use of making ethanol. We will be able to consume enough grains and we'll be able to deliver growth in the numbers in the year to come as well.
Okay, that's a very important statement coming in, Vijay, for this overall impact which we are seeing in the monsoon. You won't be impacted so much, but definitely India will face sugar shortage. That's the management view coming in. But the Govardhan schemes also, recently management also came out with or you could say the Indian government actually came out with a very important policy in this space. You are already working towards it. If you could just explain us your JVs and what's the progress timelines looking like in the CBG space.
So, Sharad, that's going to be a big growth driver for us. And CBG has been a big opportunity for us, for our company, as well as for our country. The new scheme, Govardhan, earlier what we thought it could be named as Sampurn, it has got a better name through Govardhan because it signifies wealth from waste. And it's literally Gobar and Dhan, right? And coming together, it's a fantastic name. There are phenomenal policy impacts or levers that they have brought out. There is 6 pillars that are going to drive the Govardhan scheme and going to improve the availability of compressed biogas in our country. One is an assured offtake of CBG. So that was a big concern that the industry had. If CBG was not sold, it cannot be stored. It had to be flared. It was burning money, right? With this new setup that government is going to assure all the offtakes of the molecules or the methane that we produce gives a huge cost viability and confidence to the investors to set up multiple more projects. And second on that is the pricing stability. They're going to, so when we set up our first plant in 2020 under the Satat scheme, the price of gas was at 46 rupees under the Satat program. Today, considering the price of 2,110 per MMBTU, at 98% purity, we're going to get about 116 rupees a kg for CBG. So it's a growth from 46 rupees to 116 rupees. That's a phenomenal growth we have. There's an assurance.
Right, Vijay, I just wanted to understand the growth potential is pretty high for this scheme. The SAF, the Sustainable Aviation Fuel, also we are discussing very small right now as of now, but there is a project, you have got some government grant also. And what's the suggested timelines and by when we can see that benefits in your financials?
Yeah, so back on the CBG, I'll just take one point.
Sure.
We had target to set up close to 24 CBG plants. And as on date, you did mention earlier that we have about 4 plants being commissioned. But this financial year, we will be commissioning 9 CBG plants, and our total gas output will increase from 10 tons per day to almost 138 tons per day. So that's a huge growth of almost about 13 times in the CBG business. So I just want to highlight that. And these are under 2 JVs. One with GAIL and one with Sumitomo. And there's a huge set of potentials of capital benefits that is going to be realized by the company from Government of India. Now, on the SAF front also, we have plans to set up a 10 crore liters per annum of SAF, which will use close to 20 crore liters of ethanol as raw material. We have already received a subsidy or a viability gap funding of 150 crores from Government of India under the PM G1 Yojana scheme. And that will give us enough room for us to start the capex on ground. We have already are in advanced stage of front-end engineering with Honeywell. Once that is done, our target is to commission this plant hopefully by October of 2028. That's the target that we carry right now. And we're hopeful that it will be realized by that time. We're also hoping that there'll be a good incentive package from the state governments that is under negotiation. Once that comes in, we should be able to encumber the risk because it's first of a kind project that we're doing. And that will be able to allow us to increase our capacity utilization in the ethanol business as well.
That's a very good view coming in, Vijay, from this perspective. But let's talk a little bit about the numbers also. So much things are happening. Any capex plans, for the future, maybe 2 year, 3 year down the line, because you're doing so much, in this circular economy, and the utilization levels are around 61% right now. It's quite low. So there is a significant, way to go ahead also. But what kind of targets we are setting up for FY28 or 29 when it comes to the capacity utilization and maybe the capex earmarked?
So capacity utilization on the current ethanol plants, if you look at the current year, we are at about 60 odd percent. That's the target that we are carrying. And we need to increase this 60% of capacity use to almost about 80-85% at least. So that should give us a good returns. Our ROE, ROC, as well as our EBITDA margins will improve when our numbers will improve. So that's a target that we hold. In terms of capex plan for the next 2 years, in the CBG business, we plan to do close to 24 CBG plants, and most of which hold a cost of almost about 65 to 70 crores per plant for a 12 TPD plant. So that gives us a huge capex pipeline of almost about 1,700 crores in the CBG business alone. And of course, we have announced the capex of about 2,000 crores for the SAF plant. That 2,000 crores, anyways, it's going to be taken up. I mean, it's undergoing as we speak. So we foresee in almost about 3,800 to 3,600 crores of capex in the next 2 years.
Almost, it's a big amount, 3,600 to 3,800 of capex coming in. Just speaking on that, just a small follow-up, Vijay, any kind of fundraise you are looking? Because there's so much happening. You're meeting a lot of institutional investors in the next couple of days. Any fundraise in the anvil or debt or internal accrual or equity? What's going to happen?
So currently, we don't have plans for any fundraise primarily into the company. Of course, we have disclosed to the exchanges that we will be meeting a certain set of investors in the next week, or rather this week itself. This is more to have give a status update on what we are doing and how the company is behaving, or how the company is on track, and the potentials that we hold. That's more about it, just to have a know-how about the company. Other than that, For the capex that we have planned, these are all under JVs. So we hold 51% of it, and 49 will come from the JVs. It will be a mix of debt and equity, and currently the thought is about 30-70 debt to equity across most of the projects that we are doing. And we will be able to fund the growth, or rather the capex, through internal accruals itself. And that's the plan that we hold as on date. Of course, that's dynamic, it could change.
And just a last question, a quick one. The risks and threat which come in your industry, how do you mitigate it? There is, of course, a dual setup for your feedstock, which you mentioned. Apart from that, any other thing where you mitigate your risks?
Yes. So what we have as core principles is, of course, number one on the basics is to ensure that we don't have a lot of leverage on the balance sheet. Our objective would be to have our EBITDA, debt to EBITDA not crossing 2.5. Since the company is young, we had it a little higher. We are going to bring that down or rather bring it in control. That said, we also are being more aligned towards having long-term B2B offtake agreements in place, so that we don't have a lot of impact on the policy that we're developing. So as long as we have a healthy margin, that's what we're trying to achieve.
Right, Vijay, we are short of time. Our conversation is very interesting, and the way you explained the risk mitigation is one of the most important things which an investor needs to hear. Thank you very much for your time, and it's always a pleasure to have you with us at NDTV Profit, and best of luck.
Thank you so much, Haran.
So that's a very interesting story of TrueAlt Bioenergy. The stock is below its IPO price, lot of institutional interest, and the company is meeting market stalwarts over the next 3 days. So will the story change, or is there some more concern left in the sugar industry? For those interesting stories like this, keep watching NDTV Profit and stay tuned to KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha. Ideas across borders. The Nepal Dialogue. 27th August. Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA did not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of
Benchmarks hover near the day's lows today. Nifty 50 trades below 24,300 level. Sensex sheds more than 400 points. IT and PSU banks trade under pressure today, while metals as well as auto remain resilient. SEBI chief says that the regulator is analyzing concerns around CAS, including the expiry date data. He says that it's too early to gauge the participant response, while tracking the errors remain a non-issue. Oil prices are volatile as fresh Lebanon fighting as well as Hormuz vessel attacks cloud hopes of a US-Iran deal. Brent crude stays below $89 per barrel, while the supply risks keep the markets on the edge. Voltas trades under pressure after weak margins really overshadowed the strong air conditioner growth for the company, while UBS and Citi remain bullish. Nomura stays neutral and CLSA sees downside risks. Physicswala reported a sharper first quarter performance with losses narrowing significantly, while the revenue grew 24% year on year. Total expenses also increased, keeping the profitability under pressure. Dhoot Transmission and Molbio Diagnostics made their strong market debuts today. Both the listings at healthy premiums over their IPO prices. The listings reflect robust investor appetite for the fresh market opportunities. Hello and welcome. You're tuned into Markets at 12. I'm Nisha Podar, and let's take a quick look at the market at this particular time. And yes, there is pressure that is very, very visible on our markets as well because of the weak global cues coming in, and especially because of the crude prices being at elevated levels, and also the way things have transpired on the war of words between the US as well as Iran, and various other incidents that really took place in the West Asia war as well. So crude oil prices, that is really changing the dynamics for the Indian markets at the current moment. When we take a look at Sensex too, has lost quite a bit of ground along with Nifty. So those are the real indices. But when we look at the broader markets as well, they are showing a little more resilience than the key indices today. So the downward pressure is not as high when we talk about the broader markets, but still in the red zone. So there is pressure. When we take a look at the overall market perspective and what's really working, what's not, it's clearly the defense, auto, as well as the metal spaces in terms of the sectoral play, which are really in the green zone, is adding to the momentum. But on the downward side, there are larger number of sectors. So a larger number of sectors with the lead being taken by IT, and also remember banks taking a lead when it comes to the negative, built up in the market. So therefore, banks, which have been the quasi investment for the overall economy and the Indian market trend, that is the one which is really showing a little bit of that downward pressure, and that's really impacting also the overall sentiment as well as the key indices today. When we take a look at the overall contribution, one must see that some of the big companies and the heavyweights like Infosys from the IT pack, Reliance Industries, one of the heavyweights, and the largest bank, State Bank of India, and from the consumption basket, ITC, these are the ones which are really showing the maximum amount of erosion when we talk about Nifty 50. And there are a few of those metal counters, consumption as well as auto, which are really on the positive side when we talk about the Nifty 50 contribution. Let's take it straight to an important news coming in, and SEBI Chairman Tuhin Kanta Pandey, he says that the regulator is really consulting the market participants on concerns around the CAS, which has recently been implemented, remember, and is closely also analyzing the expiry date data. Let's listen in on the steps being taken on this regard.
I think the SEBI, our teams have been participating, been talking to the different participants on the level of participation, on what particular concerns are, and in the social media also there have been a lot of suggestions. I think some media houses have done, I think, full day dedicated programs on how the cash could be improved in terms of like cash remaining as it is, but maybe certain things that are worrying some of the, I think, those who are doing options trading and so on. So we are actually analyzing those issues, and will soon come to a view on the matter. It is too early to say. अभी आप जो विदेशों की बात कर रहे हैं वो सेटल्ड सिस्टम है, और अभी हम लोग बात कर रहे हैं पिछले 15 दिन में क्या हुआ, तो पहले दिन में क्या हुआ, उसके बाद सब्सिक्वेंटली कैसे पार्टिसिपेशन रिलेटिवली बढ़ी है और कैसे वॉलेटिलिटी भी नीचे आई है, डाइवर्जेंसेस बिटवीन सेंसेक्स एंड निफ्टी वो भी नीचे आए हैं। और ऐसे भी हमने देखा है कि जो एक्टिविटीज़ है, जब कुछ एक्स्ट्राऑर्डिनरी एक्टिविटी यदि कभी एक्स्ट्राऑर्डिनरी होता है, उसके पीछे भी डेटा इज़ बीइंग एनालाइज्ड, राइट। तो सम ऑफ द टाइम्स हमने देखा है कि एक्सपायरी डेज में कुछ ऐसे हो सकते हैं जिसमें कि जो कि इतने साधारण ना हो, जैसे हमने कहा है कि उसमें भी कुछ छुपा हो, तो वो डेटा भी हम देख रहे हैं। जैसे आपने बोला था वीवैप सिस्टम जो पहले था, उसमें भी क्लोज के समय में कई बार इस तरह से ट्रेड्स आते थे जो काफ़ी मूव करते थे। तो इस तरह की घटनाएं कभी भी हो सकती हैं, यदि लोग नहीं करें तो हम उन लोगों को जो वो ऐसे मैनिपुलेशन में यदि करेंगे तो फिर उनके खिलाफ हम लोग सख्त कार्रवाई भी करेंगे।
All right, so that was SEBI chief talking about gas, the closing auction session, which has recently been really implemented and its impact. Let's take it straight to some market perspective for the day today. Alok Agarwal, who is the Deputy CIO of Alchemy Capital Management, joins in now. Alok, always a pleasure to welcome you on NDTV Profit. Would you like to also give your view on the CAS and the way it's implemented and how it's really working for the market participant and the overall market outlook?
Yeah, Anisha, pleasure being here. And, as has been noted across the market segments, while this implementation was required and is required to be in line with the globally large exchanges as well, and what we are facing initially has been kind of teething issues, and SEBI has already shown the resolve that yes, they are ready to listen to the feedback and take corrective actions wherever required. So we have seen that in the past as well. Whenever newer things get implemented for the larger good, there are initial teething problems which get ironed out over a period of time. So I really do think this is no different, and I will see similar thing over here as well.
Right. What about the market momentum, Alok? Of course, it's the crude oil prices, global cues being negative. These two are really impacting the market today. But in the short term, what's your view, taking into account also the factor that the next earnings cycle that we really see, officially half of this particular quarter has already seen a very volatile and still elevated crude oil prices with its impact overall?
In fact, looking at the kind of shock that this quarter had to deal with in terms of supply chain issues and a major crude oil price being on a higher side, and a lot of times non-availability of a lot of raw materials as well. Despite that, this quarter's results have been quite phenomenal given the kind of a background we had. And to have close to 18-20% kind of earnings growth for a broader market, I think we cannot be complaining. It's been much higher. In fact, the upgrade to downgrade ratio also has been improving and has been one of the highest in the last several quarters in this quarter. So overall, the numbers have been quite encouraging. And given the fact that, the major two issues that we were dealing with when we entered the earnings season, one was on the higher crude oil prices and the West Asia crisis, and the second was on the monsoon side. And both of them seem to be in a better position what we were in a couple of months back. So yes, the monsoon is also in a deficit so far, but the effect of El Nino is not as bad as was feared at the beginning of the season. At the same time, it looks like that crude also is trying to find out its range which is not much lower than the peak that we saw at the end of March. So these two factors, not being too poor, is also working in India's favor. And we are also seeing the fact that FI is also making a comeback after having heavy selling figure in the months of March to June. Both July and August so far are net positive for FIs.
Yes.
And with India's relative underperformance in the last 2 years, the valuations have turned that much attractive. Risk rewards are also pretty attractive now.
Right. Alok, it's always a pleasure speaking to you. But just one quick question. We are running out of time. You mentioned several of the factors. Of course, the market is also baking in an increased interest rate later in the year. Are you on that side? And one area where you would like to invest in these valuations? Very quickly.
The inflation has come at a 19-month high. 19 months ago, at a similar inflation number, the repo rate was close to 125 basis points higher. So the RBI has shown resolve to be in favor of growth as well while balancing the inflation. We do think they have some more room to ensure that the rates continue at the same level. Within this current situation, overall growth and interest rate dynamics, we are far more positive on non-ferrous metals, power, defense, and some of the capital market plays, also on the pharma side. So these four segments we are most positive on.
All right, Alok Agarwal, thank you so much for joining us. Thanks for all your perspective on the market today. All right, let's move on to another company, which is LG Equipments, which posted a strong Q1 numbers, and that's also reflective on the stock price, over 2% gain on that counter. And also remember, it's not too far away from their 52-week high levels as well. Growth was led by India as well as North America businesses, while the company remains optimistic on the Q2 performance also. We have with us Jairam Varadaraj, who's the MD of LG Equipments, joining in. Jairam, always a pleasure to welcome you on NDTV Profit. Of course, all across the board, in all the geographies, you have seen a good amount of growth in terms of your sales figures and even on the performance. Give us first the highlights, key highlights which really worked well in the last quarter and whether they would sustain in this particular quarter as well.
Thank you, Nisha. Great to be on your program. As a highlight, I think India has done very well, and so has North America from a significance point of view. Besides these two geographies, even the rest of the world has contributed surprisingly well to our top line. And when we dissect what are the contributing factors to it, we are reasonably confident that this kind of support from the markets, various geographies will continue into the second and third quarter as well.
So, Jairam, what about the profitability bit? On a year-on-year basis, it's about 60 basis points of improvement on your EBITDA margins. What are the levers that you're really working on, and how much more expansion on the margin and profitability front that can be achieved in this particular financial year, if you can give an guidance on that?
Yeah. So, Nisha, in the first quarter, we had the challenge of metal commodity price increases. Even though we corrected our selling price, there is always a lag in capital equipment. So we expect recovery towards the end of the second and third quarter. So bulk of the EBITDA margin in the first quarter was contributed by the top line growth. And in the second and third quarter, we expect actual margins to come up. You know, raw material prices at a level of revenue increased anywhere between 2 to 5% at a revenue level. And we are very confident that we can recover it in the second and third quarter.
Right. So if Jairam, if I can also get a little more detail on what is it that's really impacting your raw material prices, how are you seeing the outlook improving at this current moment? Which are the factors really impacting, and how much of it is because of the supply chain constraints because of the global warfare? So what are the factors, and what is the outlook, and therefore how many basis points of improvement are you really expecting?
So the increase has been primarily metal commodity. Steel has gone up, copper has gone up, aluminium has gone up. So all these have had differential impact on our material cost. Like I said, it's anywhere between 2 to 5% on our revenue. And we have taken both cost reduction initiatives as well as price correction in the market. And I'm reasonably confident that in the second and third quarter, we will maintain this level of profitability. I don't see it improving beyond the current levels for the balance of the year because I'm a little cautious about the West Asia war as well as the continued pressure on metal commodity prices. So we're being a little conservative in saying we can sustain the level of profitability.
Right, Jairam. So, like that confidence with which you are saying, but of course, the global commodity prices are a global phenomena that you have to play around with. But final question and quick answer to that, North America as well as India on a QOQ basis have seen a good amount of growth when it comes to your sales revenue figures. What is it that is going to drive the sustained growth, especially when we talk about the American market for you?
So in India, there's been high levels of positivity, sentiments of capital expansion as well as capacity expansion. And we expect that to continue because our inquiry levels continue to be strong. Customers remain optimistic, though they are taking a little longer to conclude deals, but the optimism levels are good. America has been a surprise. In North America, we expected there will be a kind of a compression, but there's been a lot of insourcing of manufacturing, capacities being built, new facilities are being created, and we expect this to continue into the rest of the year as well.
All right, Jairam, many good wishes to really continue the momentum. Thank you so much for joining us right here on NDTV Profit.
Thank you very much, Nisha.
Thanks. Thank you so much. All right, moving on to the auto sector, which is doing well. One of the few sectors doing well today. In fact, Mahindra has really expanded the BE6 lineup with up to 8 variants with the new Sportec and Formula E Freedom Edition. Now, the performance-focused variant gets a race-inspired design, tricolor accents, and an upgraded 3-screen setup. In fact, my colleague Puneet caught up with Nalin Kant of this particular division, who heads this particular division, on this launch and what it brings to the table for Mahindra and Mahindra. Listen in.
Talk to us a little bit about the product portfolio now. You have almost 8 variants across spaces, and you mentioned that there has been a lot of conversation with customers that you've gotten. What are those inputs, and how has expanding the portfolio according to you will help the customers?
Yeah, no, firstly, thank you for having me on the show. So the way we're thinking about it is EVs, as you take as a whole, is going mainstream. So what were early adopters 2 years ago when we launched, we are starting to see that grow into mainstream as well. So as we get into that, the type of customers coming in on top of the existing customers, slightly different preferences to that extent. So we got some learnings from that. We got learnings from our 9E and 9S, and some of the preferences people saw in that, and they said, I want that feature in this as well. So you put all of these things together, we said that we can express the car a little bit differently, which is what the Sportec is, and I'll spend a minute on that. But there's a bunch of guys who said, I love the aircraft cockpit look, and we want to kind of keep that going as well. So then we kind of said, you're going to get that in some of the cars, and you get some of the other features on the other car. And the Sportec stands on its own. And then, of course, you have the Freedom Edition that you see here as well, which is from the Formula E racing piece. So there's a racing DNA we want to maintain, which this car has. And then you have the Sportec, which kind of takes the sporty design, which always existed on our BE6, and then added some tech to it. And we talked a bunch of the technologies that we put in there, including Google Gemini, we've done as well. So that puts together, and that's the Sportec that we're bringing. Third screen is an important one. Good feedback we got on third screen as well. So a lot of people on 9E and 9S said that they would love to have the third screen for watching content. We have now added on top of it gaming. So you bring your console, the kids play at home with an Xbox or a PS4, bring it in here, you can play your games on the third screen here as well. So we added on top of it.
The one other aspect that, because you are also addressing a lot more as well with this particular product portfolio has been the investments that have gone in over the last few years, because the car as well as the paint job is absolutely fantastic to just touch, to feel as well. I just want to understand that, as you've gone electric, the B6 has been in production for almost 18 months now. Do you feel that the potential has yet to be captured, or as we look at the numbers, roughly 2,500 each for both the 9E as well as the B6? The 9S has been a runway growth because of how the 7-seater as well as more familiarity. So as you've gone and as the EV landscape has evolved, do you feel that we are yet to see, and as the numbers come back for the production, you will be in a much better position with these models?
Yeah, absolutely. So I think you caught on to it. One, we're still in category creation in EVs. I've talked about it in the last year or so. Anytime a new product comes, whether it's ours or competition's product, the market grows. We are not cannibalizing each other to that extent, right? So we think that will continue. It's very early days. We are still about what, 7-8% penetrated.
All right, so that was a new launch by Mahindra & Mahindra. Let's shift focus to the earnings and last bit of earnings leg that is really remaining. So Regal Resources, that saw a mixed Q1 with the rise in the margins as well as the profits despite a fall in the revenue numbers and improved product mix, stronger exports and a greater focus on the manufacturing to really lead growth. In fact, we have with us Mr. Anil Kishore Puria, who is the chairman as well as MD of Regal Resources, to talk more about the company's performance going forward as well. Anil, always a pleasure to welcome you on NDTV Profit. So, of course, what really stands out in these numbers, and the stock is also today showing a little bit of positive momentum, is that even though the revenues have declined, your profit as well as profitability has really substantially improved in the quarter. So that itself means that there is a lot of efficiency that is really coming in. Can you first highlight what really led to it, and is that going to be sustainable in the next quarter as well?
Ma'am, in the Q1 of 26, we had a blended turnover of trading as well as manufacturing. The trading turnover was about 19% of the entire turnover. This year, the trading has dropped to 3%. Usually, the profit percentage in trading is very little, commodity trading, but and the manufacturing was much better. And now, because of 3% going down, the manufacturing turnover is practically 97%. So it has improved considerably. First of all, so the whole numbers is also part of the percentage. The whole numbers of PAT has also jumped to 47%. Jumped by 47%. And then in May 2026, we recorded doubling the capacity from 825 to 1650. Though we only got about a month of that thing, but that has also added to the growth of the bottom line. And the operating leverage has really helped us in increasing the profit.
Right. So, Anil, you mentioned about that trading contribution. So, for this particular quarter's performance, how are you guiding in terms of the performance, in terms of the revenues also on a YOY basis, and in terms of the contribution coming in from trading as well as the profitability metrics?
Ma'am, I would the guidance I would just give you the guidance what I think give the maximum, because we are in the cyclical industry and that also aggravates. So every quarter will not be the same. But last year we grinded about 2,65,000 tons. This year I'm quite sure that we will go above 4 lakh tons, 4 lakh or 2 lakh 25 or 2 lakh 10, whatever, but above 4 lakh tons, much above 2 lakh tons. So of course, if we are grinding more, the fixed cost will be less, the operating leverage will be much better. So we will be posting a much better profit. The trading now would be negligible. For example, 3%. Last year, the entire year's trading was about 30%. Now I don't see any trading activities because we will not be having much maize to trade. So it will be 1%, 2%, 3% at the most.
Right. So the native maize starch contribution is your largest when we talk about the revenue, Anil. Is that product mix going to remain the same? Value-added production, is there a plan to really boost that in terms of improving the margin forward? Can you give us a sense on that as well? Also, all the export component that has also been improving. How is that going to pan out in improving the performance going forward?
And regarding the value-added products, last year we had an entire turnover. We had 3% of value-added.
Yes.
Usually in starch, it breaks like 30% co-products, which goes to maximum feed mills, animal feed, and 70% starch. So we have 3%, and this year we are projecting about 20%. It depends now how the rest 6-7 months go. But that will increase to 22% in this current financial year. So from there also we could be having some additional benefit. Bottom line will be a little better at the bottom line. And regarding the exports, we had about 5% of the total turnover, 5% of exports. This year, after the increase also, we are having about 10% we have done till now. And we are working on every market. We are going and reaching out to the export market, which we were not doing last year, to increase our export base also.
That's right. So Anil, from these two factors, there has been a substantial amount of performance that has really improved. But very quick question, since you are based in the agro industry, and we are still trying to understand the delayed monsoon and the El Nino impact, which has been dismissed by many as a huge impact. Very quickly, what's your summation of the impact of the weather-related conditions on the agri sector?
Yes. Quick answer, ma'am, that we are sitting in Rabi crop that has finished already, April, May, June, July. And the rest of the country is sitting on Kharif crop. So the impact on us will be minimized, will be very less compared to the Kharif crop, what is going to come in, say, October, November, December, January.
Sure.
And if cheap prices, because we are holding a good inventory, which we'll be using aage chalke. So if we are, if the crops increase, if the price of maize increases further,
right,
so we're a better game rather than losing.
All right. So thank you so much, Anil. Completely out of time, but thanks so much for sharing all your thoughts on NDTV Profit. With that, completely out of time on Markets at 12, but keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics call me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improvement notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA did not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law, or being elected?
Because being a political science student, by the way, I am also interested in much in cephalology. I have studied literary cephalology. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepted in politics. So it's not my cup of tea.
I'm going to ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said, "Man lo."
Absolutely no.
Because the whole system has been known to be.
Absolutely. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities. a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Mani.
Hello and welcome to NDTV Profit. You're watching Trending Stocks from the NDTV Profit Suzlot studio with me, Hiral Dadya, and I have Puneet, who's standing at the Profit Market Pit with all the action in the markets today. Good afternoon, Puneet. An interesting day of trade. I mean, last week we've really done nothing. Today as well, seeming to be very lackluster. There is no action with regards to VIX as well. That cautiousness that does prevail as well. What are you picking up?
Well, thank you for that. It continues to be a lackluster kind of a day that we are seeing, and that's clearly visible on the indices too. Now below the 24,300 mark for the Nifty 50. You're also seeing consistent pressure come through on the Bank Nifty as well. So not seeing any kind of moves through. But when you look at what are the key factors that we're watching out in trade, the support range for the Nifty 50 continues to be at the 23,800 to 24,200 mark. The Bank Nifty also support range is very closer to the current market price too as well. So let's pull those ranges on the screen now for the Bank Nifty too. That continues to be between 56,500 as well as 56,100 kind of a range that we're seeing on the Bank Nifty. But there are certain pockets that we continue to focus on. Small caps are continuing to outperform the benchmarks, and that seems to be a trend that we're continuously seeing in terms of movement. But the select metals, auto as well as sugar stocks, those are the ones that are actually seeing some buying today. What's actually seeing some pressure is the Nifty IT that continues to be under pressure. PSU Banking Index as well as FMCG, all of those counters are currently under pressure right now. What you have seen is within the financials that the yields have risen, the rupee has weakened post. RBI has shortened the deadline essentially for the FCNRB. That's now going to be on 31st August when they wrap up things. There's been roughly about $50 billion of deposits that's come through under the FCNRB as well. So all of those counters are right now in focus. Also is the last leg of earnings reaction that you're seeing. Good numbers coming in from Uflex, a lot of value growth. We spoke to the management today at 11 a.m. as well. Do catch it on YouTube if you missed it. But Schneider Electric, Zagel, both of them very weak earnings. Stocks down 10 and 20% respectively. But there is some green on the screen clearly visible. Strong set of earnings as well as listing gains on both Dhoot as well as Molbio Diagnostics as well. Dhoot Transmission, of course, in the auto ancillary space, a space that has done consistently well. But those are some of the key triggers that we are picking out today, Hiral. Continues to be a lackluster day, but select buying visible in very, very smaller pockets, but not too much across the space.
Absolutely not too much across the space. And now that the earnings season is kind of officially over, there are no major triggers to look forward to as well, apart from what would be happening in the primary market during the week so far. But moving on, let's look at the watch list. BSE. Jeffries has gone ahead and downgraded the stock to an underperform. In fact, they've gone ahead and cut the target price as well to a 2,940 from a 3,520. That stock is down in trade. Amber Enterprise is trading in the positive. A JP Morgan upgrade coming in there. Puravankara, a strong set of numbers, a turnaround quarter that has been reported. Back in the black, stock seeing smart moves. Moving on, Manorama, that the gains post a strong Q1 is what has been extended. 11% up move. 2 sessions have been very strong. Vikram Solar has been buzzing on the back of a strong set of volumes. That stock is up nearly 10% in the last 5 trading sessions. Zagel, again, it's the margin pressure and that sequential downtick that we've seen is what is putting that stock, lower and locked in a lower circuit. Physicswala has reported a strong set of numbers. JP Morgan has upgraded the stock to an overweight from a neutral as well. That stock is up 6.5%, and it could be one of the beneficiaries on the back of digital education commentary that we heard from Honorable Prime Minister Narendra Modi on the Independence Day speech. Moving on, Uflex, higher realizations and better product mix has boosted the revenues and profitability. The stock seeing some smart moves. Schneider Electric trading under pressure on the back of the weakness that we've seen in the first quarter. NMDC Steel also posted a weak set of numbers, and Citi has actually cut the target price to 80 from 85. Knowledge Marine, Rubicon Research, both of these counters also reacting to numbers. Satvik Energy, again, a weak set of numbers. That stock is trading under pressure. Endurance Tech, on the back of earnings, you have brokerages which have turned bullish. That stock up nearly 4.5%. And you have the entire sugar pack that is buzzing in trade. And this is on the back of global raw sugar futures, which are at a 10-month high. So some bit of tailwinds that could be coming in to exporters as well. So Sri Renuka, one of them, Balrampur Chini, another one, Triveni Engineering. These are few of the names which are buzzing in trade. But, Puneet, over to you to take the rapid fire as well.
Well, most certainly, and we are now being joined by Nilesh Jain as well. Nilesh, very good afternoon. Thank you for joining in today. Just a first quick view in terms of the rapid fire round now. The first one's Puravankara, that's on our radar. Anything on the charts? What is your opinion?
Good afternoon. Well, Puravankara, if we look at today, it opened with a gap up note and it's already up close to 8%. The structure has turned positive. And we can expect a follow-up on the upside, maybe towards 250, 260, but not advisable to chase the momentum after today's gap-up opening. So better strategy would be to buy on decline, keeping a stop loss below 220. It can be bought on dips.
Also, a smaller counter, we've not spoken about it too much. Nilesh, on NMDC Steel, what is your view on the stock?
Well, NMDC still has given a breakdown today, down 7% at 41 right now, and still looks weak. We may see further downside, maybe towards 39, 38 in the near term. So not advisable to chase this particular counter and don't buy.
Is it advisable to look at Knowledge Marine, Nilesh? Because that's a counter that continues to do well. We covered it in the list of stocks as well. Any view on this counter?
Well, today we are witnessing a good uptick of close to 3%. It has also given a good consolidation breakout as well. So a follow-up more on the upside, maybe towards 29, 29.50 can be seen in the near term. So if somebody is already holding the long position, can keep a trailing stop loss at 2700 and stay put.
Also on Rubicon Research as well, a fairly recent listing, Nilesh, stocks up almost 9 to 10% today. Is the move expected to continue on this one?
Well, after listing, the counter has been trading in an uptrend, a very strong uptrend. I would say today it has scaled to a fresh record high as well, and still looks strong for further upside towards 1900 to 2000 in the near term. So it can be bought in a staggered manner. It's already up 10%. Can be added if it falls below 1700, keeping a stop loss below 1600. The broader structure looks strong.
Right. Also on Physics Wala as well, we have a lot of recent listings today that are buzzing in trade today. Nilesh, Hira spoke about what the Prime Minister said over the weekend on the same. We're seeing some buying today. Where are you seeing the counter? Because stock has been under pressure post-listing, but is this a fresh breakout? Is that something that you're picking up?
Well, post-listing, we did see some bit of selling pressure and rebound as well, but it's still trading below its IPO price. And after recent correction, today is the first bullish candle we are witnessing. A strong rebound can be seen, but the immediate hurdle of 50 as well as 20-day moving average both are exactly placed at 126.50 paise. So that's strong resistance. I would rather wait for a breakout over the same, then we can expect a follow-up on the upside was 135 to 140. So at current level, it's in a no trading zone, but if somebody is already holding the long position, can keep a trading stop loss at 120 and stay put in the counter.
Got it. And the last one, Nilesh, on Endurance Tech as well, reacting on the back of strong earnings. Crossed the 3000 mark today, but is this a fresh breakout here as well?
Absolutely, a very strong breakout, I would say, in this particular counter about 3000 mark. So if it sustains and closes about 3000, then that's a confirmation of a breakout. We can expect a follow-up on the upside, maybe towards 3200, 3300 in the near term, keeping a stop loss below 2900. It's a buy and decline structure.
Got it. Well, Nilesh, thank you so much for that, and we'll let you go on that note. But Hira, back to you.
Thank you so much, Puneet, for that. Now, moving on, the other one that stock we should be focusing on is BSE, which is under pressure as Jefferies has gone ahead and downgraded the counter. Stock is down nearly 3.5–4%, and this is an issue with the prop trading book. Now, CAS could be coming in as well, which could be having an impact. Sharad is here to tell us more. Sharad, over to you. What do you have for us? Okay, before Sharad comes to us, I'm probably going to take you through, what we have on this one as well. They've downgraded the stock to an underperform from an hold. The target price has been reduced to 2,940 from 3,520, and the revenue from the domestic prop traders could be at risk is what Jefferies is indicating. In fact, this revenue is nearly 50% of the notional turnover. What they're saying is that the headwinds could come in due to STT hike, RBI bank guarantee norms, as well as CAS. In fact, BSE's option MTD in August is down nearly 12%. That's the average daily turnover versus July. And they've cut their FY27 and 29 earnings EPS by almost 5 to 12%. The market share gains outside the T0 and T1 days have also slowed. So that's what we're picking up with regards to where Jefferies go. But Puneet, over to you to actually look at Schneider as well, with which Parth has been tracking.
Certainly, and we've seen Schneider Electric continue to be in focus today on the back of a weaker set of numbers that we saw today. But Parth now joining us to get us some more perspective of the same. Parth, what are you picking up?
Yeah, so the revenue for Schneider Electric was impacted because of lower than expected conversion of order wins, and also due to weak project execution that the company saw during the quarter. And not just revenue, even the margins were impacted because of two reasons. Number one, the volatility that we saw in commodity prices during the quarter, and also a lag that the company experienced when they tried to pass on their cost to the end customers. Also, finance costs have seen a jump of 41% year on year to reach 15.2 crores, and that's what is reflected in the numbers as well. Sales were up marginally by just 5% year on year to reach over 650 crores, while EBITDA was down 44.4% year on year. EBITDA margins were down 550 basis points year on year, and also PAT was down almost 70% year on year. However, a good quarter in terms of order intake, as the company saw highest ever quarterly intake of 915 crores in Q1, and order backlog stands at 2170 crores, up by 32% year on year. So good quarter in terms of order wins, but the execution is where they are lagging behind, and that's the reason behind the drop in share prices today.
Well, thanks so much for that, Parth. So definitely the cost pressure on the counter continues to be one that is hampering the stock now, and hence you're seeing finance costs that rose up, and despite the good order intake as well. We'll just wait for our fundamental guest to join in as well to get us a quick view on Schneider Electric as well, because what you have seen for Schneider is that despite good order wins that came through, you saw some pressure basically on the cost pressures, and that is having a bigger impact on the stock today as well. I also quickly want to pull up an Amber Enterprises before Jasmeet joins me in as well, because what you have seen for Amber is a mixed set of numbers for the company as well. So you continue to see the pressure basically on the particular counter, and then some revival up. Stocks I think of almost 1% now. And while you did see good order growth as well as the guidance by the company in terms of both the electronics divisions as well as the consumer business, you did see some one-time impact as well, and hence you continue to see some pressure on the stock. So we'll of course get more perspective as well, but Jasmeet now joining in to give us his perspective on and what some of the other key counters that he continues to be in focus on as well, because it's been a day where you saw individual movers continue to dominate as well. And Uflex, definitely we discussed Jasmeet in the morning, stocks up almost 20% now. What worked for the company this quarter?
Seeing is the overall performance of the stock that's been impacting the performance. If we look at the key trigger for the particular counter, we see that the higher realization in this particular quarter has helped the company to go higher. Further, we have also made a note that the strong demand
add in terms of what you saw in terms of margins to come through. And very interestingly, the company did roughly around 422 crores in terms of profitability at the end of FY26. They've done already quite a bit of that in quarter one. So we spoke to the management today at 11 a.m. They told us that they will be targeting at least a 30% growth in revenues, taking the total to 20,000 crores. But profitability also will see, they've not given a guidance till now on the profitability side, but EBITDA margins will be at that 14 to 15% mark versus the 12% that the company reported in FY26 as well. But we'll also just get a quick confirmation if our fundamental guest is there as well right now to get more perspective on all of these counters that have been buzzing in trade today. But before that, we'll take a very short break, come back to you with let me go back to Hiral then and probably take this forward.
Thank you for that, Puneet. In fact, actually, let's look at a Turtlement FinTech. Let's pull up that counter on the screens and see what the counter is doing in trade. And it's an interesting one post-listing as well. The stock is at the day's highest levels at 8.5% on the back of the Q1 numbers. Joining us is Dhirendra Mahayavanshi, Chairperson and Managing Director at CEO at Turtlement FinTech. Welcome to the show. Always a pleasure to speak to you, sir. My question coming to you is a very strong number that was reported in the first quarter. Help us understand, is this something which actually sets the stage up in terms of expectations for the remainder of FY27, or do you think this is just a one-off?
No, thank you for having me on this call. Yeah, definitely Q1 has been a great quarter. We grew about 40% in terms of revenue. From a premium point of view, we grew about 50%. One thing I would like to highlight is that insurance is a seasonal business, and Q1 usually is the lowest quarter for the entire year. So we can expect the seasonality to play out during the year. Q4 is the biggest from a season point of view, and Q2, Q3 are always better than the previous quarters. So definitely Q1 has been start has been very good for the year, and quite excited about what lies ahead from the year point of view this year.
Okay, so Dhirendra, tell me one thing. If this is the trend that you're talking about, what's your expectation for FY27?
So for FY27, so historically, if you look at the last 5 to 6 years, we've grown at a CAGR of about 42%. Largely, the growth is driven by our ability to recruit advisors at scale, POSPs at scale, and then get them to production. Now, that trend will continue because from an opportunity point of view, insurance continues to be a large opportunity. We play in the retail space, and our model is largely B30, which has been majorly underinsured from a penetration point of view. So the same theme will play out not only in the year, but from a long period of time over the next at least half a decade or 1 decade. We will see the same theme play out. So we are aiming to be on track. Historically, our growth rate has been 40% plus. Looking forward to achieving the same numbers.
Okay, so future growth will come in from, increasing insurance penetration, or will it come from gaining market share from competitors? How do you look at it?
So we play our 70 to 75% of the business is from tier 3, tier 4 markets, which is what we call the B30 market. And that B30 market has very low levels of penetration. Why we are able to do this is because we are digitized and we have now a granular network of this last mile POSPs who are able to bring the message of insurance, create awareness, and also then carry out transactions in the market. Now that B30 market is growing at a rate 60% higher than the top 30 market. And you will see that happen for a long time from here. And hence, we will, because we are largely in that market, is where we see a growth coming from.
Okay. The other thing I want to ask you, Dhirendra, is about Prime Minister Narendra Modi's statement in the Independence Day speech with regards to where insurance for all goes. I'm sure you would have heard that as well. What is your key view on it, and who stands to benefit out of Insurance for All scheme, where it is all linked to your PSU banks, or or even cooperative banks where individuals have accounts?
Right. So insurance for all is a key theme, part of the developmental agenda. By 2047, everybody in the country has to be insured for one life, one health, and at least one asset insurance policy. The overall ecosystem, everybody will participate in that process. And at Turtlement, we have taken it a mission that, in fact, when we filed the DRHP, the project title itself was IFA 2047. So we continue to play a role. In fact, personally, for me, it's a mission that we say that in the next 20 to 23 years, Turtlement as a company should play a key role in driving insurance for all. And the government is firmly driving that key developmental goal. And we believe, we being the sort of ecosystem providers from both tech and distribution point of view, there is a lot to benefit for companies.
Okay, Dhirendra, everything is hunky-dory right now from what you see, right? You don't see anything which could go wrong. But if you as a company are tracking one or two important aspects which could actually derail your aspiration from the guidance that you've given for FY27, what would those one or two monitorables be according to you?
Well, I can't think of anything. We are entrepreneurs. We'll figure out if there is any challenge. We'll figure out some way to solve that challenge.
Dhirendra, I'm sure investors want to hear, right?
Right. Yeah. So I would say, see, any technology challenge that comes up in the sense that there is a new development. We know AI initiatives that are being taken where advisory role can be played by an AI a platform. We are solving it by creating our own solution for it, ensuring that there is an advisory layered with AI that solves for that problem. And in the near term or in the next few years also, we will see significant sort of operating benefits that could come from AI. And Turtlemint believes, because it's tech first company, we are moving towards AI first company, we should be able to get the benefit of the new AI wave that is coming in.
Got it. So lots to watch out for. And the stock is skyrocketing at the day's highest levels as you speak to NDTV Profit. But thank you so much for joining in. It's always a pleasure to speak to you as well. But moving on. Anupam Rasayan, let's pull up that one on the screens and see what the reaction looks like in today's session on the back of earnings. The stock is down 0.5% in trade. Overall, revenues have grown 35%, EBITDA up 31% as well. And the PAT growth trails on the back of higher depreciation. Vishal Thakkar, Deputy CFO at Anupam Rasayan, joins in. Vishal, thank you for the wait and speaking to us at NDTV Profit. Help us understand. First up, you've indicated interest in acquiring an API asset. How critical is this API manufacturing for building an integrated pharma platform that you're watching out for?
Yeah. Hi, good morning. Thank you for getting us on your channel. And see, if you look at individually itself, Bliss is a very, very, very strong company and it is growing well. And we believe that there is a lot of growth levers that are there with Bliss and where we can help them also grow and we can also grow with them. However, we are more in the KSM side, they are more in the formulation side. So if we have API asset in between, then we have a full platform to offer. Like if you see the way the Anupam has approached it, that we have a very organic, agro platform. With the acquisition of Jayhawk and Tanfac, we have been able to offer a very strong platform of polymers and performance materials and EV and semiconductor industry. And this will create a third platform, which will be a pharma platform where we'll be able to offer right from the KSM up to a finished dosage product, and then that API asset will be a piece that would be solving for the complete puzzle. So yeah, it will be an interesting growth platform that we will be able to create from there.
Right. So Vishal, would we be actually watching out for an acquisition in this space from an Anupam Rasayan then?
See, that I think today is a little early to say because of very simple reason that I will tell you that the Bliss itself has its own growth trajectory. Anupam has a lot of value that can add to the Bliss management also. And then the last one that I have to talk about is that we'll sit with the new management. These are our going in hypothesis. We'll go with the management once the consummation of the transaction is done, and then have that conversation and see what we need now, what we need later, how we can dovetail it. What are the growth levers that we want to go first? What are the growth levers that will go later? Do we want to acquire? Do we want to do outsourcing contract? Whatever. So those all things will be there. The point that we are trying to say is, individually, they have a growth plan, which is a good one. We have things that we can leverage and help Bliss grow. And the third one is that we have few going in hypotheses in terms of the platform approach, and that we will be building on along with the management there.
Okay, so in terms of Bliss pipeline, 62 molecules is what I'm seeing. How quickly can these be monetized according to you? And should we expect a stronger margin profile on the back of the integration?
Yeah, I think if you see what we have, see again, I will not want to talk too much on Bliss because they are a listed entity and we have not yet consummated a transaction. But what we have seen outside in, and that's a view I can give you right now, is that if you look at the quarter results, also they've done a very good job in terms of their performances and growth. Even the margins have been stronger, and we believe that the inherent business is a very strong franchise or a strong business that they have created. The product pipelines will continue to grow. The capacities are 1/3 utilized. So to that extent, there is a lot of headroom left out in terms of revenue and volume growth. Markets like US, Europe, and India are yet to be fully tapped. So that's another growth lever that we can see. And yes, we believe that with the higher growth and a better product portfolio, the margins should be on the upper side. But this is only our view going outside in. Once we sit with the management, once we understand that, we'll be able to make a better statement on that. And please be I would like to caveat that for now, because
absolutely, Vishal, point taken, and I'm sure investors will understand that as well, that this is coming in with a caveat. What about Jayhawk? 145 crore revenue contribution. How much can this scale in the next few years according to you?
So that in fact, Jayhawk we had talked about when we also acquired that there is a lot of headroom left out. In terms of existing capacity itself, there is a 40-50% additional revenue that we can expect from there without any new capex. With smaller capex or debottlenecking, there is enough headroom in terms of growth that we can see with Jayhawk. Second, if you look at it from there are a lot of low-hanging fruits there in terms of few debottlenecking projects or others, which will give us a good growth profile that we can see at Jayhawk. Also, very interestingly, what is happening that we have seen in the last quarter or two, which we have been going to the market and talking to our customers, a joint platform between Anupam, Jayhawk, and 10-Fac. And when we are saying we are able to offer a broader, larger, vertically integrated supply chain solution to our customers, the tendency in the buyers to give us a more strategic product, a better volumes with them, it is happening more and more, and that's really very very exciting, because standalone Anupam is gaining out of it, standalone Jayhawk is gaining out of it, 10-Fac is getting out of it, but as a portfolio, as a platform, we are really making a good offering, and that is really very very exciting. So to that extent, I believe that Jayhawk is really getting excited now.
Okay, so lots moving, Vishal, but we're completely out of time. Would love to do a detailed conversation as well, but we'll reach out to you once again on this one. So that's the management of Anupam Rasayan. Completely out of time, ladies and gentlemen, on this edition of Trending Stocks with Puneet, the team that put the show together, and myself. Thank you so much for watching, and lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA does not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms
Nifty witnesses a recovery as index trades above 24,300. Broader markets see mixed moves. Realty gains, metals shine, tech stocks, pharma as well as PSU banks sulk. SEBI chief says that the regulator is analyzing concerns around CAS, including expiry date data. He says it's too early to gauge participant response while tracking errors remain a non-issue. And oil prices volatile as fresh Lebanon fighting and Hormuz vessel attacks cloud hopes of a US-Iran deal. Brent stays below $89 a barrel while supply risks keep markets on edge. Voltas trades under pressure after weak margins overshadow strong air conditioner growth while UBS and Citi remain bullish. Nomura stays neutral and CLSA sees downside risks. PhysicsWallah reports a sharper first quarter performance with losses narrowing significantly while revenue grew 24% on a year-on-year basis. Total expenses also increased, keeping profitability under pressure though. Root Transmission and Molbio Diagnostics make strong market debuts, both listing at healthy premiums over their IPO prices. The listings reflect robust investor appetite for fresh market opportunities. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now. And when you talk about Nifty 50, just a slight bit of recovery that you're seeing coming in right now. And I say slight because it's just about 19 odd points under pressure right now, as opposed to, being below 24,300. When you talk about Sensex, though, you're seeing some weakness also set in when it comes to Sensex, so somewhere close to 200 odd points lower, which compares with somewhere close to 400 points at noon, so still a recovery at that. But when you talk about the broader market indices, that's where you're seeing some bit of outperformance, decisively so, because small cap as well as mid cap, both of them currently hovering in green, as you can see on your screens as well. Quickly talking about the sectors as well, you're really seeing realty, metal, India, defense and auto. Those are the pockets of resilience in an otherwise tepid market. So IT, FMCG, PSU bank, pharma, as well as media and rural sectors also still following the trend just a little bit, trading with some bit of pressure. When you talk about some of the other stocks that are trading with pressure, you do have something like a Schneider that's down about 11 odd percent, NMDC Steel, Bellrise Industries, some of those counters trading with some bit of pressure, but from within the Nifty 50 pack as well. You do have something like an Infosys, HCL Tech, ITC, TCS, Cipla, Tech Mahindra. So a bunch of your IT counters really trading with some bit of pressure coming in right now, and something like a Dr. Reddy's or something like an M&M, Tata Motors, PV also. Some of those counters also, just some bit of losses that you're seeing coming in for those counters as well. So largely that's the kind of picture that you have coming in for the markets. But that said and done, let's also move on and talk about the listing of the day as well. In fact, Molbio Diagnostics is the one that I'm talking about right now. And it's quite important to also take a look at what's happening on that front as well. You do have Sriram Natarajan, Executive Director and Chief Executive Officer, and Indraneel Borkakoti, President of Corporate Strategy, M&A, Investor Relations, joining us right now. Thank you so much, gentlemen, for taking time out and joining us this afternoon. First things first, now that you're listed, what are the targets that you have set with respect to the revenue growth? First things first.
Hi, thank you for having us. In terms of guidance, actually, we are not guiding currently. We would prefer to do that when we disclose our results on a Q1Q basis. But in terms of our business, we believe that we have the right pillars in place. We have focus on growing our business internationally. We're also going to be launching more tests on the TrueNat platform. And as we go along, our subsidiaries, both Prognosis and OptraScan, have received US FDA approvals, and Prognosis also received the CE-MDR certification for their digital X-rays. So internationally, our growth is something which we're going to be going to focus on.
Yeah, absolutely, and we'll take that. In terms of margins as well, I don't want you to be sharing specific targets, but in terms of expansion, is there something that you have in mind in terms of the key levers here when it comes to margins?
Yes, in fact, as we grow our business internationally and we launch new platforms, which our R&D team is already working on, we will see a positive impact on our margins.
All right then, and how large is the opportunity when it comes to molecular diagnostics in India? And over the next 5 years, what is the kind of opportunity that you're penciling in then?
See, molecular diagnostics is called the gold standard technology. And today the effort is to move all conventional testing to molecular testing because that's the most accurate in terms of predicting the correct issue. So from that point of view, the TAM for molecular diagnostics is already pretty high and it's growing as we speak. And we are in the space with a unique technology which can actually take this molecular diagnostics to the lowest levels of the healthcare chain. So that is our moat, and we are the only people who can do it right now for 30 to 40 different diseases. So we will continue to grow this area. But having said that, we are also getting into non-molecular and non-communicable disease area also. So we will see CS and different technologies for other kind of conditions. Again, the objective being to take it to the primary level. So that is our focus.
Absolutely, and fair enough, Mr. Natarajan. Thank you so much for helping us out with all of that color on that. Also, just wanted to try and understand a little more about TrueNat. That's now the core of the company as well in some shape and form. So what is the next phase of growth that you're outlining when it comes to this platform?
So TrueNat was always designed as a multi-disease platform. Okay. So as I said, we can do 30 different diseases already, of which today TB is the major contributor because there is a huge global TB elimination drive. And so a lot of efforts and funding is happening into TB tuberculosis, not only in India, but globally. But going forward, there are other diseases getting into elimination targets. One is the hepatitis B and hepatitis C testing, which we're already starting to see some activity there, and that's going to be a major growth driver. And the third is the HPV testing for human papilloma virus, which is the cause of cervical cancer. So there is a huge push to eliminating cervical cancer by saying that all women in the age group of 30 to 45 must be tested for HPV at least twice in their life to make sure that you are able to pick them if there are any abnormalities early on, even in pre-cancer stages. So these are going to be very huge growth drivers as we go along because the time, as you can see, are getting only bigger and bigger.
Absolutely, and I also just quickly wanted to try and understand about your global distribution plan as well. What does that really look like, and are you also planning to expand your footprint when it comes to that?
Yeah, so globally, we already have a very strong team. We are already present in about 100 countries where we have distributors and we have our own staff working in these places. So we started the export business only about 3 years ago. So it's already getting well established. So we see global expansion as a huge opportunity. And while so far we have been focusing on the LMIC as our target markets, but now we're also getting into the developed markets, Europe and US, as Indranil already said. We have the CE, FDA certifications in place to enable us to go into these markets. So that's going to be the focus area.
And are you then worried about competition coming in from some of the global diagnostic players as well, since you have such a strong footprint as well? Is that something that concerns you?
So our technology is quite differentiated from that point of view. So that way we have a very niche area for ourselves. So we don't have a great competition at this point of time, but going forward, our R&D will continue to develop and design technologies to keep us ahead of the curve.
No, absolutely. And, I just quickly wanted to also try and understand what your roadmap also looks like in terms of your revenue mix as well, because a significant proportion right now of your revenue is coming in from government and public healthcare programs. How are you then reducing some of that customer concentration risk? And is that something that you're at all worried about?
See, being in the public health area and where we are catering to populations who don't have access, I think public health will remain strong. So that is something which we don't see as a risk, actually. We think that it is a huge opportunity because globally, these programs are driven by on a mission mode, let's say. And so a lot of funding happens that way. But having said that, our future platforms which are coming up are also going to be strongly private sector oriented. So we will have a very strong private. We do have a private sector presence even now, but it will get stronger and stronger also at the same time. So we are looking at this as a much larger opportunity. Not that public health is going to be something which we will not continue to focus on, but we will also expand through other products and technologies into the private sector.
Very quickly before we let you go, right? You've mentioned earlier that you wouldn't be sharing any forward-looking guidance, but to that effect, just wanted to try and understand if there's any top 3 levers for growth that you can quickly outline for us by the way of your outlook as well, and if there's any color that you can add in terms of your outlook.
So in terms of our growth levers, we essentially have 3 to 4 key strategies. One is, as Mr. Sriram and I both mentioned earlier, is expanding our global presence. While we're already present in about 100 countries, our focus going forward will be a lot to do with the European and US markets as well. On TruNet, we have already received approvals for the sexually transmitted infectious disease platform in Europe. And 2 subsidiaries that I mentioned earlier, Prognosis and OperaScan. OperaScan received US FDA approval as recently as July. So that's going to be a big push for us into digital pathology. And as you know, US is the largest market for that. We would also look at our our radiology products, both in the US and European markets. And another area which we're focusing on is veterinary sciences. And that's where we've also got the US FDA for veterinary sciences and also European certification for entry into the veterinary space in Europe as well. So new areas will open up, new customer bases will get developed. And thirdly, we also have plans in terms of partnering with multiple companies. And as you know, we partnered with UE Life Sciences, which has this radiation-free breast health scanning device. Right. So that's an area also that we're going to be focusing on, oncology.
Right, so that just about brilliantly sums up everything that we've talked about thus far as well. Thank you so much for taking time out and joining us this afternoon. So there you go, that's the entire growth roadmap, and it's been a very strong debut as well, as you can see very clearly on your screens as well. Going forward as well, they've outlined some of those levers that you need to be keeping an eye on. And in terms of the concentration of the revenue also, they're saying that this is not much of a risk at the moment. And it's a very differentiated play vis-a-vis competition as well. But let's also move on and talk about something like Lakshmi Dental. In terms of the numbers as well, so it's the highest ever quarterly revenue that you're looking at in the first quarter, by the way. Growth driven by Dental Lab and aligner businesses as well. And when you talk about the strength coming in, the Dental Lab business has performed quite well. The revenues jumped about 23.5% on a year-on-year basis. When you talk about the aligner business as well, the solutions segment has grown about 28.5%. So very healthy double digits growth that you're seeing coming in that revenue as well. We do have Sameer Merchant, Managing Director and CEO Lakshmi Dental, joining us right now. Thank you so much for taking time out, Mr. Merchant, and joining us this afternoon. First things first, just wanted to get a sense of what you think about the first quarter as well. It does look like a good set of numbers when you talk about especially a couple of your segments, and the revenue growth has been quite healthy. But is this growth sort of sustainable right now? What is your view on that?
Firstly, thank you for having me. We feel definitely yes. I think Q1 has been a good start, and we are very confident as management that we will continue the growth trajectory that we have right now. We have put in a lot of initiatives in terms of digitization, in terms of Dental Lab, where we have created a lot of hub and spoke model in India. Our international lab business is doing very well. We have just appointed a new CEO for our US business. And our aligner solution business also looks pretty strong from where we are currently. We are awaiting a few more regulatory clearances. Once we have that, I think it will also do well. Our pediatric division has also grown very well. So that is also, we should hopefully we should have the CE certification soon, and that will also move towards growth part. So very confident, like we say.
Absolutely, and thank you so much for outlining that as well. So that does help us identify some of those key levers for growth going forward as well, and it's been a fantastic quarter as well. But when you talk about US operations, just wanted to try and understand if you have any growth targets set right now that you can share with us.
So on the growth targets, what we have done, I would say 14% for this quarter. The growth for the year is higher than that. We're seeing about 15 to 20% growth is where we are aiming for, and we are pretty confident that we should be able to do that number.
And so fair enough, I'll take that as an answer. But in terms of the international business as well, just wanted a little bit of more of a sense of the outlook as well. What's the kind of contribution that you're then penciling in over the next 3 years when it comes to the international business?
So international currently is about, I would say, close to 40% of our business. And moving forward, how we see is, international and India both are very, very strong market for us. So the mix may change a little, but again, time will tell every year of how things are moving for a US business, for a Europe business, and the other parts of the world as well. So for right now, if you ask me that number, hard to guess whether this 40 will become, 50 or 60 and domestic will go lower. We are bullish on both markets right now. So maybe the time after a year or two, we should be in a better position to tell you about the international versus the domestic mix.
Absolutely, and Mr. Merchant, that is a great guess as well in terms of directionally where it's going to be going as well. Just wanted to try and understand your plans for capacity expansion. And even when it comes to your growth pipeline, right, you do have some things that you've outlined when it comes to the aligner business. Just wanted to get an overall view in terms of your capacity as well and the kind of expansion plans that you have in mind.
So definitely we will need expansion the way we are forecasting growth. We will be adding more capital machineries, hopefully a newer facility as well that we have just pushed for a land acquisition. So the goal is there that we should be able to expand in the next 3 years, like based on our growth of 15-20%, we should be able to create that capacity for us to do. Right now, we are probably close to our capacity utilization. So in the next 3 months to 6 to 12 months, we will be adding machineries to build capacity, and then hopefully after that some more expansion to increase our capacity as well.
No, absolutely. And anything that you can share with us in terms of the Palghar capacity expansion as well? Is there anything that you can talk about when it comes to that as well? Because that's also quite interesting in terms of the facility that can really support at nearly 3 times the current scale.
Yeah. So it's still, we have just started that process. So maybe too early for me to say something on that. But I would say we have just started, signed the letter of intent, and post that, give us some time, and maybe in 1 or 2 quarters, we should be able to talk more about that.
Absolutely, and we look forward to that conversation, Mr. Merchant. But, just also wanted to try and understand the outlook when it comes to your dental and aligner business. You've talked about it some bit, but in terms of the kind of growth that you're expecting in both of these segments, because they've been quite the tailwind when it comes to your Q1 numbers, anything that you can share with us in terms of growth targets then?
So I think overall, we are pretty pleased with how things have shaped up. And even moving forward, if you see the dental awareness in the country is not going down. The only way the dental awareness is going is upwards. The same thing, at least being in the industry, what we saw pre-COVID and post-COVID, a huge difference in terms of awareness. Today, people are more aware. I would say the younger generations are more aware of the word aligners. When you talk to them about fixing their teeth, they know what an aligner is. The kids in the school are getting dental checkup camps, dental awareness camps. So I think the holistic scenario for India in terms of dental space is extremely good. I feel we feel as management for the next 10 to 20 years, this category is going to get much, much, much bigger.
And goes without saying that is another added tailwind for you guys as well. Thank you so much, Mr. Merchant, for taking time out and joining us this afternoon. So there you go, going to be moving from strength to strength. That's the management of Lakshmi Dental, talking about their numbers, but also more importantly, their growth targets. It's actually their segments that have been performing well, that is dental and aligner businesses, where they do see growth also coming in. and even in terms of capacity expansion in international business, quite the healthy targets that you're seeing them share as well. But let's also move on and talk about the RBI that has advanced the FCNRB deposit mobilization deadline to August 31st from September 30th. Stronger than expected response is one of the key reasons that you're looking at here. But let's also get in Piyush joining in with all of those highlights and some of those key factors as well, which may really be behind this particular decision, Piyush.
That's right. A couple of factors that influence the RBI's move to actually cut short the FCNRB deposit mobilization swap window by 1 month. First is, of course, the INR. When the RBI had taken these measures, INR was under a lot of stress. It actually touched almost 97 level mark versus the US dollars. So the RBI had come out with the FCNRB deposit scheme, saying that they will provide for the 1 to 3 year fresh FCNRB deposit. They will provide for the hedging cost, 3.5% not hedging cost. Now, since then, the initial flows which were expected were around 65 to 70 odd billion dollars. But like RBI mentioned, there has been an encouraging inflows. On August 12, the banks had already raised 53.2 billion under the FCNRB scheme, and if the scheme were to go on till September, some guesstimates are that it could reach as high as $100 billion. Now, we must be aware that even on the 70 billion expectation that inflows will come, almost on an annual basis, $2 billion of hedging costs will have to be provided by the RBI. So the hedging cost was one main reason that they may have cut short. Second is also the rupee, even as high inflows have come in, the rupee has continued being in this 95-96% range, because essentially the RBI has a net short forward position book of around $100 billion odd dollars. So INR actually has not moved that much. Now we have also seen, after 3 years, when this scheme closes, the amount, because RBI has taken this USD deposits and upon maturity they will have to repay, so there will be a shortage of US dollars then, and the rupee could see some sort of impact. And finally, excess leveraging as well. Some foreign banks are offering up to 29x leverage, so that is also a cause of concern, and hence the RBI has moved to cut short the window.
Perfect. Thank you so much, Piyush, for joining us with that entire analysis as well coming in terms of the RBI and the FCNRB window as well that's really closed in. Right? Let's also move on and talk about copper as well. And that's why you're seeing quite the surge come in. Prices are close to record high levels when you talk about LME copper. It's nearing the January peak as well. And you're looking at that 16% gain, quite healthy this year that you're looking at for copper as well. Lots of factors to really talk about in terms of the US tariff decision, or the US stockpiling or LME inventories for that matter that you're looking at when it comes to copper. Also talking about oil as well, let's also quickly pull up what oil is up to, because you do have Brent remaining up over 45% this year as well. Right now, of course, below those $89 a barrel level, that's Brent for you. Some bit of pressure also trickling in terms of WTI, and $81 a barrel is where you're seeing that at as well. But let's also quickly move on in terms of the factors. So it's the Hormuz attacks that you're looking at, Lebanon fighting that you're looking at, and Iran tensions, of course, top of mind when it comes to oil prices. When you talk about gold, though, you're looking at gold extending a 2-week winning streak and trading close to $4,400 an ounce, gaining nearly 1% as well this week. In fact, we do have Anush Gupta, who's a commodity expert, joining us on the show right now. Lots to talk about, Mr. Gupta, right now. First things first, I'll start with copper for a change, because it's some healthy gains that you are seeing coming in for copper above and beyond those double-digit gains thus far this year.
We have noticed that copper prices increased sharply and almost tested the January high, or you can say that this year high, because the supply concern is there, and even we have seen that many economies are holding copper for the long-term perspective. Particularly China is holding the copper. That is positive for the copper price, and even we have seen that almost the war is going towards the end, and the demand of industrial metal is looking positive. That's why even the inventories are lower on LME. So that is also positive for the copper prices. Due to this, we have seen the sharp rally in copper prices. Not in copper, even other metal like zinc is also rallying towards the upside.
No, absolutely. And speaking of other metals, let's also quickly talk about precious metals as well, because gold also looking quite attractive, extending some of that rebound as well right now. What are you looking at in terms of price levels, and what is the kind of momentum that you're expecting to sustain when it comes to this precious metal?
Currently gold is trading around $44.04 per ounce, and silver is trading above $65. The falling yield and also the low, the expectation of higher interest rate in the upcoming Fed meeting, so that the providing support to the gold and silver prices. Fed is, if we check the Fed interest rate meter, it's suggesting that 33% chances of higher interest rate and 67% chances of the stable interest rate. So these the factor is providing support. Even we have seen dollar index is correcting below 100. That is also providing support to the gold prices. And even central banks are also adding gold in their portfolio. So that is the supportive factor for the gold. So and even in last week we noticed a positive trend in gold and silver, which is following this week also.
Yeah. No, that positive trend is really reflecting through in terms of prices. But just quickly talking about oil as well before we let you go, in terms of the momentum, do you expect it to be on the positive side or on the negative? Because the market is frankly confused right now.
Definitely, we are not expecting any correction or any big rally in crude prices. We are expecting crude may trade between $78 to $85 per barrel, because there is a mixed news. Donald Trump is saying that Strait of Hormuz in his under arms, but Iran is saying that that will not happen. So this is almost a big news, mixed news kind of thing. And even both are on a question that when they will discuss on their the talk. So I think that will providing mixed kind of trend for the crude prices.
Yes, got it. Thank you so much for taking time out and joining us this afternoon. It was a very quick view coming in as far as copper, gold, as well as oil are concerned. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA does not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law, of being elected?
Because being a political science student, by the way, I am also interested in much in cephalology. I have studied little bit cephalology. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepted in politics. So it's not my cup of tea.
I'm going to ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said...
No.
Man lo.
Absolutely no.
Because the whole system has been known to be.
Absolutely. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
Welcome. You're watching NDTV Profit. I'm Mahima Vajrajani, and the IPO that's going to come soon is Tempson's Instruments India Limited, and we'll try to talk to the management as to what the IPO is going to be about, what the company does, what the growth outlook is like for the company. And we're now joined by Vinay Rathi, who's the managing director of the company, and Aryan Rathi, who's the lead global sales at Tempson's Instruments India, joining us now. Welcome to both of you, gentlemen, and a very warm welcome, and all the very best for the IPO. Before I start doing the interview, I think the first question that I'm going to take up is with you, Vinay, and I'm going to ask you about the biggest growth opportunity, because there's a lot of things that you guys are doing. You operate across temperature sensors, electrical heating, specialized cables, etc. Which of this segment do you think is going to augur growth for you in the next leg? What is the mix going to look like?
So Mahima, the thing is, we have been growing in all the three segments, be it temperature sensors, heaters, or even cables. And we are majorly focusing on the heavy industry segment. But now we are working with a lot of OEMs, and be it like the exhaust heaters and some special fuel cell things and other OEMs. So we see a good opportunity in all the three segments.
Okay, all right. In terms of what differentiates Tempson's from global players in terms of temperature measurement and sensing market, just wanted to get more sense on this one. How is it that your products differentiate themselves in terms of where competition stands? I don't know if you can help me answer that.
Mahima, the thing is, one of the biggest differentiator for Tempson's is the R&D and the new product development, which differentiates us, and also the global reach. So we are backed with a strong R&D team and a global reach with presence in 6 countries, including India. So that is what is the biggest differentiator for Tempson's. The global reach, working with different OEMs and end users. So that is the major thing.
Your revenue has grown, strongly in the recent years. How sustainable do you think is the growth from here on? What is the CAGR growth that you're expecting? And in terms of the key levers for margin expansions, what will they look like for the next 2 to 3 years?
The thing is, we have been working in the heavy industry, so there's a good growth in the capital market. So we will be growing according to that, and plus there's a new addition of new kind of customers, new kind of products that we are focusing on. So we expect the similar growth what I've been having in the last years to continue. Also the margins we expect in the similar line what we have been having in the past.
Okay. This, just a part about the OFS, because a significant portion of IPO is going to be OFS. Just wanted more rationale on this as to why has this been chosen, and because a large part of it won't be used in the growth of the company. So give us more sense on that.
So Mahima, the thing is, the company is having enough cash and things from its own profitability, so that would be used for the growth of the company. Also, a part of the offer is being used for the capital infusement in the newer projects what we are adding. So we see that the cash what we have and what we will be generating would be enough for having the growth opportunities for Tempson's.
Also to add on to that, especially the offer for sale part, that is for the non-executive partners in the business. So the core executive group is not selling any shares, and we remain committed to the company for a long.
Well, that's the management of Tempson's Instruments, a pretty interesting company we'll be tracking, especially its IPO journey. But let's do a short market check and show the recovery which has happened in the markets. If you can just pull up the Nifty and Nifty Bank, a smart technical recovery coming in. And I would like to point out we are nearly there when it comes to Nifty turning green as well. Nifty Bank, let's pull up the chart, and also the small cap.
index that has actually been doing well all throughout the day's trade also. Yes, you can see Nifty Bank is in the green. Nifty small cap doing really well and a good recovery coming in as well. And largely looking at the mid cap also, the story remains the same. But of course, earnings season is on, and now we have an interesting company, Mufin Green, which should be in focus. A stable asset quality and a sustained AUM growth has boosted the numbers. The company saw good expansion coming in, especially from salary Saathi expansion segment. Now we have Gunjan Jain, the CFO of Mufin Green, with us to talk us more about it. Hi Gunjan, it's always a pleasure to have you with us at NDTV Profit. What are the key numbers to track in this quarter and how was the performance?
So the performance is very good. We have reached an AUM of 1600 crore and it is visible that there is a year-on-year growth of 341% on a console level as compared to June 2025. So the company, since we have pivoted towards the digital products, which include salary Saathi as well as the mediclaim premium financing. So now the company is growing at a very good stage, and where the borrowing cost, the credit cost, and the OPEX cost is reducing a lot. That is why we have seen a good PAT number of 14 crore and 18 crore as a PBT for the quarter ending June 26.
Right, and Gunjan, let's understand the product mix, how things are going to pan out going ahead in the future. Which vertical do you think will have the highest growth, at least in the next 12 to 18 months?
So next 12 to 18 months, our primary product will still be the mediclaim premium financing, where we are having the multiple integrations going on. So we are expecting a good AUM of somewhere around 1200 crore by end of this financial year, and particularly mediclaim premium financing. And in salary Saathi also, we are having a lot of discussion with other states as well for the integration. And with the existing states of Rajasthan and Assam, we have already built an AUM of 70 crore, which we are expecting to expand with a minimum of 3x by end of this financial year. So these two will be our primary products. Apart from that, we are still in green space, where we are dealing with the retail as well as wholesale space, and the corporate lending is there. And since the management is keen to increase the digital lending, we are focusing on multiple other products which will be live soon.
And Gunjan, apart from these products, the AUM growth was also on the higher side. That was around 69% on a year-on-year basis. Disbursements also went up. Both of these numbers, what are we targeting at the end of FY27?
So we are targeting an AUM of somewhere around 22 to 300 crore by end of this financial year. Target is to double X this AUM by financial year ending 2028.
And Gunjan, what will be the timelines going ahead for the salary Saathi portfolio? There's a discussion with almost 6 governments, if I'm not mistaken, with the MOUs. So is there any timeline for it, if you could share with us, Gunjan?
So timeline, as you have said, we are also going to have integration with six state government. But yes, every integration usually takes 9 to 12 months. So we are on the track. And yes, by end of this financial year, we'll be adding few more states.
And Gunjan, speaking about the climate financing disbursements, that has actually come down over the last 3 quarters. I'm just checking the numbers. Any stress signs coming in your portfolio in this segment?
We at present also, if we want to disburse n number of amount in this particular state, we'll be doing. But yes, since we are having, so for an NBFC, the fuel is the funds. So if the funds is available with a product where we are having negligible credit cost and the negligible OPEX, and the product where we are catering to the e-rickshaw drivers, where the OPEX is very high. So sensibly, we are diversifying toward digital products. Yes, we are disbursing to the green segment, but as per our revised credit policy, if the borrower is having the banking history and everything, then only we are funding. In that particular credit scheme, if n number of multiple crores of disbursement can be done, but it should fulfill our credit criteria. So that is our strategy for the green financing going forward.
And just to ask a little bit more on this space, what's the EV and solar financing outlook looking like from these levels?
It will be on a total percentage level, it will be lower as compared to the previous. Like earlier, it was 80% green. Now it will reduce to somewhere around 25-30%. And going forward, it will reduce a lot. But we'll not stop the green funding. But considering the growth in the EM, the percentage will reduce.
Gunjan, speaking about the operating expenses, they have declined quite considerably, on a year-on-year basis. Can the company maintain this operating leverage? Because is this going to continue going ahead? And if yes, then the margins go up, right? So I just wanted to understand on that.
Yes, for sure it will reduce because earlier we were having the employee base of somewhere around 500 plus employee. At present, we are having employee base of 350 only. That is only because of the reason we are dealing with the digital products. Over there, the techies are required. Apart from that, few operation team is required. Earlier, we were having the field staff who were taking care of these e-rickshaw and auto drivers. So, considering the reduction in that particular portfolio, that employee cost is starting reducing, and that is the reason our OPEX is also reducing.
Interesting. And the last question I would like to ask you is, of course, Gunjan, on the funding cost reduction that's expected to come down because there was a ratings upgrade also. So what benefit on cost of funds we can expect, for the company?
So till date, we have onboarded 3 PSU banks: State Bank of India, IOP, and Union Bank, and we are in talks with 3 most PSU banks. So once these will be onboarded, our cost of borrowing will reduce for sure. Plus, our company is eagerly looking for DA transaction as well, and we are like we are open with all types of borrowings, from the PSUs banks, from the NCDs, from the PTCs, DAs, ECBs, everything we are open. So there will be a mix of each and every borrowing, but yes, the ticket size for the PSUs for sure will be higher as compared to other lenders, and this will help us in reducing the borrowing cost overall.
All right. Thanks a lot, Gunjan, for taking out your time and giving the views on the company and the industry as a whole. It's always a pleasure to have you with us at NDTV Profit. Looking at the stock also, not doing much. It's largely flattish from our conversation when it started. Slight increase from the day's low. Stock is up almost 1.3% as we track the growth trajectory. But right now, let's take a small break and we'll continue just after a small time.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
A new Nepal, new possibilities. A new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue 27th August, Kathmandu, Nepal.
Welcome back to Small Cap Buzzers, and now earnings season is on, and now we have a new management, that is BMW Industries. The company is in focus after delivering its Q1 numbers. And to understand the company's action plan and guidance for FY27, we are joined in by Harsh Bansal, the MD of BMW Industries. Good afternoon, Harsh. It's always a pleasure to have you with us at NDTV Profit. And the numbers largely looking a bit mixed right now. I just wanted to hear it from you. How are the overall numbers looking like? And now it seems like Bokaro is also expected to start generating revenue from the second quarter. Harsh?
Hi, thank you so much for having me. Yes, we are eagerly looking forward to Bokaro starting revenues. But before that, quarter one is generally tempered. So if you compare it year on year, I think we've done a fairly decent job. Of course, on a quarter to quarter basis, it's softer, but on a year on year, I think it's a fairly decent job. We remain on track on utilizing higher capacities, operating leverages are good. Capex in terms of Bokaro is on track. And so, yeah, we're looking forward to starting the revenues from there this quarter.
If you had to just get the additional benefit from Bokaro complex, I'm assuming this can happen in FY27. What kind of guidance we can look for the margins or the revenue, say at the end of FY27, FY28?
So we've typically given a 75% CAGR between 25 and FY28. We stick to that. And on a EBITDA level, about a 45%, at PAT levels, about 40%. This is between FY25 and FY28. So we remain committed to that, yeah.
Right. And Harsh, because of this Bokaro expansion, there is an increase in the debt. Just wanted to understand how you can leverage it down. What would be the ratios which you'll be looking like, comfortable for a company like yours in the expansion mode in the debt equity segment?
So on the, at peak debts, we anticipate that by FY28, FY29, our peak debts are going to be in the range of about 850 crores. And the balance sheet is actually built for that. We will start to draw down our working capital limits a little bit, but starting from FY27, our debt will start to get paid down. So we are fairly confident and on track for that.
But of course, the finance cost will be an impact would be there at least for FY27. But pipes and tubes segment, Harsh, I just wanted to understand the utilization levels are low. It's only 40% right now. When will these utilization numbers drive up? Is there any seasonality impact which we need to share?
So if you look at it historically, I think, over the last 3 years, we have increased our capacities from about 200,000 tons to almost 750,000 tons. So this is just the ramp up effect. If you go back a few quarters, you'll see the utilizations were about 20 to 25%, where we are up to about 40% now. And by FY27, our estimate is to be about 65-70%, which is the stable state for pipes and tubes here.
Fair enough. And the CGL utilization, that stood at 65%, but the revenue saw a decline on a year-on-year basis. What kind of outlook we can expect, Harsh, going ahead?
So on an annual level, we expect it to correct to, again, about 80 to 85% and meet the revenue numbers. So that's not an issue. There may be some carry forward effects. Of course, the first quarter, higher cost of energy, gases played a part in that.
Right. And Harsh, does this impact continue in the second quarter also because of the elevated crude prices which we have seen and the expenses which are hitting, or is there some correction at play in the second quarter?
I think a lot has been corrected, partly on the supply side, partly on the demand side. So we expect quarter two to be much more in line with historical numbers.
Yeah. Harsh, just apart from this, what are the capex amounts, if you could just revise it for us, and will it be only via internal accruals or any fundraise on the anvil?
So we are spending about 803 odd crores in Bokaro, of which close to 550 crores is debt. The balance comes from internal. Of this, as on the end of June, we've already spent about 350 odd crores. we are looking at, we are open to raising capital in the future. Let's see how things go.
And Harsh, if we had to just divide the revenue profitability mix going ahead, one side you have your existing business, and other is from Bokaro as well. How will that play out in the next 2 to 3 years? If you could give me any kind of a ratio on that.
So, traditionally we've been in the contract manufacturing space, and what you see in the balance sheet currently is basically the fees that we derive from the manufacturing. Going forward, we will be operating a blended business model. Part of it comes from the contract manufacturing, while the other side, we manufacture proprietary under our own brand. Where, of course, the top lines are much greater because of the effect of raw material and everything else. So, I guess about 20 to 30% would be the margins or the numbers from conversion, and about 70 to 80% would be coming out of Bokaro in terms of own sales.
Harsha, one quick short question is the company recently qualified for the PLI scheme for coated steel till 29. Any other PLI schemes are you trying to attempt? Because there's a wide variety of products, which I was just checking your investor presentation. So any view on that, Harsh?
I think we are fairly focused in terms of doing what we have already committed to do. That's not to say what the future brings, but as of now, I think we are going to concentrate on the coated, alloy, non-alloy part of the PLI.
And I always wondered, Harsh, the R&D part of your business, largely there are a lot of special alloys which are there, a lot of your peers are talking about it. Is there any new value-added products, which you are expected to launch, or maybe in the areas in which you think there might be a good launch here?
So one of the things that we are particularly excited about going forward is a product called ZAM, which is the zinc, aluminium, magnesium. In terms of life, it offers a substantially higher lifetime guarantee at a very, very competitive pricing. So I believe the authorities have very recently approved it for use in solar. So that's the one product which we are very excited about going forward.
Going ahead, any kind of benefit expected from the anti-dumping duties which the government is talking about? And what I'm hearing also from the industry spokespersons is there might be likely some more additions might be coming in. So is there any view on that, Harsh?
So I think, we will remain very, very competitive steel manufacturers as a geography. And since we will be operating in the delta, which means that, if raw material prices for us, which is HR coil primarily, if the prices increase, we continue to, play on the delta. So net effect for us is very, very limited, if any.
Fair enough. Thank you very much, Harsh, for taking out your time and giving your views on the company's growth prospects and also on the industry as a whole. It's always a pleasure to have you with us at NDTV Profit. And just looking at the stock also, not doing much. Stock is at least in the green. Stock is up almost 0.8%. But now from secondary market, let's shift focus to primary markets as well, because IPO listings have been really strong, be it Molbio Diagnostics and Booth Transmission after a really strong D-Street debut. Both of them listed at a premium. We have Varsha joining in with more details. Varsha.
Well, let me start with Molbio Diagnostics, wherein it has we have seen 21% premium. When it comes to this company, IPO was subscribed 70 times and also this was led by QIB's demand, and of course, NII category was also subscribed 50 times. Retail portion, although, was subscribed 13 times. On to about this company, they make portable PCR testing machines that can detect disease easily. They also have their flagship product TrueNet, which allows molecular testing outside large labs. Well, they're gonna set up infrastructure for research and development facility, and the funding will also be used to purchase certain plant and machinery, and of course for the general corporate purpose. So overall, 21% premium when it comes to this company. Talking about Booth Transmission, where a strong debut is what we have seen, 38% premium. IPO size under around 3,000 odd crore. Well, they are into wiring harness, electronic sensors and controllers, and the most of the money will also be used for debt repayment, then for investment in certain subsidiaries, and also they're going to set up new wiring business where money will also be utilized, and of course funding inorganic growth. So both of the companies, if you see, have seen a decent listing, 21% when it comes to Molbio Diagnostics and 38% when it comes to Root Transmission.
Thanks a lot, Varsha, for that detailed analysis on both of these listings. But moving on from the listings, let's focus on Zaggle. The stock is trading under pressure on the back of decline in net profit and EBITDA margins in the first quarter. Jasmeet is here with what's weighing the stock. Jasmeet, this has been an absolute sell-off in this counter, and this has been a wealth destroyer as well.
Well, sure, as rightly said, now this particular counter we have seen in the past, they've acquired a lot of entities, and that's something that's weighing on the overall performance of the Q1. Let's quickly understand about the stock performance. Well, the stock is currently at 160 odd rupees, which is below its IPO price of 164. That's one point. Second point, the stock has tanked nearly 20 odd percent in the lower circuit and roughly down 60% in last 1 year, and also down 61% from its 52-week high of 417 level. So we see a huge downtick coming in terms of the overall performance of this particular counter, and the stock has been falling over past few months as well. Now, if you look at the key reasons that did not work for this particular counter is the numbers. We see the revenues down about 30 odd percent, while even the EBITDA and net profit suffered. And the key reasons why the numbers are not great was the first one, increased cost. So what happened was in the previous quarter they acquired few entities, and the additional cost of the acquisition weighed on the Q1 numbers, and that's what impacting the margins as well as the profit. The second main reason is the overall revenue that was expected to come from the acquisition did not turn up in the Q1, and it's postponed to the Q2. So that's adding another degrowth, another hang over the particular counter. If you look at the third key reason, what's impacting the stock performance is the overall higher expenses. The management has changed the accounting principle in this particular counter, and they've rechanged the earlier capitalized cost to P&L cost. That's impacting the margins again. Now further, lastly, we also note that the increment was something which came in this particular quarter. That's impacting the overall performance of the particular counter and impacting the margins and the bottom line as well. While the founder of the company also comes out and makes a comment stating that this particular quarter was an inflection point for the company, and company has been profitable over the last 10 years, and this will be a growth changing year going ahead where it would focus on consolidation.
Thanks a lot, Jasmeet, for that. And of course, concern is there definitely in the counter. Interesting story, right? So that's all, folks, we have in this edition of Small Cap Buzzer. Stay tuned to Ask Profit. Afternoon edition comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act suspend licenses or cancel license or improvement notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA did not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law, of being elected?
Because being a political science student, by the way, I am also interested in much in cephalology. I have studied little bit cephalology. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepted in politics. So it's not my cup of tea.
I'm going to ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said, "Man lo."
Absolutely no.
Because the whole system has been known to be.
Absolutely. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100%.
New rules of engagement, ambitions crossing borders, voices refusing to wait their turn.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and get to all your stock-related queries. So do start sending those in on the numbers that are flashing on the top of your screen. Also call us on the landline number and give us a call, speak to our guest on those queries as well. But just want to highlight three key important points. One has been the recovery that we've seen on the Nifty 50 today, about 100 points from the lows. So we're now above the 24,330 mark. Just about 10 minutes back, we hit the day's high of 356 on the index. And that's, let's look at the contributors now if we can on the index too, because while in the heat map you've seen just roughly about a 2 to -2 to +2 kind of a move, the main contributors are largely not individual names today, apart from Infi, which is having a big bearing on the Nifty 50 right now in terms of contributors. ITC is the other one. You're seeing Reliance, Axis Bank and Hindalco now performing the most positively, at least for now, on the Nifty 50 as well. The heat map also shows you a similar perspective where there has been select selling on the Nifty IT as well as on the PSU banking index, while the auto index has seen some decent buying in today. And let's look at the sectoral heat map also very quickly if we can, because these individual movers we spoke about, the Nifty metal, media and realty are those three counters that continue to do well. Also the advanced decline ratio, because it's been continuously a story of broader markets, and that has been the picture even in today's day. So you've seen declines come off actually from the day's high, but now yet again that gap starting to form between the advanced and declines line and the BSE 500. Before we start taking all the stock related queries as well, you've seen some good moves come on Uflex. We spoke to the management today in the morning edition of Ask Profit, and really strong commentary based on value growth that they saw. 20,000 crore revenue is what they're targeting versus 15,000 crore last year. Ipca Labs up 9%, post results continue to do well. Motilal Oswal, Finolex Cables continues to do well, so is Jyoti Labs, while Z Entertainment is up roughly 4.3%. On terms of losers, you're seeing a 2 to 4% kind of move, but not a runway. I think only Schneider Electric is one of those counters that continue to be under pressure today. If we can pull up that counter, stock was down 11% a couple of hours ago. If we can pull up Schneider Electric as well as Zaggle, those two counters were buzzing on the back of very weak set of numbers. For Zaggle, stock was down in lower circuit, continues to be so. And interestingly, this is below the IPO price of 164, which the company set in September of 2023. So post hitting almost 450, 500 odd levels, there's been a steep correction of almost 60% from the highs on Zaggle today. But let's welcome in your stock related experts now. Rajesh Agarwal, he's the head of research at Om Capital, and Vishnukant Upadhyay, the AVP research at Master Capital Services. Gentlemen, both of you, thanks so much for joining in on this Monday afternoon, and take the first stock related query on SBI funds. Now, Arun from Kolkata wants to know if it's a good time to enter the stock, Rajesh, for the next 2 years. We've seen a good set of numbers in quarter one. Stocks now showing that though, Rajesh. What would be your opinion if it's a good time to enter?
Good afternoon, Puneet. Good afternoon, Karl. As far as SBI fund is concerned, I think it's a good stock to hold for a long-term horizon. The AMC is the space going to do well because of the kind of mutual fund inflows which we are witnessing, not only in direct in lump sum but also in SIP, and that's a good thing to go. SBI is one of the largest. It's the largest rather in the industry and doing very well. I would recommend even HDFC for that matter. These two are good EMCs to be in for a long-term horizon.
Got that view, and welcome to the show, Rajesh. The next one coming through on this query continues to be on Brainbees. A viewer, Sailesh Prabhu, actually holds these shares at 250 odd. Wants to know the short-term view of this one, Vishnu. Should he buy the dip? Stocks actually fallen from the price, but Vishnu, very good afternoon. What would you recommend on Brainbees?
Hi, Puneet. Very good afternoon. Hello, sir. Very good afternoon. In fact, stock has been in a downtrend, and currently it is trading very close to its a very good horizontal support. But yes, stock is facing pressure. So I would not recommend to buy the counter at a current juncture. Let the stock close above 222. In that case, one can go down for the target of 250. Not at current juncture.
250. Got it. Let's go across to our next caller now from Andhra Pradesh. Bharat is dialing for a stock query. Bharat, very good afternoon. Welcome back to the show. What's the query?
Good afternoon, sir. So I got IPO from 3 demat accounts, 2 transmission. Out of 3, 1 can be sold. What about rest of 2? I can hold or sell?
Well, Bharat, firstly, many congratulations. You are, I think, one of the luckiest investors that have called us today because of massive oversubscription that we saw. But still, you've got allotment from 3 different accounts. So congratulations for that. But Rajesh, let me come back to you. It's a very strong growth for this, auto ancillary company, though transmission listed today, up 35%. Should Bharat book out or continue to hold from his other 2 demat accounts?
It depends on his time horizon. If it's a long-term time horizon, by long-term I mean 12 to 18 months, one can continue to hold. Strong company, gave out good commentaries, and with the kind of new product expansion they are doing into new sectors, I think this company can give very good returns in the long term. Short term, there might be some amount of profit booking coming in here and there, maybe around 1200 or 1250 odd rupees. That's difficult to say at this point of time. But for a long-term horizon, yes, it's a good stock. Since the gentleman has got allotment in 3 different accounts, I believe, as he said. So what I would suggest is around 1250 odd rupees, at least book partial profit, at least 1 account you book and continue with the rest.
Got that view, Rajesh. And let's go across to Mysuru now. Mohan has a stock query for us. Mohan, a very good afternoon to you. Thank you for calling back. What's the query?
I just got Pine Lab 60 shares at rate of 160. Just want to know, can I hold or can I add the shares for long-term perspective?
From the long-term perspective, got it. What would you recommend here, Rajesh? Coming back to you on Pine Labs, he's just entered it as Mohan. How do you see the long-term prospects of this counter?
The stock has been lagging since quite a long period of time. It's just in the last a month or so starting showing some amount of momentum. The numbers have been started improving. For a long-term horizon, it's difficult to say at this point of time, although the quarter numbers were better. We have to watch 1 or 2 more quarters. But at this point of time, it's a hold for a target of maybe 170 odd rupees.
170. Hopefully, Mohan answers your question. Next one's on Tube Investments. Our viewer is holding these shares for the short term and wants to know, and this is Alan. Vishnu, what would you recommend here on Tube Investments? There is a good time to enter, or what's your view on the stock now?
Yeah, basically, the stock is currently trading below the key moving averages like 21 and 200. So technically, it is weak counter. But yes, for short term, or I would say for 2 or 3 days holding purpose, if stocks remains well above 2650, one can hold the positions for the target of 2850. But if stocks falls below 2650, then he must exit the position because technically it is not looking good.
Technically not so strong. Got it. The next one's an interesting one because Anil Nair, who's from Abu Dhabi, is holding on to a counter CIE India. That's of course CIE Automotive earlier. He wants to know about that he's holding shares at actually 300 rupees. Vishnu is mentioning that he's a positional trader but has been holding the counter for almost 3 years now. Shall he hold it further or is it a good time to take profits? Is his question, Vishnu.
Which stock can you please repeat?
Automotive.
India.
CIE Automotive India Limited. CIE India is the code, Vishnu. Stocks trading at almost 410, and within this last 1 year has been largely flattish. Were you able to pull it up, Vishnu?
Oh, okay. Yes. Correct. Well, so stock is consolidating in a very thin horizontal band of 422 on the higher side, while 406 on the lower side. It is consolidating just below, just above its prior horizontal bottom. So I believe for short term, yes, one can go long because risk reward is in favor. With keeping the stop loss below 400, one can go long. Immediate resistance aligns somewhere around 422, which if broken decisively, next resistance aligns somewhere around 435. So for a short term purpose, yes, definitely one can go long.
Got it. Well, let's go across to Gurugram now. Nishant has a stock query for us. Nishant, good afternoon. Welcome to the show. What's your query?
Hi Puneet, hi panel. I have a question on Cochin Shipyard. I have 60 shares at the average price of 1481.
Okay.
So I want to understand what to do with this counter and whether should I, keep it here or move to Mesgaon dock.
And Nishant, is this a short-term trade or a long-term one?
It's for 6 months to 1 year time period.
6 months, okay, got it. So let me go back to Vishnu then. Vishnu, for the next 6 months to a year on Cochin Shipyard, what's your view? Nishant's bought it at 1481.
Well, so let's first talk about Cochin. Cochin Shipyard is currently trading below a 200 exponential moving average, but the way prices are behaving from the lower levels, I'm quite confident that in days to come, prices will definitely, invalidate. It's a higher trajectory that is 1550. So yes, stock is looking quite good from the technical standpoints. Stop loss, one should maintain below 1368, while on the higher side with a decisive invalidation of 1550, stock will definitely head towards 1740. So yes, one can go long in our Cochin Shipyard.
Got it. The next question now coming in, and this is on Ashok Leyland, a stock that's reacting on the back of results. Our viewer actually has bought these shares actually at 133 rupees. So he's sitting on substantial gains. What you've also seen on Ashok Leyland is buying in the last hour or so. So stocks now actually at the highest point of the day. Rajesh, how did you see the Q1 earnings? There was of course some margin compression, but a much better performance compared to estimates, right?
Yes, it was better than estimate, no doubt on that. Margin compression, that was just because of raw material prices and the kind of economic scenario which is going on. The company is also into buses, EV buses and all, more supplying to CV also. So company is doing very well, but the valuation at this point of time, after the kind of run-up which we have witnessed in the last 15, 20 days, I think it's on a higher side. 185, 188 would be optimum target to book out at least partial profit.
Well, the next one coming through on Finolex Cable, it's a counter that's been on a dream run post results. So let's look at the 1 week and the month chart as well. Lalita is holding shares at 1208. Stocks, of course, at 1315. Let's look at the month chart, almost 30% now. Now, Vishnu, is her question being if she should book out right now or continue to hold?
I think he should book a partial profit, but in the remaining position, he should ride the winning trade this and maintain the trailing stop loss below 1125. I'm quite confident that in days to come, the stock is all set to extend the gain towards 1380, 1390. So book a partial position and stay invested with the rest position with trailing stop loss below 1130.
Got it. The other ones coming through on Samvardhana Motherson, another counter that's done well post results. Our viewer is holding shares at 112 rupees. So here again, massive gains on this counter. Asking the long-term perspective here, Rajesh, should he continue to hold? I mean, it's bought at very attractive prices.
Continue to hold, and if by chance it falls to maybe 150 odd levels, it would be a good buy too. Numbers have been pretty good despite the fact that US exports were not that good because of Class 8 trucks and all. But still, the numbers have been good. Order book they are setting at is strong. The company management commentary given after the results were very exciting. I think maybe for 1 year target would be around 185, 190 odd rupees. Continue to hold.
Some indication of that post Q4 earnings too. But as Rajesh highlighted, the commentary post Q1 has been stellar on this counter. But next one also is a very interesting one. Ishwar, who's from Kolkata, regular viewer of the show, wants to know, Rajesh, if Windless Biotech is a better pick right now compared to Sai Life Sciences because of the valuations of the latter. So he's trying to be a savvy investor here for the long term. Either of those counters that you have coverage on, Rajesh, and would you recommend that trade?
I'm sorry, we don't cover any of them. Both of them are not in our coverage.
Either of those that you like on the charts, Vishnu, as well, Windless Biotech, as well as Sai Life Sciences.
So basically, I'm quite positive on Sai Life Science, basically. But let's talk about the Windless Biotech. Technically, this stock has formed the inverted head and shoulder pattern, and decisively it is trading above the neckline resistance. So I believe the winning journey is likely to remain intact with a potential upside towards 1100, 1150 sort of levels, which is the target range of this inverted head and shoulder pattern. On the lower side, immediate support comes around 890, 880. So with a stop loss below 880, one should hold the position. One can also accumulate the stock at a current juncture with a potential target towards 1100.
Got it. Well, let's go to Bengaluru now. Prashant has a stock query for us. Prashant, good afternoon. What's your query?
Hi, good afternoon, Puneet. Thanks for taking my call. My question is on Bharat Electronics. I had bought 950 stocks at 410 and I sold it at 384, hoping that the stock will get to 360, 370 range so I can average and re-enter the stock at that level. But after my selling at 384, it has consistently gone up. So my question is to Vishnu, is the stock any likely to come to 360, 370 range so that I can buy my 950 shares again?
Well, Prashant, I know you've been writing to us. We've taken this query in the past as well, but I'll allow it this time. But Vishnu, you heard the query. What's your view on BEL now?
See, basically, technically stock is forming a lower highs kind of pattern. And recently the stock has gained some traction from the lower levels from 380 to 410, 30 rupees gain we have seen in this counter. And that's due to the defense theme is gaining, traction. Entire defense stock is, trading towards north. In fact, technically, stock is looking not very much positive. In fact, currently it is just oscillating in a proximity of 200 exponential moving average. So I believe, stock is currently in wait and watch kind of strategy. With the validation of 380, there will be a probability of further upside. And that upside should be containing around 440, 450. And I believe any decisive fall below 380 will take prices further down toward 360, 350. So you just keep this stock on radar and watch the levels. Any decisive fall below 380 will definitely trigger a selling pressure. As long as stock is looking, if stock remains well of 380, the stock is in buying position.
Correct. Well, let's now start the rapid fire round in this edition of the show. Vishnu as well as Rajesh, you know the drill. Keep your answers as short as possible. Madhav from Hyderabad wants to add KMC Specialty Hospital. There's a smaller name, Rajesh. I don't know if you have coverage on this, but any view?
Add.
Got it. The next one, and this one's a very interesting one from Mr. Rao. He's holding on to Azad Engineering at 524. I did write to him to ask him when did he buy it. No reply yet, but he's up 6x. Rajesh, should he still continue to hold?
One of the finest precision makers. Continue to hold.
Also, Rajesh, on Yes Bank, because Mr. Ramchandran has written to us, he's been holding the counter for 6 years actually at 24 rupees per share, and stocks actually come back to that level now. What's your view? Should he exit or still hold?
Numbers have started improving the last few quarters. Continue to hold.
The next one coming through, and this one's on Genus Power. Our viewer is holding shares at 320. Wants to know the technical setup of this one, Vishnu.
Genus Power.
Genus Power, yes.
Yeah. Hold the stock with a stop loss below 300.
Sorry, pardon me. The next one's on Bajaj Housing Finance. Viewers, E. Venkatraman is actually holding at 95. Rajesh, shall he add or average is his question?
It's surprising, despite good quarter-on-quarter numbers, the stock has not performed. It's a strong company. Continue to hold at around 80 odd levels.
80 levels, got it. The next one's from Koteshwar Rao. He wants a view on Moltech Technologies. Any view here that you have, Rajesh, by any chance?
No, we don't cover this.
Anything on the charts, Vishnu? Moltech Technologies, I know a very smaller name, not discussed too much with you on this one, but any view?
Yeah, one can hold the stock because the stock is trading above the all key moving averages. Stop loss should be placed below 165.
Next one's on Newland Labs. Bharat wants to add 5 shares right now. Would you recommend it, Vishnu, right now at the current price?
Yes, definitely. Little overstressed. Let the stock come down towards 22,000.
Saurabh is holding on to TCS at 2487, asking if he should hold or average, Rajesh, now.
If it's a long-term horizon, you can average.
The next one coming through, and this one's on Divi's Lab. Our viewer Devi actually holds at 7050. So in good gains right now, Rajesh. Should he still continue to hold?
Continue to hold, add on dips.
Next one's on on IKS actually. Viewer holding shares at 1695, Vishnu. Any view?
Yeah, technically one can hold a potential upside towards 1910 sort of levels. Maintain stop loss below 1800.
Our viewer, Buji is actually holding on to Tata Power and has been holding shares at almost 383, Rajesh. Can she still continue to invest?
A strong buy from our side. If it is a time horizon of maybe 12 to 18 months, one can even add.
Next one's on Gravita. Our viewer holding shares at 1845, and this is Narayana. What should he do, Vishnu, for the next 3 months is his question.
Yes, definitely. One can hold the account.
VM Industries, next one, Mahalakshmi has actually bought shares at 2075. Let's look at the 1 week chart of this one. Reported results last week. In a downtrend right now, but Rajesh, any view?
Very strong company. They are OEM suppliers to major two-wheelers. One can even add.
Next one's coming in on GE Shipping. Dr. Lavanya holding shares at 1560. Vishnu asking if she should book the loss now.
Yeah, basically, technical structure is looking weak, so definitely one should get exit from the account.
Got it. Well, that was the last question of the Rapid Fire as well as this edition of the show. Rajesh as well as Vishnu, thank you so much as always for helping us solve all the stock related queries over the last half an hour. Appreciate your inputs, but viewers, out of time on Ask Profit this Monday afternoon. Thank you so much for watching. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA does not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who is an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law, of being elected?
Because being a political science student, by the way, I am also interested in much in cephalogy. I have studied little bit cephalogy. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepting politics. So it's not my cup of tea.
I'm going to ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said, "Man lo."
Absolutely no.
Because the whole system has been known to be.
Absolutely. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100%.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV.
Hi, thanks so much for joining in. We're coming to you live from the NDTV Profit Suzlon studio. My name is Alex Matthew, that is Mahima Vachhrajani, and this is India Market Close. Let's take a look at how the markets are faring. And we've recovered quite a bit from the low point of the day. I think that really is the story. We continue to trade in a pretty narrow band though.
Yet another
Mahima.
day.
Yet another day. It's been several days, and all of last week you had a pretty narrow band. Of course, the benchmark Nifty 50 losing about 0.8% because 4 days in a row.
Correct.
This is the 5th day in a row that you're seeing red on the screen for the benchmark Nifty 50 hovering around that 24,325 mark. But really the story is when you pull up the intraday chart, and you will see that there has been a fair bit of recovery from the low point of the day. In fact, it's as much as 100 points or thereabouts, if I'm not mistaken. 226 was the low point of the day, 323, very close to about 100 points. And it'll be interesting to find out what led to this. Of course, one cohort of stocks has been under pressure today, and that is the Nifty IT. So pull up the intraday chart for the Nifty IT, and it continues to be at very close to the low point of the day. The index as a whole losing 1.5%.
Yeah, and that's the reason as to why we're seeing that drag on the Nifty 50 as well, because if we try to pull up the heat map and see as to what are the counters that are putting pressure, plus your heavyweights are also not doing anything.
Yeah.
And that's one of the reasons as to why we're seeing that range bound trend continuously. But there you go, all your IT names down there. Infosys down 2%, HCL Tech down 2% as well, TCS down 2% as well. ITC has been that one counter which has seen significant pressure. In fact, profit booking, the day it came out with its earnings, did see some surge coming in, but then since then it's down. Nestle has also been under pressure since its earnings have come out, but Tech Mahindra is also from the IT pack not doing very well. But on the flip side, you have Hindalco, which is leading with 2% of gains almost. I'm not sure as to when this rally is going to end, because it's been a significant rally for this one. Tata Steel, so all your metal names in fact are doing well. Also ONGC and HDFC Life and Axis Bank.
On account of crude, right? But Reliance Industries is just about 1/3% higher. HDFC Bank has not been doing too much.
Here.
ICICI Bank is just about 0.1% in the green. HDFC Bank flat. So therefore your heavyweights aren't doing too much. Pull up the contributors chart and you'll see what's moving the needle, and you won't see too big of contributors. Actually, Infi is the one big mover, right? If you put Infi and TCS together, then it's about 27, 28 points. But a bulk of that is on account of the other stocks in this list. Axis Bank, Reliance Industries to a certain extent are moving forward. But take a look at the sectoral heat map as well, and you will see a fair bit of red on the screen. But it's better than you did see in the morning, right? In the morning, you had just a few, 4 or 5 of the indices in the green, but you have metal that is leading from the front, gaining about 1.3%. Realty are doing okay. Private banks have actually made their way into the green from the red, and on the losing end you have IT, FMCG and PSU banks. PSU banks have been a bit of a laggard in the recent past.
That's true, and I think private banks have been the one that have kept the Nifty bank in check per se, but the mid cap 150 and the small cap 250 also.
Look at the individual stocks.
Individual stocks as well. The mid cap 150 is at least in the green and has recovered quite a bit from the day's low point, up 0.2%. The small cap 250 has also made recovery, but again, very range bound trades for both of these as well, and that's indicated in the advanced decline ratio as well. If you take a look at that, it's been a narrow range since the past 1 hour or so. You have, of course, slightly more declines versus that of advances, but quickly the BSE 500 and see as to what specific names. Yet another day of earnings action. You have Voltas, Easy Trip, etc., which are taking a knock on the back of weak numbers. Galaxy Surfactants also on that list. But on the flip side, you have something like a Uflex that has done very well. Management, in fact, did say that a 30% growth is possible going forward in FY27 as a whole. You have something like an Ipca Labs, which is also up 8%, and something like in fact, even your sugar stocks are doing very well, up 4%. Hindustan Copper is the other one which we're going to talk about in detail in the show today, putting a spotlight on why Hindustan Copper has been buzzing. But with that, Alex, what is it that you're watching out for right now in the markets?
Well, the key levels we have to talk about, and in recovery mode at this moment from the low point, this is something that we already spoke about, but the Nifty resistance range of 24,350 to 24,450 critical to watch for. We're trading well below that mark at this point, actually, or at the lower end of that mark. So therefore, that's a hurdle that needs to be taken out. For the Nifty Bank, the resistance range has been pegged at 57,600 to 58,000, and that's a pretty broad range. The support range for the benchmark Nifty 50 is between 23,800 and 24,200. It's a pretty broad range there as well. And the bank support is seen at 56,500, 56,100. Now, sugar, select metals and auto are seeing buying. You have IT and PSU banks as well as FMCG that have seen selling. We pointed those individual counters out to you. Yields have risen and they've weakened on account of the RBI shortening the deadline for FCNRB. And of course, that has had a bearing on the currency, or is expected to have a bearing on the direction of the currency as well. We'll pull that up for you in just a bit. But you've had a couple of listings today, strong listings at that. Molbio Diagnostics as well as Zoot Transmission, just another two in a list of stocks that have hit the Lal Street and given investors that have chosen to enter during the IPO process healthy returns on listing day. Let's get on board Rahul Sharma, Director Head Equity Research at Equity 99 Investment Advisors, as well as G. Chokalingam, who is a founder and managing director, Economics Research. Gentlemen, thanks so much for taking the time, and good afternoon to the both of you. I'll come to you first, Rahul, on the charts. And the recovery that we've seen from the low point of the day is certainly heartening, but we've seen a very narrow band for the benchmarks for quite a while now. What will it take for us to break out of this?
Good afternoon, Alex. Thank you for having me on the show. Yes, definitely indices are quite in a narrow range, and this range bound setup we have seen this playing out in last week as well. I think currently on charts, the 200 day of exponential moving average on the daily charts, as well as 100 exponential moving days. So the range is being limited to this. On the upside, clearly, if 24,400, or to be precise, 24,385 is a resistance which will be watchful, and on the downside 24,200. In this range we have seen the playing of this Nifty 50. Now talking about the Bank Nifty, which was like earlier doing really good, and we were getting support from PSU bank especially. It is also somehow range bound, and I think 58,000 or 58,300 levels is key resistances currently, and on the downside 57,000, which is somewhere near to its 100 EMA. So range bound setup is being quietly visible on both the indices, and I think little stock specific action will continue in coming days.
And if you're talking about stock specific actions, Rahul, what are the stocks that you're watching out for? What is it that makes it to your cut, and your top calls for the day?
Yes, Mahima, thank you. First of all, my selection is BHEL. It is typically technical setup which we are witnessing right now. In BHEL, on weekly charts, there is a clear classic breakout of a flag pattern on BHEL. So currently it is trading around 433. I think this setup might lead this stock towards 445 and 460 levels, which will be our target on the immediate basis, and stop loss should be placed at 420. Second selection is PVR Inox. The technical setup is good. Volumes are also picking up, and I think 1250 and 1260 levels can be easily watched in PVR Inox. Stop loss should be kept at 1165.
Okay, all right. So those are the picks that Rahul has on his radar. Mr. Oaklingam, a very good afternoon to you. I'll come to you. Largely we are at the fag end of earnings, right? If we take a look at the valuations for a lot of counters, still remain rich. And this is despite of the long time correction that we've seen. But any pocket where you are finding value right now that you would like to tell our viewers?
Yeah, certainly. There are a lot of small cap stocks which have not participated in the rally. In fact, in both small and mid cap segments, only handful of stocks have rallied from September 2024. So considering that, I find a lot of opportunities in the small cap. Something like MSTC, which has come out with very good results, and it is now 100% e-commerce company. MSTC owned by Government of India, and there are host of projects which are under implementation within the e-commerce segment. So this one stock, if you look at the last 2.5 years high, it's almost down 40-45%. Still, there is a lot of value in it. So like this, there are many stocks in the small and mid cap which are not participated in the rally. In fact, are down substantially from 24 September peak. So investors can focus such high quality stocks with a good balance sheet, good management quality.
Got it. Okay. All right. Let's head across now to check on the stock of the day. And it's a stock that is underperforming in trade today, Schneider Electric, and has to do with what has been a muted Q1. And the interesting thing to note, though, is that the order book continues to look robust. And so therefore, is there an opportunity that presents itself here? We'll find out soon enough, and I'm sure Mr. Chokalingam will have a view on this. Let me head across to Parth to find out what the key details are here, why Q1 ended up being so muted. Parth?
There were a variety of reasons, and we'll discuss that later on, but a huge drop is what we have seen in Schneider Electric. The stock is down over 11% today. It has touched the lowest level in the last 42 sessions, and it is also all set for the worst closing since the stock listed back in 2012. So a huge down move is what we have seen in this counter, and let's look at the reason behind this. The main reason was the Q1 results, as Alex rightly mentioned, and let's look at the 5 reasons why we have seen this downtick. The number one was the slow revenue growth. Revenue saw a growth of just 5% year on year to reach just over 650 crores. And the reason behind this was the growth was impacted due to the project project execution timelines that the company saw during the quarter, and that was the main reason why the growth was stalled with revenue growing at just 5% year on year. The second reason was the collapse that we saw in the profit after tax. PAT was down almost 70% year on year to reach just 12.4 crores, and there were 2 reasons behind this. The number one was the volatility that the company saw in the commodity prices during the quarter, and second was the lag that they witnessed to pass on that cost on to the end customers. That was the main reason why we saw this 70% downtick in PAT. Also, EBITDA fell by almost 44% year on year to reach 41 crores. That was a big drop as well, and the reason behind this was the jump in finance costs. They were up 41% year on year to reach 15.2 crores. That's what led the downtick in EBITDA as well. Also, EBITDA margins, they were down 550 basis points year on year at just 6.3%. This was mainly because of raw material as a percentage of total sales. That came in at 64.6% versus 61.9% year on year. So these were the main reasons why Schneider was down in trade, and that's why we are seeing this big downtick today.
But thank you so much for getting us those details on Schneider Electric. In fact, even if you take a look at the valuations, right, it's nowhere near cheap. Mr. Oaklingam, any view on Schneider Electric per se, and anything in the space that you're liking? Because even if you compare it to your peers, none of those are cheap either, right?
Yeah, definitely. You are absolutely right. It's a great company. Whether valuation is also great? No, at current price. Because, 2024, 25, 26. These three financial years were the golden period for Schneider Electric. And but in 23, 24, 25 were the golden period. FY26, there was no growth in profit. The growth was missing. Now, the problem is in the new financial year also, in the first quarter, the growth in profit is missing. That is why the market is punishing. And if you look at last 3 years CAGR in profit, it's around 27%. So even if you give 3 peg ratio, it should be worth about 900, or even you give a little more premium. I think the best case scenario is worth around anywhere 1,000 to 1,100. So till it reaches that range on the basis of fundamental valuation, I think the weakness should continue in the stock.
So, is that when you should exercise that opportunity to say that if it reaches very close to that 1,100 mark, give or take, right, Mr. Choklingam, if you've got a long enough time horizon, you don't necessarily have to wait till it hits exactly 1,100, but you might have to wait a little longer to get returns on your investment. So, what is the kind of strategy that you would employ? And if you compare it to the other players in the space, where do you see the best opportunity? Yeah.
Yeah. So unfortunately, a lot of peers also trading at a very super rich valuation. But in case it comes below 1,100 or close to 1,000, definitely it's a good stock to buy. But otherwise, with a little conservative approach, I would look at a stock like L&T in the engineering space. That gives me a lot more confidence in terms of the valuation comfort zone.
Okay, all right. So that's the view coming in on a lot of these, names. But Total Mint is the other one that's remained in focus today. In fact, we also spoke to the management. It's now trading almost 8% higher. It's been a strong quarter, a recent listing as well. There's also EBITDA and renewal growth that's come in. But what are the key concerns as well? We have Shivam here to give us exactly that bull versus bear scenario. Shivam, take it over.
Yeah, so Turtle Mint has posted a strong set of numbers for Q1, but to understand it in a more better way, so we have come up with a bull bear case scenario. So starting with the first bull scenario, the platform premium that has been growing up around 49% on a YY basis, and which is reflecting a strong business momentum. But on the bear side, the profit after tax that has remained negative for the company, where the company has recorded a loss of around 38 crores despite a strong revenue growth. Second bull case is the service EBITDA margin that has surged around 89% on YY basis, but on the adjusted EBITDA margin, which is the overall margin, that has remained negative around 9% in Q1 FY27. Also in terms of renewal revenue business, which is a high margin business, that has recorded a growth of around 66% on YY basis, while the if we look at the contribution of the renewal business, that still contributes around 22% in the total revenue, which means that the profitability is mainly dependent on scaling up of the renewal revenue business. Also, if we look at the market shares gains, the company has continued to gain the market share in under-penetrated beyond top 30 cities, which accounts for around 75% of the total platform premium. But in case we have also some uncertainties from the regulatory front also around the commissions, which remains an overhang for the company. Also, the management expects the service EBITDA margins that is going to expand to around 23 to 24% on the over the 4-5 years basis. But margin targets requires a sustainable growth in the business, and that remains a key concern as the business is facing multiple seasonality scenarios, and the Q1 to Q3 remains generally lower than the Q4. So that remains in questions too. So overall, the company has executed strongly on the front of growth, renewals, and AI-led efficiency, but the sustainability profit also remains a key monitorable to see going forward.
Got it. Okay. So let's talk about this, right? Because we had a conversation, Shivam, with the management of Turtle Mint, and pull up the intraday chart. Interestingly, while the management was speaking to NDTV Profit, was when the spike took place from trading below yesterday's close to climbing to a high of 11% up or 12% higher. Mr. Choklingam, what's the view on Turtle Mint? It's a relatively new listing, and it's a very different business model. So What do you make of it, one? And what should somebody who's holding the stock bear in mind? Should you enter the stock?
Entry is quite risky, but definitely the risk-taking investors can consider, because there has been a dramatic structural change. Things are going digital, no doubt about it. So the company also has posted a tremendous growth on the top line. The only concern is, the making losses at operating level. We don't know how many years it will take to turn around and also make a profit enough to justify the current market price. So that uncertainty is there. And second, in the insurance distribution, if you look at the insurance industry itself is not growing at any fabulous double-digit growth. And third, there's a lot of competition which is emerging in this distribution business. So therefore, little risk-taking investors can continue to hold. High risk-taking investors can even buy it. But conservative investors, I would suggest avoid the stock.
Okay, all right. So that's the view coming in on Total Mint. But, just shifting focus a tad bit and talking about, the FCNRB deposit scheme. As Reserve Bank of India has, wraps up early on the FCNRB scheme, sources tell NDTV Profit that inflows could have surpassed the 100 billion mark at this pace. Shimi joins us with more details on this one. Shimi?
Well, the RBI is closing this special FCNR swap window earlier than planned, and the key reason behind is that the response has been much stronger than anticipated, and the facility was originally meant to remain open till September 30th. But by August 13, bank had already mobilized around $52.3 billion and under the scheme. So what we are picking up that at this pace, had the window remained open till September 30th, inflows could potentially have crossed $100 billion, which over and above the government internal target. Now, with early closure, the RBI expect total mobilization of around 70 to 80 billion by the time the shortened window closes, which is August end. The rationale, or rather a key concern, is the hedging exposure. In fact, these are largely 3 to 5 years deposit, and the larger deposit, the greater the foreign currency exposure, and that needs to be managed and hedged. Plus, there is a considerable, thought process around interest rate uncertainty over the next 3 to 5 years that no one could actually predict how the global rates gonna be. So, with the RBI already seeing much stronger inflows than anticipated, there's a little reason to keep adding to the long-term exposure. But what we also given to understand that if forex liquidity comes under pressure in future, the RBI can reintroduce this similar sort of facility. But for now, they are closing it, and these are the reason what we are gathering from the New Delhi.
Got it. All right. So that's a view from New Delhi. By the way, Piyush in Mumbai also picked up similar details from bankers, and this is essentially what the picture looks like. But pull up the Indian rupee and let's see what it's doing right now. It's depreciated by as much as 20 basis points, or 0.2%, currently about that 95.61 mark. But pull up the year-to-date chart if we can for the USD INR pairing, and you will see that it's gone through quite a fair bit of volatility, and that should give you a sense of what we've witnessed. Remember, for the USD INR chart, a chart that is heading upwards indicates a depreciation, and so therefore you've seen a significant depreciation despite the measures that have been taken. And of course, if you think about it, from the start of May to now, a number of those measures have caused a stoppage in the volatility that you've seen and halted the depreciation. So among the measures that have been taken, of course, one is the rules on tax for foreign portfolio investors when you're talking about bonds, and specifically government bonds. And so that has allowed a lot of inflows to come through from foreign institutional investors. And beyond that, of course, the FCNR inflows that have come through. And outside of all of this, there is a little bit of a stoppage of the outflows from the Indian equity markets. You've actually seen inflows all of last week, or most of last week. Even on Friday, you had inflows. So while they're not very significant in the way of inflows, at least, Mahima, at this moment, you're not seeing significant outflows, and that's something to take.
Absolutely, and that is the important part, right? And that's why we're seeing these developments also coming in from the government side. But Rahul, I'll quickly come to you on something like Schneider Electric. I'm not sure if we've taken the charts on this one, because we've seen as to how the stock has been under pressure today, but also it's seen a good rally as well. So what do you make of charts? Do you think this is the time that one can enter and probably make some gains from here on?
Mahima, as far as the charts are concerned, yes, definitely the stock has seen good upside journey. And as on daily charts, we were witnessing resistance near 1440 levels. But then this type of the gap down opening, and that too below its 100 DEMA. So I think the charts are completely disrupted. If you would have asked yesterday, the scenario was completely different on the charts. But now we have to watch it for the coming sessions how this pattern looks like. So I think for now it should be avoided. It should be in the watch list if the stock sustain above its 100 DEMA, which is at around 1235. So we have to be very watchful for Schneider. But from the same space, I think BHEL looks more good on the technical charts.
Let me ask you about the cohort of stocks that is affected by FCNR, of course, and that is the banking pack as a whole. Rahul, we've seen a little bit of pressure for the PSU banking pack in the recent past. Private banks actually recovered from the low point of the day, doing okay. What are the charts indicating for the Nifty Bank 1 and specifically on the PSU banks?
As far as PSU banks are concerned, that whole basket was performing really well month till date. We had seen 4+ percentage on the returns from the PSU basket. The upside resistance on the PSQ basket was around 8800, and from the stocks which we have seen month till date, Union Bank has performed really well, which is where it has given 10+% return, followed by Indian Bank, Canara Bank. So I think these bank basket are really good in terms of investment. So my selection out of this pack will be first SBI, then Bank of Baroda, because these two stocks I think will have good probability to go to perform really well in coming days or in coming months. So these two stocks should be kept in your investment portfolio.
Okay, a quick take on something like a Cupid, because it's seen a significant downtick in trade just in the last couple of minutes. What do you make of the charts for this one?
Yeah, massive correction on this, like 12% which we are seeing right now. The next support line for Cupid will be at around 226 level or 225 levels. If at all it gets breached, so another downside fall will be witnessed, which may cross 200 levels. So currently it should be under the watch list. If at all this correction, this gap gets maintained, and if at all it crosses the upside resistance, which was earlier like last day highs near to 296 levels, then it will have a journey which can take this stock towards upside.
Okay, so that's the view coming in on Cupid. In fact, this is the second time that it's tried to breach the 20 EMA, and that's something interesting to watch out for, whether it further breaches the 50 EMA or not, and that will decide the next course of action probably. But Zaggle is the other one that continues to trade under pressure on the back of decline in net profit and EBITDA margins in Q1. And Jasmeet is here to give us more perspective on what is exactly weighing on the stock. Jasmeet?
Well, Mahima, thank you for that. With this particular counter, as we have seen in the past, the company has been acquiring a lot of entities, and that's something that's impacting on this particular counter. If you look at the key numbers, the revenue saw a degrowth while the EBITDA tanked in this particular quarter. Now, in terms of what did not work with the Zaggle is the overall pressure on the EBITDA margins and the bottom line coming on the back of that acquisition additional cost that the company saw in the Q1. While the second main reason is the company was expecting the overall that DICE acquisition to add up in the Q1's revenue, which did not add up, and that is postponed to Q2. That's the second key reason why the revenue also did not grow as the cost increased in this particular quarter. While the third reason is the overall recognition change, what we have seen, where the company has changed few of its expenses which were earlier capitalized to P&L expense. So the expenses have increased in this quarter on the similar regards given the change in the accounting format, and that's the third thing that's impacting the particular counter. While the fourth one is the increment. So the annual employee increment has come in this particular quarter, further increasing that gap between the margins we saw on QOQ basis. And lastly, the overall acquisition has led to increase in the employee headcount, further adding to the employee expense as well. And that's why the stock is down about 20% in today's trade.
Got it. All right. Thanks so much for that. And Zaggle at the low point of the day, in fact, it has been at lower circuit through the session so far. You know, a stock that stands out and Mahima, this is something we talk about often, is Voltas. It's interesting because it was expected to post a weaker set of numbers based on the trends that we were seeing. On the face of it, the numbers didn't look so bad, but the stock is under pressure. Why?
So, I mean, just to give viewers a perspective of how Blue Star and Voltas work differently is because Blue Star has more retail presence and Voltas has more commercial presence, right? So, because of EMP revenue being weak, the stock has been under pressure. And overall, if you take a look at the RAC volume growth also, that was at 45%, which drove the unitary cooling products revenue of around 32%. In fact, this part of the segment was aided by lower base, price hikes and cost optimization, but this was largely offset by the steep raw material inflation that we have seen, and that is the reason as to why the raw material the margins were also under pressure. So that's one of the reasons as to why Voltas has seen a downtick of around 4% in trade today. But I'll quickly come to you, Mr. Choklingam. Between the two, Blue Star and Voltas, which one would you pick, or anything better in the space that you're liking?
Still, Voltas looks good. The only concern is that it was already trading at a very high PE. So that's why, despite decent results, stock has corrected. So for medium to long term, I think this correction could be an opportunity to accumulate the stock.
On the charts, then, let me ask you, Rahul, Voltas versus Blue Star. We saw that very interesting split chart. So pull that up while Rahul's speaking about it. Is there an opportunity here?
For Blue Star, I think little cautious, but yes, Voltas, yes, the charts, although keeping aside today's session, which is 4% down, but it has beautifully taken support by its 200 EMA, which is placed at around 1254 levels. So I think this is something which has been giving support to Voltas, and I think on the upside, 89 days of moving average on weekly charts, which is at around 1350, is a key level to watch. If at all this gets breached on the upside, there is a massive room near about 1550, 1570 levels. So I think keeping this Voltas in your watch list will be really great in terms of trading and short-term investments as well.
Okay, all right. So that's the word on Voltas, both fundamental and technical. Can you think of what you were doing on Friday? You were probably hard at work. I certainly was. We had lots of shows here. And I'm pretty sure Rahul and Mr. Choklinga were busy at work as well. You know what Mahima was doing? She was in Khandala. And she had this amazing weather that she was experiencing. There was this amazing hotel and great views and great food.
Great food, definitely, and great views for sure.
They also had a great conversation.
And definitely a very good conversation because I was at Chalet. That's what, Alex is referring to. I was at Athiva Resort of Chalet Hotels, and I spoke to the management, Mr. Shwetang Singh, to try to understand as to what the next course of action is for Chalet Hotels. Because lot is happening in the hotel space. There's premiumization which is picking up, but hotel supply chain is also catching up. So to try to decode as to where Chalet stands in all of this, I did speak to the management, listening to what he had to say exactly. Shwetang, so far we've seen very strong operational metrics for Chalet as a whole, right? Just wanted more sense in terms of how RevPAR growth is going to look like for the next 3 to 5 years, considering that you have so much in pipeline as well.
Look, Mahima, the fundamentals of the industry are in great shape. Whether you look at the demand-supply arbitrage, especially in the space that we operate in, the supply is around 5.5%, and the demand is around 9.5%. So there is a clear demand-supply arbitrage that will continue. The good thing about the industry is that it takes a while for anybody to build a hotel. So competition can't sneak up on you.
Correct.
You can see it coming a mile away.
Yeah.
So if you look at that and then you put the other macros of the country into perspective, whether it's the earning capability of individuals, whether it's the earning capability of companies, whether it's the evergreen social segment. So, everything is very strong. There may be a few blips here and there like we are facing right now with the current Middle East situation. But in general, the trend is upwards. And what that means is that we should have a strong double-digit RevPAR growth for the next 3 to 4 years at least. Okay. Until maybe another cycle is around the corner, who knows.
Perfect. And then do you think that the next leg of growth is going to be led by occupancy, or it is still going to be led by average room rate increase? Where do you see that mix be like?
Look, especially for chalet, if you see most of our properties, the ones that are not stable is a different kettle of fish. But the ones that are stable, especially the ones in Mumbai, it becomes very difficult to grow the occupancy beyond a certain number. And in our mind, that number is about early to mid 80s.
Okay.
Once you've hit that number, then occupancy growth becomes difficult because there is only so much you can sell. The inventory is perishable, unlike in any other industry.
Correct.
So what happens in this case is, therefore, your growth can only come through RevPAR. And that RevPAR growth is then driven by average rate growth. And that has stayed strong for a while, and it will continue to stay strong. But the beauty of our business, especially at Chalet, what we do is that we are very deep into what we call asset sweating. So we are constantly on the lookout for every square foot of space that's available, and how can we convert what is essentially a non-revenue generating area into a revenue generating area. And that additional capex when you spend comes at a very high rate of return. Therefore, the blended rate of return tends to go up. And that's what we do very well at Chalet.
Very interesting, because you talked about capex. Can you give us, a number, if any, you have internally planned for capex for the next, let's say, 3 to 5 years, and your focus still is going to remain in terms of being asset heavy rather than being asset light, because the industry right now is shifting towards asset light. So more perspective on that.
No, so we are continuing to be asset heavy for a while until we decide to go asset light at some point in time, which will actually mean that we are asset right, is what we call in the industry.
Yeah.
So having said that, if for our near term future, next 3 to 5 years, we will stay continuously asset heavy. And what that means is that we are going to invest in newer properties as well as our existing properties. And if we look at our 5-year business plan, we are looking at anywhere around 1,000 to 1,500 crores of capex every year, which means over the next 5 years we should be at about 7,500 to 8,000 crores of capex.
Interesting. And that should be funded by internal accruals, or will you be looking at some equity, debt raise, etc.?
So equity raise is certainly not on the table at this point. But our internal accruals are very strong. If you look at our commercial business currently, that itself is taking care of most of the burden on the debt side. And with the additional 900,000 square foot that's coming into play by the end of this year.
Okay, interesting. So therefore they're going to be asset heavy and then eventually asset light, so that they become asset right. That's a nice way of putting it.
Yeah, very nice.
But 7,500 crore of capex before
for the
that.
next 5 years.
For the next 5 years, that's quite a bit. Let us know what you think. In the meanwhile, we have to slip into a very quick break. We've got more on the other side, specifically your top buy today and sell tomorrow strategy. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary, conversations that connect countries and cultures, where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA does not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law, of being elected?
Because being a political science student, by the way, I am also interested in much in cephalology. I have studied little bit cephalology. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepted in politics. So it's not my.
Welcome back. You're watching India Market Close here at NDTV Profit. Last 10 minutes left for whoever is planning to trade in cash F&O stocks. So just a reminder there. But we're also joined by Osho Kishan, Chief Managing Technical and Derivative Research at Angel One, and Dharmesh Kant, Head of Equity Research at Chora Securities, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. Osho, I'll quickly come to you to take a quick look as to what do you make of the benchmarks right now? Because in the last 1 week and today also for the Nifty, at least it's been a range bound trade. So from here, what do you expect the levels to be like?
Very good afternoon. Firstly, thank you for having me at the show. Well, yes, no doubt in the past 5 trading sessions, the benchmark index has definitely lose a lot of strength, and currently it is hovering below the 20-day exponential moving average. So that's a kind of a negative development on the technical side. Also, the previous week's low, which was approximately around the zone of 24,265, that has also been tested in today's trading session. But from those levels, we have seen some kind of recovery, but again, mostly on the negative biases, because only positive thing that has been seen in today's market is the supportive movement in the bank Nifty index. Else, the benchmark index Nifty 50 is still looking very negative as of now. Until we see a decisive surge beyond 24,500, till that time, better to have a negative bias. Any movement, any recovery towards the zone of 24,400, 450 can be seen as selling opportunity in the benchmark index. While on the lower end, I am expecting 24,200 to be seen as the first target. If it breaches, then again 120 to 100, 24,120 to 24,100 can be seen as the next potential target on a positional point of view. And for Bank Nifty, I am expecting the whole index is into a very strong consolidation phase. It is juggling around the 200-day simple moving average. So there is no clear trend emergence in the banking space. But today, the PSU banks and even the private sector banks have started gaining some traction. So if there will be a follow-up buying in the coming day or maybe tomorrow, then from there onwards, we can see some kind of traction in the Bank Nifty space. But for now, it's better to avoid Bank Nifty. If there will be a follow-up buying and Bank Nifty crosses the zone of 57,800 in tomorrow's trading session, then one may look for buying opportunity.
Okay. You know, we need to leave enough time to execute these strategies, if at all. So, therefore, let me ask you, Osho, before I come to Dharmesh, if there's any BTST ideas that you might have?
There are a few counters which are looking quite positive. First one is from the metal space. Jindal Saw is looking very positive. It is currently hovering around 270. So one may look for buying opportunity in Jindal Saw around the same levels. 263 will be the advisable stop loss. And on the higher end, 284 is the target that I am expecting in this counter. The other counter, which is looking quite negative at these levels, is Paytm. Paytm has been into extreme overbought terrain, and from these levels, there might be a possibility of some correction or some follow-up profit booking in the counter. So one may look for STBT use in Paytm. Currently, the spot levels are hovering around 1590. So one may look for sell opportunity at current levels. Keep a strict stop loss of 1625 as on spot levels, and on the lower end 1545 followed by 1520 will be the target that one can expect in this count.
Okay, all right. Let's talk about a few of the stocks that are buzzing in trade right now, and quite a few of them on account of results. Puneet joining in to talk about 3 or 4 of them. Puneet?
Well, thank you for that. Puravankara is the one which I want to start off with. Very good set of numbers. Revenues up 60% in this quarter, and EBITDA has grown by 3 times compared to the same time last year, with net profit at 29 crore, with a loss that the company had reported in the same time last year, 68 crores. Now, multiple key highlights for the company in this quarter. Pre-sales are up almost 28% at 1400 odd crores, and the gross development value now for Bengaluru stands at 5,200 odd crores. So that has been the addition into the Bangalore GDV. The average realization has risen by 18% to almost 10,589 rupees per square feet, and the customer collections have actually also grown. So it was a stellar quarter for the company as a whole, and the stocks are also showing you that. The other one's PTC Industries, a very, very expensive defense counter, but continues to have that outperformance in terms of results. 97% growth in revenue. The EBITDA is up almost 5 times for the company, 6 times actually, at 48 crores, and the margins at 25 versus 8%. Profitability has also followed through at 29 crores versus 5 crores in the same time last year. Now, one of the key verticals, of course, the Aero Rolly Technologies has signed a landmark agreement with Airbus. They will be manufacturing for titanium castings across the company's models of A320neo, amongst others. They also have now entered the BrahMos aerospace vertical as well with a new order, with entry into the subsystem, and hence a big one for the company. Finally, Quality Walls is the last one. They had a good set of numbers for the first time actually post-listing. So revenue is up 16% for the company. EBITDA is also up almost 50%, and the net profit is up 35%. They mentioned that they saw same-store sales growth of 16% in this particular quarter, and that have also relaunched the Made with Milk kind of program. So that has been a one key negative point for Quality Walls since listing. Now looking at embracing that part of the portfolio too. So these are the 3 counters in focus, all buzzing on the back of results.
All right, thanks so much for that, Puneet. Dharmesh, hi, good afternoon, and always a pleasure speaking with you. Do any of these counters stand out to you? Quality Walls, in fact, the question that I have is, should you buy right now, or should you be worried that any gains will melt away with the ice cream?
Good afternoon, Alex. Always nice speaking to you, and good afternoon to all our viewers. See, Quality Walls, now we are walking into a season where the ice cream is not a flavored option out there because winters will soon set in. So I would like to give it a skip out there. However, one interesting aspect was the real estate counter, which you spoke about Puravankara. But we have recently initiated a coverage on Raymond Realty, which is a Mumbai-based real estate developer. And there, I think after the recent correction, around 20% it has corrected from the top. A lot of potential is out there. The GDV itself is around 52,000 odd crores, of which launched projects are 28,000 odd crores, 24 are yet to be launched. And what happens is last year itself, FY26, they launched 7 projects, and 1 project was launched in last quarter. So 3-4 quarters in the initial phase of the launch, all your costs go up, and that tends to have a impact on the operating margins. So the right way of looking at a real estate company is not on the PE multiple or EV to EBITDA kind of a perspective. What we have done the DCF model on the net operating profit after tax for the visible projects on hand, and there we saw a gap of 20% as of now. Management has guided for 6,000 to 10,000 crores of annual run rate on the new project pipelines, of some part of it which come from the existing projects, but still 40 to 50% will come from the projects which the JDs are yet to be signed. That upside we have not taken into account. I think there's plenty of scope. Redevelopment itself is a over 30-year-old building, around 25,000 old buildings are there. That itself is a 4 to 5 lakh crore kind of an opportunity. So we like this from a long-term play. So this is where real estate, lot of action is happening, and here we have a clear visibility apart from the Thane Land Bank. So 686 is the price target, the initial price target, which we are working with.
That's the view coming in on Raymond Realty, but Uflex is the other one that's stood out this quarter, has done very well in fact. But of course, the top line growth was largely led by price hikes also coming in, because volume growth was almost flat. But Still, the stock is locked in upper circuit of 20%. Revenue saw an uptick of almost 38%. EBITDA up 94%. Margins came in at 16.5%, and net profit stood at 422 crore versus that of just 62 crore in Q1 FY 26. Basically, higher realization and better product mix has boosted revenue and profitability. There was also a part where forex gain has seen a significant surge that aided the bottom line uptick that we're seeing. But there has been strong demand also in terms of packaging despite of the Middle East disruption is what the commentary is suggesting, and value added products and local regional sourcing has also improved, and that could improve the margins as well going forward. But we spoke to the management earlier today on what led to the growth and the future outlook. Listening to what he had to say.
A lot of capacities have come up on stream now, and those capacities are yielding results. And this momentum is going to continue for the full year because we have installed 2 new capacities as of now. One is WPP at Mexico, which is going to give us a good revenue. And then our recycling plant has also been commissioned at Noida, which is also going to upstream a good revenue targets now for us. So for the full year, we are very bullish on this segment, and whatever the results you see for Q1, we are going to see the momentum going on, and I think we are going to deliver as per the expectations of management and the market.
Okay, so that's the management of Uflex. The question to you, Dharmesh, what do you make of the numbers for Uflex? Is it replicable in the rest of FY27, and what do you make of the management commentary?
See, the numbers were excellent set of numbers. It's a very strong set of numbers which they have posted. Having regard to the fact because of flexible packaging, most of the polymers which they get the cost has gone up. Still, they were able to improve their margins on that front. And if one has to go by what the management has just guided that it's replicable for the coming quarters as well, which seems to be a case because see they have taken price hike and they were able to sell at those hiked prices. So
you can continue going. The thing is that we just want to you must have heard the sound of the closing, the first bell, right, which is important to mark, right? So 3:15 is where the first close takes place. I shouldn't really call it a close. It's the stoppage of trading in the cash market of F&O stocks, and this is when the reference price for these stocks is identified. 3:20 is when the cash window opens. The Nifty 50 has settled at 24,339.8. So you want to complete the point that you were making, Dharmesh?
Yeah, sure. So I mean, they did around 400 crores of profitability in this quarter. And if it is replicable for the next 3 quarters, which should be the case, even if not 400, even 250 or 300 they are doing, then they are doing around 1,000 crores of profit for the complete year, 1,000, 1,200. That means it's available at 3 times of PE multiple at the current market cap. And their ROEs are also likely to improve. So today's 20% up move can still have a higher, up moves going forward. And in case crude price is correct, then you have a better upside to take place. And with this e-commerce and everything shifting to home delivery, I think there's plenty of scope in the companies like Uflex.
By the way, energy stocks in focus, and this is just coming in, development with regard to the CERC for renewable energy players. And we got Varsha joining in to talk about what this latest development is. It has to do with missing project deadlines and daily charges. Varsha, what can you tell us about this development?
Well, this is a relief for, renewable energy companies, and hence you're seeing Inox Wind and Suzlon buzzing in trade today. Now, earlier, if a solar or wind project, got delayed because of land issues or funding problems or construction, it had a risk of losing the grid connectivity. But now CERC, that is regulator, has said that instead of immediately cancelling that connectivity, developers can pay a daily fee and get extra time to complete that project. But since there's still a delay. Developers have to pay the charges, and those charges are rupees 1000 megawatt per day for land acquisition delays, and rupees 1000 megawatt per day for financing delays, and 3000 rupees megawatt per day for commissioning delays. Now this is positive for renewable energy developers, because many projects got delayed because of these reasons which were beyond control. Losing grid connectivity can set a project back for several months or several years. However, this is not a free pass. Companies will have to pay those charges, and even if they still fail to complete the project on time, they may lose that grid connectivity. But now the regulator has said that the risk of losing that grid connectivity has been gone. Just they have to pay the charges and continue the project.
Okay, Varsha, thank you so much for getting us those details. Dharmesh, any quick view on what Varsha just talked about, and in the renewable space, if you're already tracking any counter that you're liking?
Yeah, I mean, we were very bullish on the entire space 2 years back, and from last year onwards, most of the prices moved up, so we booked out there. So in the renewable energy space, though the story will unfold, all this power generation themes and power generation setups will still be there. But I don't think there's any scope on the valuation side to go for further re-rating. As far as grid connectivity is concerned, the main problem with these companies was ROW, that is right of way. When you have a agreement with farmers or the landowners to put your installation in place and pay a rent to them. And that's a big problem even now. I mean, NTPC Green got delayed, the execution got delayed by 1.5 years because they were not getting this right of way rights from the people who were owning the land, and because of that, the grid connectivity could not be laid out. So I think there has to be some structural reform from the government to pave this. Otherwise, you will have the capacities in place, the generation capacities will be there, but evacuation of those power to the grid will be a challenge. So first is the land should be available, the pipeline should be there, and then comes the transmission line laying out of that. So there's a huge challenge out there. Intermediate cyclical, trades can still be there, but structurally, unless those issues are, resolved, it will be hard for these companies to justify the valuation multiples they are sitting on.
Okay, all right. So that's the view coming in on a lot of these renewable names. But, before I go on to Varsha again for Rubicon Research, a quick take, Osho, if you can, on something like an NMDC Steel, because it's almost down now 6%. Anything that you're making, with respect to where charts go, do you think that this is the time it's found its bottom? Because a lot of these steel names, metal names are doing very well, but this is the one which is seeing a reverse action.
Definitely, the discounter is having a kind of a negative movement in today's trading session, and even looking at the technical parameters, it is having a kind of a very strong support near the zone of 40 to 41. So that will be a critical zone. So if there will be any kind of further correction below the zone of 40, then there might be some kind of disruptions in the short-term period. But overall, looking at the historical trend, the zone of 40 to 41 has provided very strong cushioning and consolidation in the counter. So we need to be watchful at these levels. It is having a kind of it is placed at a very strong and critical juncture as of now. So one should not be very much aggressive with the kind of correction that we are witnessing in this counter. So any kind of reversal from these levels can again provide very strong opportunity. But at these levels, maintain a cautious view and wait for a reversal, definite reversal in the counter. Move beyond the zone of 42.5 to 43 can give a kind of a positive opportunity and can be seen as an opportunity to enter into the counter.
A significant gainer in trade, this is on account of earnings as well, is a pharmaceutical company called Rubicon Research. And this stood out actually in the morning as well, but it's gained from there. It's at the high point of the day, 11% higher, and the numbers look particularly good. Let's find out some of the details here, and then maybe we can get Dharmesh's view if he's looked at the stock, and maybe he can do so while Varsha is describing what stood out about the numbers as well. Varsha?
Well, strong set of numbers, and the other reason is the guidance upgrade towards the upper end. These are the two reasons why you're seeing stock is up almost 10-11% in trade. Onto the numbers where specialty, is the driving growth factor for the company. Top 5 products, if you see, contributes 39% of sales. Pricing remains stable due to focus on specialty products. Specialty portfolio, if you see, contributed almost 36% of the gross profit, and management is expecting this specialty mix to improve further. You have margin story which is improving as they have exited low margin products. Gross margin improved despite geopolitical issues that every company is going into. Despite these headwinds, if you see, margin guidance was also raised. Onto the USD revenue, if you see, it's increased 32% year on year. Q on Q, if you see, this was declined, and which was intentional as company exited low margin business. Margin improvement has been prioritized over revenue growth. Lastly, on to the FY27 guidance, well, they have raised their margin guidance to 23% versus 22 to 23, which was guided earlier, and guidance has been raised despite multiple geopolitical or cost pressures that we have seen. So good set of numbers and the upgradation in guidance, these are the two reasons why we are seeing stock in bust today.
All right. Thanks so much, Varsha, for that. Dharmesh, were you able to catch any of those numbers? And this is a company that has posted, if I remember correctly, good set of numbers even in the previous quarter. What do you make of it?
Yeah, Alex, last 2 quarters, if you look at all the specialty chemical manufacturers, so you have each company has its own set of parameters because they are catering to different kind of molecules. But all of them have done particularly well, be it, say, Laurus Labs or Jubilant Ingrevia, Acutaas Chemicals, all have been reporting very strong set of numbers. And I think it's a result of that, despite supply bottleneck challenges because of the Middle East tension, things were getting mitigated and the numbers were pretty strong. So I think the entire specialty chemical basket is up for an upcycle. I have not done a deep dive on Rubicon Research per se, but their other topics remain Acutaas Chemical and Laurus Labs. Though the price of Laurus Labs has moved up, but the kind of traction they are getting in small molecules is humongous. So that's going at 60-70% kind of a run rate, and it's likely to be so going forward. So re-rating will happen based on next quarter earnings, but we are overall bullish on the entire chemical space.
Yeah, while we're on the subject, we actually had a conversation with SciLife, Dharmesh, earlier today, right? And they've moved into formulations even beyond your molecules and CRDMO. And what they're essentially saying is that it's not really late stage, it's actually early stage formulations that they want to provide to deepen relationships with existing customers and provide a holistic experience for their customers. So, do you like SciLife in the space?
Yeah, Alex, we have done a detailed, in-depth study there, but what we found out was like fixed dosage formulations are not a high margin accretive. A CRDMO space where you get margins excess of 30% kind of space, and FDF is more to do with generic products. So there's a catch point out there. Most of them are supplying to the generic companies. So SciLife per se is good. No taking away that fact. But as a space, we like more of a CRDMO rather than a fixed dosage formulation kind of a companies.
Okay, let's also take a look at some smaller names that are still available for trading in the cash markets, and you have something like a Manorama Industries that's done very well, has extended gains on the back of strong Q1 numbers coming in, revenue up 39%, margins have also seen a significant bump up. Vikram Solar is the other one which is almost up 14% in trade. Let's try to pull that up. Buzzing on the back of volumes, it's up almost 10% in 5 days. And Q1 was a strong quarter for this one as well. Physicswala is the other one where JP Morgan has upgraded to overweight from neutral and has given a target price of 148 for this one. Q1 was a beat according to them, and that's led to upgradation of the stock by JP Morgan is what they've said. And overall they've also said that the stock was down in 18% in the last 1 month because of the worries of the NEET exam, but that's now behind them is what the brokerage believes. So some of these counters have been doing well. Osho, I'll quickly come to you. Any of these that you're liking on the charts right now?
See, definitely on the technical charts, there is a clear breakout in Manorama. So obviously the counter has already seen a very strong movement that has been backed by very strong volume. So one should wait for some kind of profit booking or correction. There will be a kind of a breather phase that might bring the counter back towards the zone of 1840 to 1850. That will be a decent level to accumulate this counter. So technically, this counter is looking quite positive. Even Vikram Solar is also on a verge of a reversal. So that can be also be seen as a bullish reversal movement. So one should definitely keep this counter in the watch list. If there will be any kind of further continuation above the zone of 185, then even this counter can be seen as a buying opportunity at current levels, but with a strict stop loss of 174. So this counter is also looking positive, and one may look for buying opportunity in this as well.
One of the conversations that stood out this morning was a conversation with the management of Lumax Auto, and I'm wondering, Dharmesh, if you have a quick view on this one. It's not cheap by any stretch of imagination, but these auto ancillary companies are quite, buzzing in terms of the growth that they're showcasing, right? 30% CAGR between FY22 and now, and the likelihood of that continuing even on this high base. Do you like it?
Yeah, Alex, I mean, the last point which you said, the likelihood of continuing even on this high base is where the question mark arises. Because till August, things will be fine. Last year, 15th of August, this GST announcement came, so the base was low for the month of August as well. But September onwards, going to the second half of this FY27, the difficulty will arise because the base will be really very high for most of them. At the same time, input prices have gone up. We have seen WPI inflation for last 2 months hovering around 9.8 to 9.7 percentage mark, and that's not cooling off. The metal prices where they are 20% on an average. There has been increase in all the metal prices, so that will definitely have an impact into second half. So business wise, they can still do 15-20% kind of growth, but the justification will not come for the current valuation multiples where most of the players are trading. They are in excess of 30-35%, and that is where I think price action in the stock will take a hold. It will be more of a time-wise consolidation. So not to sell if you are holding, but if you are planning to make a fresh entry from a long-term investment perspective, the view is to wait and watch for at least 2-3 quarters, and maybe first quarter next year can be the right time to re-enter again.
Dharmesh, on that note, thank you so much. I know that we kept you a few minutes extra, but pleasure having you as always.
Always a pleasure.
Yeah. My pleasure entirely. By the way, Osho, for the first time since the introduction of the cash window, you have the market settling lower, or rather you have the indices settling lower than they were at 315. We've gotten used to that uptick in the cash window at the end of it, right? Because generally you've seen these stocks settle higher, the F&O stocks, but a gap of as much as 55 points or thereabouts on the downside for the Nifty 50, the Nifty Bank as well, settling as much as 219 points. Any comments here? It's more to do with the trajectory that the markets have had over the course of the last 5-6 trading sessions.
See, Alex, this is very surprising because the recent or the last 30 minutes kind of a movement in both the indices were quite positive. The benchmark index was also positive, and Bank Nifty was comparatively more strong traction was witnessing in the Bank Nifty index. But again, the kind of 200 kind of gap down closer for the Bank Nifty is again strange. So that's still surprising, and we again need to have a thorough review that why such kind of movement are happening in the market. Previously, it was okay that we were witnessing a kind of a strong gap up kind of a closer. So that was something that people might observe or might have being used to as of now. But again, looking at today's movement, it's very surprising that why the market has seen a strong correction, specifically when whole market or majority of the undertone of the market was turning quite bullish. Specifically, the private banks were having a kind of a strong traction. So I was expecting that Bank Nifty might witness a kind of a strong breakthrough, but for benchmark index Nifty 50, I still have the same view of negative biasness. So if there will be any kind of further movement on the higher end, that should be seen as sell opportunity only.
Okay, all right. Sell on rise is the call. Osho, thanks so much on that note for taking the time. Pleasure speaking with you as always.
Thank you so much, Alex.
All right, let me head across to Sharad now, who's had a closer look at some of the internals of these indices to figure out what really caused that move at the end. Sharad?
Well, largely, Alex, the law of averages has started to play out. First 2 weeks, you could say 10 sessions, it was on the up. To simplify, this time it's down, and it's a surprising thing because throughout the day, in the second half, at least there was a good recovery and it was sustaining. So we'll try to understand what's happening here. Largely the cash effect, it's down almost 50 points here. Nifty Bank also seeing a good, downtick move coming in. Let's look at the stock specific moves also, what's happening overall, especially in the Nifty gainers. L&T is where, the 0.26% change was there. Bajaj Finserv, this is the heavyweight I'm talking about. Let's also get in the Nifty losers, where the drag might have been there. And that's where we have HUL. Look at that. Maybe there's a good drag coming in from this segment as well. But remember, overall weightage is not so much also for HUL. JSW Steel and Power Grid is also there. That's where the action is. The concern is on HDFC Bank and SBI. This is where it feels like the stress has been there, and maybe because of that there might be a fall. Just like to show you the 24,300 and 24,400 call put also, how things are panning out, and largely this is where the action is. Of course, open interest in a significant one in the put segment coming in for this 24,300 level. So this is how the overall setup is panning out right now. But yes, it is a surprise. After 10 sessions, the 11th session is different.
Yeah, very interesting. I think you've identified the two reasons why you had a bit of a slide at the end, and that is State Bank of India and HDFC Bank. But we're closing out with cuts of about 1/3%, and a large part of this has to do with a 50-point drop during the cash window.
Yes.
We actually would have ended up very close to the flat line if not for that drop at the end.
Yeah.
And there are two stocks that have caused that, as Sharad has pointed out. We should pull up the heat map for the Nifty 50 just as we close out, because you will likely see at the bottom of the screen a continuance of the tech stocks that have been under pressure, but more a relative half and half for the gainers and the losers. Sun Pharma actually pips Infosys as the worst performer.
Yes.
2.5% cuts for Infi, and then followed by HCL Tech. And you have, if I'm not mistaken, there you go. I'm trying to find where the gap oh, there you go. State Bank of India is down about 0.6%. It wasn't that much lower at the close.
But metals have continued to shine because Hindalco is up, closing 2% higher. You have Axis Bank also, which has done very well, as Alex was pointing out, that private banks have continued to outperform. And metal as a pack, since we've talked about it, Tata Steel has also done very well. Kotak Mahindra also done pretty well. But let's try to see as to how the broader end of spectrum has fared today. The mid cap 150 and the small cap 250.
They did recover quite a bit.
Recovered quite a bit, and at least closed in the green for the mid cap 150.
But
and
even here, you've seen losing of ground.
Slightly, but the small cap 250 has in fact kept its gain intact. And
not too many F&O stocks.
Around 0.2 odd percent. The broader end of spectrum has kind of been steady in the last 15 odd minutes, like Alex said, but advanced decline ratio will indicate that there is no strength as such in the broader end of spectrum as well, because it's narrowed throughout the day and you still have more declines versus the advances.
Yeah, you do, absolutely. So more or less that should give you a picture of how things closed out today. It's interesting that we've ended with the cash window losing ground. That's the first. There's a first for everything, as they say, and maybe the law of averages is playing out, as Sharad pointed out. But that brings us to the end of this edition of India Market Close. From Mahima, myself and the team that put this show together, from the NDTV Profit Suzlon studio, thank you so much for watching. Stay tuned, lots more coming up on NDTV Profit.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains above the $63,000 mark in a range-bound move. Thailand enacts 0% crypto capital gains tax. Tokenized stockholders more than double as monthly volume surges. UBS raises exposure to BlackRock's EBIT in the second quarter. Well, those were the top crypto headlines at this hour. Time to now talk about a key talking point when it comes to crypto. What is the Clarity Act and why does it matter for the crypto investors? Now remember, the Clarity Act is a proposed US law aimed at giving the crypto industry something it has been asking for years: clear rules of the road. especially with the expectations to be placed ahead of a Senate vote in the month of September. At the heart of this legislation is a basic question: who regulates which crypto assets? Today, the regulatory framework in the US has often been unclear, with CSC and CFTC having overlapping or of jurisdiction of the areas. Now, the Clarity Act seeks to create a clear division of responsibilities. Broadly, the Securities Exchange Commission handles the digital securities, and the Commodity Futures Trading Commission oversees digital commodities like decentralized tokens. Now, this act ends years of legal confusion. But why does this matter? For crypto companies, clearer rules could mean greater certainty about how products and tokens can be launched and operated. For the investors, the bigger potential impact is institutional participation. Banks, asset managers, and other large financial institutions may be more comfortable entering a market when the regulatory framework is clearer. The bill also introduces the concept of mature blockchain systems with the criteria intended to distinguish sufficiently decentralized networks from the projects where the control remains concentrated. But why should Indian crypto investors care? Because the US plays an outsized role in the global crypto liquidity, institutional capital, and market sentiment. And if clearer rules encourage more institutional participation and deeper liquidity, Indian investors could potentially benefit from more mature global crypto market. However, this does not change India's own crypto taxation or regulatory framework. Indian investors will continue to operate under Indian laws, including the existing tax regime. So in simple terms, the Clarity Act is about moving crypto in the US from regulatory uncertainty toward a defined rule book. If it becomes a law, its the biggest impact could not be just on compliance, but on how confidently global institutions participate in crypto. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline, where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA did not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law or being elected?
Because being a political science student, by the way, I am also interested in much in psephology. I have studied little bit psephology. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepted in politics. So it's not my cup of tea.
I'm going to ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said, "Man lo."
Absolutely no.
Because the whole system has been known to be...
Absolutely. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Sashi Tharu, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power. NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Buy now.
Sell immediately.
Hold it, boss.
Buy now. Sell.
Hold.
Buy. Sell immediately.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets your lowdown in terms of everything that has happened thus far, be it national news, international news, and of course the trading day. But let's get straight into that. Talk about the trading day as well, because you do have benchmarks that wrapped up quite a choppy session in the red, as you can see on your screen. Nifty slipping below 24,300. Sensex also losing somewhere close to 280 points as well. And when you talk about investors, of course, remain cautious amid some of those mixed global cues coming in and elevated market uncertainty. Speaking of sectors now the market sectoral picture, in fact, remained quite mixed at close. You do have something like IT and FMCG stocks. That entire pocket was really facing a lot of pressure. What was holding a little firm at close was realty. The divergence, of course, is highlighting some of that cautious market sentiment, with investors rotating towards selected pockets of strength. And speaking of those pockets of strength, let's talk about sugar stocks that are gaining momentum as global sugar prices climb to multi-month highs. You're looking at raw sugar that has touched 16.6 cents per pound. While when you talk about white sugar, that's also hit a 15-month peak. Domestically, prices have jumped nearly 10% in a month, supported by deficient rainfall, expectations of stronger festival demand, also adding some bit of support. And as you can see on your screens very clearly, look at that 5.5% thereabout gain coming in for something like a Sri Renuka sugar as well. So really giving sugar companies a sweeter outlook. That's what global sugar prices are doing. Let's also move on and talk about Schneider Electric in terms of their first quarter performance, and that remains largely under pressure. Same of the stock with that 10% downtick really coming in, with revenue growth moderating due to project execution timelines. Delayed order conversion is something that you were looking at as well. And when you talk about commodity price volatility, cost pass-through, lags, lower operating leverage, that's also something that really dragged on the profits. Sales rose about 4.8%. On a year-on-year basis, EBITDA is the one that's fallen about 44%. And the profit after tax, that's the one that's plunged nearly 70% as well. So finance costs also rose sharply during the quarter, and that pressure all in all seems to be very clearly reflecting in the stock in today's trade. Let's move on and talk about PTC Industries. That has also reported a strong first quarter on the flip side, with that 7% gain coming in. So when you talk about revenue, it's nearly doubling on a year-on-year basis. 192 crore rupees is what you're looking at. EBITDA is also surging to 49 crore rupees as well. And when you talk about margins as well, that's also something that you're looking at. Net profit also jumped more than 5-fold. So some bit of increase that you're seeing coming in across the board when you talk about not just the operating performance but also the profit. Let's move on and talk about Quality Walls. That has delivered a strong set of numbers in the first quarter. Look at that 8% gain coming in as far as this particular counter is concerned, and we'll tell you why this has really happened. Now, you do have the revenue that's risen about nearly 17% on a year-on-year basis. EBITDA jumped almost 50% as well. Margins also expanded to somewhere close to 11%. Net profit is the one that's grown about 35%. So the company all in all is reporting 16.5% organic sales growth, has refreshed its in-home portfolio with a little bit of that improved formulation and a new made with milk proposition as well. So that's something that we're looking at as a key growth lever to watch out for. And speaking of growth levers, let's talk about Turtle Mint FinTech, and that's one company that's delivered a strong set of numbers and a 10% gain also coming in at close. In the session, the gains were much higher than that as well. And when you talk about the premium, that's actually risen about 50% on a year-on-year basis. You do have the digital partner base that's also crossed 691,000, and the renewal revenue that's also grown very healthily. 66% in fact is the uptick that you're looking at when you talk about that. And even other than that, you do have the margin expansion that you're looking at. Notably, more than 3/4 of the platform premium is coming in from beyond the top 30 cities. So highlighting some of that deeper penetration into non-metro markets, and that's been a stellar sort of tailwind coming in for this particular quarter. Let's move on and talk about Lumax Auto Technologies. That has also reported a strong set of numbers. Not much of a change coming in as far as the stock is concerned, but the revenues risen nearly 33%. On a year-on-year basis, EBITDA jumped about 54%. Margins also improved. And when you talk about the advanced plastics division, that really remains a key growth driver when you talk about this. Moving on, then let's talk about Uflex. That has delivered a strong first quarter set of numbers. Look at that 20% gain coming in for something like a Uflex, with the revenue growing nearly 38%. EBITDA is the one that surged about 94%. On a year-on-year basis, margins improved to 16.5% as well. Net profit has jumped sharply as well. And strong packaging demand is something that you're looking at across key markets. Better realizations and improved product mix is also something that you're looking at. And add to that, higher capacity utilization and supporting that performance really in terms of the overall profitability. Let's move on and talk about Zaggle's first quarter performance, and that's faced a little bit of pressure, as you can very clearly see on your screens, with that 20% cut also coming in for this particular counter. So rising costs seem to have bitten, and acquisition related expenses also being a little bit of a drag as well. So EBITDA margins do remain a key concern. You do have Dice contributing no revenue in the first quarter, as its contribution is going to be kicking in from the second quarter. But when you talk about expenses as well, they've risen as previously capitalized costs move into the profit and loss statement. So higher staff costs is something that you're looking at in terms of the expenses from the Zag.Money acquisition, and that has also added to the already prevalent pressure as well when you talk about the financials. Let's also talk about Moving Green Finance. That has reported a strong first quarter set of numbers. You're looking at medical disbursements rising about 56% on a year-on-year basis. AUM growth was also driven by Mediclaim and climate financing. while strong loan book expansion boosted net interest income. You do have the salary Sathi disbursements that also scaled up, particularly in Assam, and rating upgrades also further helped lower the company's cost of funding while asset quality really remains stable. Moving on then, let's talk about something like Puravankara that has delivered a strong turnaround quarter, and look at that gain also, about 4% gain coming in on this particular counter, returning to profitability really as higher property handovers really boosted the revenue. So when you're talking about the revenue, look, you're looking at a 62% gain as well, and the EBITDA almost tripling, margins also expanding to over 22%. So all in all, a very strong quarter that you're looking at. Pre-sales also grew about 28%, sales volumes climbed about 9%, and customer collections also very healthy, a rise of about 40% you're looking at here, marking the company's highest first quarter collection in 3 years. And let's also move on and talk about Regal Resources that has seen revenue decline in the first quarter, but the profitability has improved, and that seems to be reflecting in terms of the street's performance as well. 5% uptick also coming in as the company is shifting towards its manufacturing business. EBITDA is rising despite that lower revenue kicking in, margins also expanding to 15%. So quite the healthy number that you're looking at when you talk about margins. The key driver was a sharp decline when you talk about trading income contribution, while the higher manufacturing mix also really supported better operating margins and net profit growth. Let's move on and talk about LG Equipments that has delivered a strong set of numbers in the first quarter, 2.4% gain coming in on this particular counter. The revenue has risen about 22%, EBITDA has grown nearly 28% on a year-on-year basis. Margins also improved to 14.5%, while net profit has also risen more than 20%. So growth basically was led by resilient performance coming in when you talk about the India and America business, along with double-digit growth in the automotive business. So that's been the key tailwind as well. And even when you talk about other geographies, so if you talk about Europe and Australia, they did remain subdued though amid some of those headwinds. Let's move on and talk to you about copper that is racing toward record levels with prices already up nearly 16% this year. The latest surge is being fueled by tight near-term supplies with the LME spread widening to extreme levels at that. So US stockpiling ahead of potential tariffs has really drained the metal from other markets, while investors are also betting on some of that stronger long-term demand, and that's something that they're penciling in right now. The big question, of course, is going to be if China's supply and a US tariff decision could really cool this rally. Moving on to some national news, let's talk about a big reshuffle coming in as far as the BJP is concerned. Now, Smriti Irani, Ram Madhav, Vasundhara Raje, BL Santosh, among others, have been named as prominent office bearers as the BJP announces big reshuffle coming in under President Nitin Nabeen as well. So the party leadership rejig comes ahead of a long-expected cabinet reshuffle with an eye on key upcoming elections in Uttar Pradesh and then, of course, the general elections in 2029. Let's move on and talk about two more Air India pilots who failed preliminary drug tests ordered by the airline following the Phuket-Delhi flight incidents as well. So the two pilots have been de-rostered while final tests are still awaited. More than 300 pilots, in fact, have undergone the testing so far as Air India is implementing a new drug testing SOP following a positive test involving the pilot in command of the Phuket to Delhi flight. On to some international news now. Iran-US diplomatic efforts to end the war have hit another roadblock with the June Memorandum of Understanding now expired and talks deadlocked. An IRGC commander, in fact, is saying that Tehran could shift from a defensive posture to an offensive one under a new maximum deterrence policy. So that's something that they've talked about. Meanwhile, US President Trump has also ordered the Pentagon to scale back some of the annual drills as well, citing a position on Iran's denuclearization. We'll talk about that in a bit. But in parallel, you do have Hamas that is urging the Board of Peace to pressure Israel to accept the Gaza peace plan. And like I mentioned, US President Trump has ordered the Pentagon to substantially reduce joint military exercises with South Korea, citing their cost and Seoul's refusal to really participate in actions against Iran as well. So the order is coming in just hours before the exercises were set to begin. And you do have Trump who's pointing to his very good relationship with North Korean leader, and that's really the highlight coming in terms of the reshuffle when it comes to geopolitics as well. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA did not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law, of being elected?
Because being a political science student, by the way, I am also...
Market ends in red but recovers most losses from day's low. Gains in realty, metal and media stocks offset fall in the IT and FMCG space. Broader indices turn positive in trade as Nifty Bank stages a nearly 500-point recovery. SEBI chief says the regulator is analyzing concerns around CAS, including expiry date data, and he says that it's too early to gauge participant response while tracking errors remain in non-issue. Dhoot Transmission and Molybio Diagnostics made strong market debuts, both listing at healthy premiums over their IPO prices. The listings reflect robust investor appetite for fresh market opportunities. Finance Minister Nirmala Sitharaman signals a major upcoming shift in banking sector. High-powered committee on banking for Viksit Bharat to be announced this month. Oil prices are volatile as fresh Lebanon fighting and Hormuz vessel attacks cloud hopes of a US-Iran deal. Brent stays above $89 while supply risks keep the markets on edge. 2 more pilots test positive in preliminary drug test as Air India is screening all its pilots for drugs. De-rostered pending final results. Second drug test results are awaited. CAG report flags E. coli bacteria in 8 railway station water coolers. Railway Minister Ashwini Vaishnav reviews drinking water and orders filtration systems at 20,000 locations. New BJP team under Nitin Navin unveiled ahead of the key polls. Smriti Irani and Vasundhara Raje make a big comeback. Smriti Irani named National General Secretary, while Vasundhara Raje appointed as National Vice President. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets have really fared today. So US benchmarks have wrapped up a choppy session in the red, with Nifty slipping below 24,300 levels and the Sensex losing over 250 points. Investors remain cautious amid these mixed global cues and also elevated market uncertainty. Let's go over to my colleague Parth for a complete market roundup.
So for the first time ever in the closing auction session, we have seen a downfall in the indices, with Nifty seeing a downtake of over 50 points, Bank Nifty seeing a fall of over 200 points and Sensex also falling by 116 points today. Now coming back to the markets, Nifty has ended in red, down over 0.3% today. Mainly this down move was led by the IT sector, with HCL Tech and Infosys being the top losers of Nifty today, each seeing a downtake of over 2.5%. However, the broader markets have outperformed the benchmark, with Nifty Midcap 150 closing in green, up by almost 0.2%, mainly led by IPCA Laboratories and Motilal Oswal Finance, both of which were the top gainers of Nifty Midcap 150. IPCA Labs was up by over 8% after the management increased their guidance post the Q1 results, and also Motilal Oswal saw an uptick of over 5.5% today. On the Nifty Small Cap 250 side, it has also ended in green, up by 0.2%. Hind Copper and PTC Industries were the top gainers, both seeing an uptick of over 7%. Hind Copper mainly on the back of higher the rise in copper prices that we have seen in the last few days. Now coming to the sectors, they have ended on a mixed note. Nifty Realty was the top gaining sector, up by over 1.4% today, mainly led by Oberoi Realty and Godrej Properties. Oberoi Realty seeing an uptick of over 4.5% and Godrej Properties up by over 3% as well. On the losing side, we saw Nifty IT being the top losing sector, down by over 1.7%. Infosys and HCL Tech again were the top losers of the index, each seeing a downtake of over 2.5%. On the trend side, Nifty IT, Nifty FMCG and Nifty Auto have closed in red for the second consecutive day, while Nifty Pharma and Nifty PSU banks have closed in red for the third day in a row. Also, Nifty Oil and Gas, Nifty Bank and also Nifty Metal have snapped their 2-day losing streak, while Nifty Financial Services has snapped its 4-day losing streak as well.
Thank you so much, Parth, for that. In fact, viewers, the BJP has now unveiled its new national team under party chief Nitin Navin ahead of a crucial round of state elections. Now, blending experienced leaders with younger faces and also ensuring wider regional representation. A key highlight is the return of former Union Minister Smriti Irani to the party's core organization as a National General Secretary. Now, former Rajasthan Chief Minister Vasundhara Raje is also finding a prominent place in the new team. Significantly, 6 of the BJP's 13 national vice presidents are women, underscoring a push for greater female representation in leadership roles. So let's go across to my colleague Vasudha to break this down for us.
There are 3 big takeaways. One, of course, the BJP is wanting to consolidate its position. So if you look at the list of general secretaries, there's nobody from south of India, which means that the party is very clear that it wants to consolidate its strength. You know, we've always had Banti Sanjay and D. Purandeshwari, kind of candidates in the past. But this time they're making it clear that somebody who understands the organization, somebody who also basically has shown his or her potency is somebody who will be rewarded. And also the second big takeaway is the fact that it is infusing a lot of new energy, which is why you see a lot of young people, Sandeep Pathak, like Badmucha pointed out, Himang Joshi, Biplab Deb, Smriti Irani, somebody who's been vociferously defending the government, at the face of Gen Z protests. So these guys have been rewarded, and the ones who actually worked well, Vinod Tavde, Sunil Bansal, Tarun Chugh is also part of the list, but in a different responsibility now. Those people have also been rewarded. Most importantly, this is the party sending out a message that it will consolidate its strength because it needs to prepare for 2029. And looking at what happened in 2024, it needs to put in that extra preparation. Although it has been winning a lot of assembly elections, it does not want to take any chance.
Absolutely. So at first glance, viewers, the message seems to be about a mix of experience and fresh leadership with a greater emphasis on youth, women and wider representation. But what does this rejig really tell us about the BJP's political and organizational strategy? Let's decode that with our political analyst, Sandeep Shastri. Thank you so much, Sandeep, for joining us today. So, Sandeep, let me just start with the larger picture here. When you look at this new BJP team, what is the biggest political message you see in this reshuffle? Is this simply an organizational restructuring, or is the BJP really signaling a change in its political strategy, strategy as well?
Himanshi, if you look at any major change that the BJP does in its organization, there is always a deeper message. There is always a lot of thought. There is a lot of debate, dialogue that has gone into it. And if you look at the new team as it stands today, this team is a combination of youth. It is a combination of geographical representation, women, all that is there. They also have retained certain critical people from their past team. BL Santosh continues as the National General Secretary for the organization, which is an important position, and a critical person from South India as part of that position. Two former chief ministers have been brought in, Biplab Deb and Vasundhara Raje Scindia. That again is an important dimension, even as Smriti Irani and along with her, we also have Ram Madhav included as part of the team. So in that sense, it's an interesting mix of regions. It's an interesting mix of experienced people with young talent. They have brought in a lot of women in critical positions. One thing I was looking at is whether the cabinet reshuffle would precede the BJP reshuffle. But it seems that the BJP party reshuffle has happened first. Therefore, I'm not too sure whether in the major cabinet reshuffle that happens, what would happen to those excluded. Generally, many of them were accommodated in the party in critical positions. Possibly governorships is waiting for those people, and there is now limited scope for more entry of people into the key organizational structure of the BJP. Right. Also, I think it's important to note that they have changed the person who coordinates their IT cell, which I think is again keeping in mind we have election. The team is completing halfway down its term. We have critical elections coming up, and preparation for the next election is something that the party would want to do. So this is, I would say, a midterm reshuffle in preparation for next year's crucial state assembly elections, and also preparation for the coming Lok Sabha election, which is a few years away from now.
All right, Sandeep. Rightly pointed out, we are seeing this combination of experienced leaders and also Smriti Irani. There's Ram Madhav who's back. So, like you said, that, we are preparing for the next, it could be a preparation for the next Lok Sabha election. So is the BJP really trying to strike a deliberate balance here between experience and also generational transition?
Beyond doubt, especially in the light of the developments of the last few months, I think the party has realized that a serious push towards including the younger generation is important in the party. And I think this is part of that exercise. You have important people from the frontal organizations which support the BJP also finding a place in the structure of the BJP organization, which is again something they have often done in the past. of bringing in people from their frontal organizations into the party, using their experience, using their skills, using their organizational capacity. So in a sense, this is a very clearly a well thought of exercise to give the new president of the party a team which can lead the party in the next few years, and not only from an election point of view, but also from an organization point of view, because being in power at the center in nearly 22 states, it becomes important that the party machinery is strong enough to complement the government machinery. So I think that's the whole effort that you see happening.
Yeah, because Sandeep, young Indians today are consuming politics very differently. Instagram, YouTube, short form video, podcast, and even creators are becoming increasingly important, political spaces here. So do you see this reshuffle as an attempt by the BJP to make its organization and political communication more relevant to a younger electorate like the Gen Zs?
Undoubtedly, Himanshi, that is the plan. And that's why a larger number of younger people, not that those who are not young are not digitally savvy, but I think that dimension is kept in mind, putting people in place who can relate to the younger generation. By younger generation, I just don't mean those below 25, but even those below 40, because this age group below 40 today constitutes, if I'm right, more than 2/3 of the electorate of this country. So given the importance of these segments of society which are below 40 years of age, and especially below 34 years of age, I think these groups are what is critical to the BJP, and the people taken in are in all likelihood people who can try and make an appeal to that segment. Even in the IT cell, I presume the new leadership from Chhattisgarh, which has now taken over the IT cell, and the team which will be there with that person, would be focusing much more on social media and social connect, because that's where, as you rightly said, the future really lies.
Because, Gen Zs and even the younger electorate is not necessarily, responding to the traditional political messaging in the same way previous generations really did. So they are talking about jobs, education, entrepreneurship, technology, climate. And do you think that BJP really needs a different kind of political vocabulary now to connect with this generation? And can this new team really deliver that?
Himanshi, two issues which you mentioned, unemployment and inflation. If you look at any study done in the last 25 years, these two issues have been in the top 5 list always. So this is something that the party has been dealing with in the past. All parties have been dealing with in the past. But then the new generation is not just looking at employment and looking at quality education and looking at price rise. They are looking at it from a very different lens. They are looking at it from a very different perspective. And more importantly, I think the language that needs to be used to persuade this generation on issues is very different. And that's what people will be looking at from the new team. And I'm sure those who have constituted the new team have kept this factor in mind when they constituted this team.
Thank you so much, Sandeep. So the new BJP team clearly brings in together the experience, new leadership, and even women leaders, and even a stronger generational mix. So with that, viewers, let's quickly turn our focus to the government, which is set to announce a high-powered banking committee for Viksit Bharat soon. And after inaugurating the 2-day public sector bank conclave in New Delhi, Finance Minister Nirmala Sitharaman has said that the panel will deliberate on the role of banking in Viksit Bharat. She also said that PSBs must really move in the direction of the committee's report once it is out. Let's listen in to Finance Minister's commentary.
We expect the announcement on the high-powered committee to look into banking for Viksit Bharat. Sooner the committee will be announced, and the material that you are producing from 2 days discussion on the basis of a well-researched set of documents which have been shared with you in advance will hopefully provide that substantive meat for the committee to also look at. So the committee would probably have that material before them even as they deliberate, and even as they deliberate to give us their thoughts and also the recommendations which will help us to clearly understand where the committee wants India to go towards Vikasit Bharat, and in that the role of banks.
Viewers, turning our focus to India's labour market, which is showing a sign of improvement in July, with the unemployment rate easing to 5.1% from 5.5% in June, according to MOSPI data. And this decline was led by rural India, where joblessness has fallen to 4.5% from 5%, while urban unemployment has edged up slightly to 6.7% from 6.6%. So the data also points to stronger workforce participation. The labour force participation rate rose to 55.4%, while the worker population ratio has climbed up to 52.5%. And this is indicating that more people have really joined the labour force and found work during this month. So overall, the July numbers suggest a broader improvement in the employment conditions, particularly in the rural areas. Now to discuss what the new banking panel could really mean for the consolidation and even possible PSU bank mergers, we have my colleague Shrimi with more updates.
Absolutely important development as the government is now moving to set up a high-powered panel on banking reforms, a committee that announced by Finance Minister Nirmala Sitharaman in February 2026 budget, and the government could now announce the formation of that panel very, very soon is the indication we are getting. And the mandate of that panel is expected to cover the entire sort of banking reforms for the Viksit Bharat vision through 2047. Now, one area that could be closely watched is around consolidation of public sector bank, and that already seen a major round of PSU bank merger in 2019-20, and sort of that created larger and stronger bank with greater capacity and competitive globally. Now with the PSU bank balance sheet and access quality is much more improved, the government is now looking at what would be the next phase of reform should look into, and that means that bank merger and consolidation could come back on the table, but this is also expected that there could be a major sort of exercise around deeper mobilization, credit growth, investment financing and much more as part of wholesome banking reform. So we will await for, of course, the panel to form and whether they will look more into the recommending, the PSU another round of consolidation, or will it more focus on strengthening the existing banking structure.
And viewers, as the Reserve Bank of India wraps up early on the FCNRB scheme, sources tell NDTV Profit that inflows could have surpassed the 100 billion mark at this pace. My colleague Shrimi has sent us this report. Let's look at that.
Well, the RBI is closing this special FCNR swap window earlier than planned, and the key reason behind is that the response has been much stronger than anticipated, and the facility was originally meant to remain open till September 30th. But by August 13, bank had already mobilized around $52.3 billion and under the scheme. So what we are picking up that at this pace, had the window remained open till September 30th, inflows could potentially have crossed $100 billion, which over and above the government internal target. Now, with early closure, the RBI expect total mobilization of around 70 to 80 billion by the time the shortened window closes, which is August end. The rationale, or rather a key concern, is the hedging exposure. In fact, these are largely 3 to 5 years deposit, and the larger deposit, the greater the foreign currency exposure, and that needs to be managed and hedged. Plus, there is a considerable, thought process around interest rate uncertainty over the next 3 to 5 years that no one could actually predict how the global rates gonna be. So with the RBI already seeing much stronger inflows than anticipated, there's a little reason to keep adding to the long-term exposure. But what we also given to understand that if forex liquidity comes under pressure in future, the RBI can reintroduce this similar sort of facility. But for now, they are closing it, and these are the reason what we are gathering from the New Delhi.
Here's the RBI stepping up its engagement with the NBFCs, with senior officials meeting industry heads to seek feedback on the draft guidelines for revolving credit. So the regulator has also stressed stronger internal compliance and even risk audit practices, while keeping a closer watch on the loan product seeing rapid growth. Let's go over to my colleague Piyush for more details on this development.
Well, that is right. Officials from the Reserve Bank of India met with senior leaders of non-banking finance companies in a FIDC event on Friday. There, the RBI officials cautioned RBI on the fast pace of growth and said that, NBFCs need to maintain supreme level of internal compliance, audit system, risk management frameworks. Further, the RBI said it is open to feedback that is being received with regard to its proposed guidelines for NBFCs on revolving credit facility. Now, we had reported how NBFCs see if these guidelines come as is in its entirety, then NBFCs could face a lot of pressure on their existing businesses and growth plans as well. So that feedback was received. Separately, the RBI also said that they want to bring NBFC regulation on par with that of global standards. They want NBFCs to avoid any sort of mishappenings, because we have seen over the last couple of years a few large NBFCs have gone bust. And RBI said that the SRO, which is there for the industry sector, should not be considered as a parallel regulator, but rather like a first line of defense. Whenever any industry issue arises, the SRO must first take the stock to address the issue. And further, the RBI has also asked NBFCs to have proper customer grievance redressal mechanisms, and for them to follow the DPDP Act and of course the digital lending framework.
Thank you so much, Piyush, for that. Viewers, turning our focus to SpiceJet, which is getting big relief in the insolvency proceedings at the NCLT. The tribunal was expected to pass its final order today on 8th CIRP petitions filed against the airline by its lessors, and SpiceJet has now informed the NCLT that it will settle all the outstanding matters with the lessors, with tribunal deciding the way forward on August 19. And let's turn our focus to to action being taken in the Delhi-Phuket flight row, and Air India has conducted mandatory substance abuse screening on at least 400 pilots as part of checks for the banned substances. Now, at least 2 pilots have returned non-confirmatory test results, with their samples now being sent for detailed analysis. I have my colleague Danish, who's joining us with me on this development. Danish, what really happens next for these pilots, and what will be the detailed analysis really determine?
First, let me tell you that since last Thursday, Air India came out with this voluntary step in which it talked about screening all the group pilots, and by that I mean all Air India as well as Air India Express pilots. They're supposed to undergo certain screening, and this screening is being done just to find out whether any pilot has consumed any banned substance or whether they have consumed any kind of a banned medicine. So now, as per our sources, at least 400 pilots have been screened till now, and out of those 400 pilots, 2 pilots test results. The first test result has come out, which is non-confirmatory, which now means that there could be something wrong in the first sample that has been collected by the airline. Now, this particular sample will be sent further for the second test, and then we'll come to know that what kind of a banned substance was found in their bloodstream. Besides this, as far as the action we have to talk about the action that is being taken till now. Well, both these pilots have further been grounded. They will not be there for any active flying duty. But let me tell you that this is a major voluntary step that Air India has taken by themselves. There has been no indication from the central government side whether they have to do this or not. But after the Phuket Delhi flight incident, we are seeing that the airline has become more proactive just to look at how deep this problem is, and what is the next step now. This particular sample will be sent further for further analysis, and then only we'll come to know that what exactly has been found out in that blood sample or not. But let me also tell you that the Air India group employs over 5,000 pilots. So 400 pilots that have been screened right now, that is like a very less number, and it is like a very small number to really come on any conclusion to. But on all, if we see, this is kind of another shocking incident which is coming out from Air India because 2 more pilots have been the tests have come out, and it has been found out that the samples have come out non-confirmatory, and now the samples are being sent further.
Right. Thank you so much, Danish, for getting us those details there from the ground. And viewers, moving on and to some global news now. US President Donald Trump has said that US will substantially reduce joint military exercises with South Korea, citing his very good relationship with North Korean leader Kim Jong-un. Now, Trump is also hit out at Seoul for declining to join Washington's efforts to denuclearize Iran, calling the military drills costly and even inappropriate. Hostile signal, and now South Korea is saying that it is reviewing Trump's comments while earlier confirming that the annual exercises would proceed as scheduled. The development comes even as North Korea has conducted ballistic missile tests this month. Viewers, with that, it's a wrap on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Some officers earn promotions, citations, but this officer has become more popular sometimes than even those in the movies.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried. It doesn't give any pleasure for regulatory body like us to go and act, suspend licenses or cancel license or improve notice. Nobody has a pleasure doing that. Rather, I would be the happiest person that FDA does not need to go anywhere and FDA office is closed. If that can happen, nothing like it.
Somebody who's an executor of the law, a guardian of the law, have you ever thought of being one of the people that forms the law or being elected?
Because being a political science student, by the way, I am also interested in much in cephalology. I have studied literary cephalology. It's a part of political science. There are certain requirements. The person like me who is very forthright and upright, I don't think he will be or she will be accepted in politics. So it's not my cup of tea.
I'm going to ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said, "Man lo."
Absolutely no.
Because the whole system has been known to be.
Absolutely. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
A new Nepal, new possibilities, a new opportunity for regional cooperation. NDTV World brings together the voices defining the next chapter of India-Nepal relations. Nepal's Foreign Minister, Shishir Khanal, Finance Minister, Dr. Swarnim Wagle, Dr. Shashi Tharoor, actor Manisha Koirala, and Dr. Ram Madhav. Diplomacy, commerce, security, infrastructure, tourism, soft power, NDTV Anviksha, ideas across borders. The Nepal Dialogue, 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real. क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies, especially on the industry as well as on their earnings and whatever is hot. Right now, of course, I've got a very interesting company for you. But before that, try to guess this company. Of course, a lot of action is happening in the sugar and ethanol space, and that's why I picked up this company. It's a Karnataka-based biofuels producer. One more hint, you'll try to guess it by now. It's India's largest ethanol producer. Look at that. This is the important point to talk about. Third important reason is it was listed, you could say, a recent listing on October 3rd last year. Company is backed by astute investors as well. And that's of course Madhukela related, promoted at NTT. I'm sure you must be guessing the companies by now. But remember, the stock is also trading below its IPO price. Interesting bet, right? Let's talk about it. And the stock in focus is going to be True Alt Bioenergy. This is the company which we are talking about. But why are we getting this company right now? What's happening? A lot of institutional interest is coming up in this counter, and especially with the IPO price coming down, there might be an alpha to be made here. Question is, where does the company actually stand in the circular economy? We'll try to understand that. Second important question we'll understand is the progress on the Govardhan schemes and the CBG segment. That's where the government is focusing a lot. Of course, ethanol discussions we will do, but this segment is also something which we should be watching out for. Third important reason, any impact from the feedstock availability which is happening, and this is because of the issues in the sugar cane industry because of erratic monsoon. We'll try to understand that as well, because that's a raw material for the company. The top line and the margin guidance is very much important. That's something which we watch out for, especially after a company has come out with its decent set or a good set of numbers in the first quarter. The key timelines for SAF. SAF is nothing but Sustainable Aviation Fuel Project. How it's panning out, and futuristically, where does the company actually stand? Also, we'll understand the capex plans and the utilizations. It seems like it's on the lower side, so there is a scope of growth in the current business as well. Also, the targeting of the retail fuel stations, a very minor business revenue coming in right now, but in the future what happens? That's the big question to be asked. So these are the important questions we'll try to understand, but most importantly, how do we value this company when we get in the risk and threat, and how does the company actually mitigate? So that will be something which we'll be watching out for. And about the company, let's talk about it. It's one of India's largest biofuel companies. Second important reason on this company is India's largest ethanol producer. You can have a look at that. But moving on, let's understand something more. They're the early producers of compressed biogas under SATAT scheme. Also moving ahead, this is the first biofuels company in India to attain that OMC status. And the company's joint venture they are having for the CBG business, this is from Sumitomo Corp as well as GAIL. Also looking at the companies backed by Madhukela promoted Singularity Fund, so we'll be of course watching that as well. And of course looking at the capacities, installed capacity has increased by almost 43%. Another important detail I would like to point out for the capacity is that currently 65% of that is operating on a dual feed technology. We'll understand that as well with the management what that is, and the current capacity utilization is just 61%. Also, apart from the capacity utilizations, remember the full form KLPD is kiloliters per day. This is important if you're tracking, but there are some growth triggers also for the company. Of course, there is a structural expansion beyond the E20 segment, which we are talking about. A lot of discussion here already. Policy-led multi-decade growth visibility is there. Third point I would like to point out is the global aviation decarbonization, and we are just at the start of it. Moving on, the last point would be the green gas platform. We'll try to understand that as well, as the whole economy is something which we'll try to understand. Apart from the growth triggers, there are key schemes we should be knowing, and these are the schemes which will aid this theme going ahead. First one is of course the galvanizing organic bioagro resources done, or Gobardhan as we call it. Sustainable alternative fuel, SATAT is there, which is also important to track. Also, there are two other important schemes which should be there in your radar. This is the synchronization scheme between CBG and CGD, which is the city gas distribution companies, and the waste to energy program and central financial assistance. So there's a lot of B2G exposure here as well, and with that definitely there will be a kind of a risk. But industry stalwarts, Abacus Mutual Fund, we have Singularity AMC, Madhu Kela promoted, as well as Value Quest from Ravi Dharamshi. All of them will be meeting this company from August 18 to 20th. So we'll try to understand some major moves can happen or not institutionally, but also let's understand what may work for the company. Let's try to get that. The valuations are attractive, the stock is below its IPO price, and company has performed strong financial and operational performance, and I have tracked this company last 3 quarters. They have delivered really strong, and the government schemes and initiatives, that's also started to benefit. But there is also a flip side to it. Another important reason what may work for the company is the return ratios. They have reversed and become much more better than their peers also now. And lastly, they are meeting some large players from August 18 to 20th. So there is some action. What may not work is the minimal participation in FIs. In the shareholding pattern, FIs haven't taken position. Why? That's the big question. Second important reason is the lack of analyst coverage. Only one analyst is tracking the stock. So we try to understand, as and when the company grows, why not more analysts come up? Uneven monsoon is impacting the sugar sector, and there might be second order effects also coming in as well. Another reason is the execution risk, the B2G risk, and of course the feedstock availability. This is where the concern starts coming in. Also, the unevenness in cash flows, that's also there in the business. So we'll try to understand that. So this is the entire picture about the company, but let's try to understand and make you get the KYC ratings, which is very much important. And which are the important KYC ratings? We have, of course, the income statement, balance sheet, cash flow, return ratio. These are the basic ones which we get into a company and talk about it. Of course, over a period of time, remember, it's just 1 year of public information we have when it comes to shareholding, street cred, and valuations. We'll try to compare them with the IPO time and the current levels and the outlook. What does the management say going ahead? So let's start the first one, the income statement. What does this mean? Largely, income statement has been really strong. The 3-year CAGR, look at the growth numbers coming in. Even in the FY 25-26, even after that, the Q1 FY 27 has also been on a stronger side. Looking at the margins also, they have done decently well. It's a largely, you could say, they have managed it around that 16% band. This is on the long-term basis I'm talking about. Just to show, this is the number which I'm getting it, and this has been decent enough. Going ahead, what will be the margin triggers? That's what we'll try to understand. But as of now, the Q1 numbers have also been on the stronger side. So I'm going to give this income statement a strong thumbs up. Balance sheet is largely neutral in our analysis, especially with the equity size, how things have moved. Of course, there are some changes also coming in. You'll see that in the FY 27 balance sheet. Borrowings is slightly dipped from FY 25, and cash bank balance is also decent at around 90 odd crore rupees. So it's a neutral rating for me in balance sheet. So we spoke about income statement, we spoke about balance sheet. Let's talk about the cash flow segment also, how things are panning out, and this is where a little bit of concern comes in. Cash flows has been erratic here. One side it has come down. If you compare that with FY 25, there is a B2G risk angle as well. So that's why I'm going to give this a neutral rating only in my analysis as of now. Let's talk about the return ratios, and that is where the reversals have started coming in this first quarter. Remember this dip which was there because of course, the equity base going up in the IPO. Same story repeats for the ROE also. Let's see the flip which has happened. ROCE has been good. ROE also has been flipped up and it has gone up to 14%. So decently placed when it comes to the return ratio. So I'm going to give this a thumbs up as well. This is on a short-term basis. I've given my analysis. Just that's the caveat here. But apart from this, let's look at the shareholding. Nothing much has moved. FIs is a concern for me. Just 1% holding. but the DIs are holding decently, and it's of course backed by ACE astute investors such as Madhu Kela. Already Singularity Fund is having 1% stake in the company. And who knows, you might get some more domestic astute investors as the institutional meets start coming in. So shareholding, it's a neutral rating from my side. But let's move on and understand the street cred, how things are happening. And this is the number to look at. From the IPO price, the stock is down 3%, but there was a good recovery also after the IPO from the lows. It was there from its lifetime lows, you could say from 2025, 2026 lows. It's up 51%. This year itself, the stock is up 19%. So good follow-up buying has happened in this counter, but it's still even Stevens here. So I'm going to give the neutral rating for street cred. And the valuations, however, is very attractive. Why? I'm going to say that the peak was 58 times when the IPO euphoria was there. 12 months trailing P I'm talking about. Even if you average it out, it's 44 times, and currently the stock is trading at 29.6 or 30 times right now. So this is where the valuations become attractive, and that's something which we'll be tracking as well. So as of now, valuations, I have given this a strong thumbs up. Let's also talk about the overall outlook, how things pan out. A strong industry push has come on the ethanol segment. That is where the bullishness comes in. Construction for these 4 CBG plants are in progress as planned itself. Third important thing the management has talked about is they're targeting financial closure, the SAF project, which is nothing but your sustainable aviation fuel project. They're targeting the commissioning in the next 24 to 30 months. And lastly, the phase 1 of retail expansion plan comprises of 100 fuel stations. So the outlook remains very strong. So I'm going to give this a thumbs up as well. So let's revise the KYC ratings of what this True World Bioenergy is having. Income statement has been really strong. Top line, bottom line growth has been really good. 3-year basis CAGR, even the Q1 numbers, but concerns definitely there on the balance sheet and cash flows. This might impact, especially with a B2G risk involved. Return ratios, however, have flipped and become very good, especially after its IPO. Shareholding street cred, we need to give it more time to judge the company. Either ways, the stock pays below its IPO price, and that is where the valuations become attractive, and that's why I've given this a strong thumbs up. While the outlook for their businesses, be it CBG, ethanol, or even retail fuel, is strong. So I'm going to give this overall 6 out of 8. It's largely above average numbers which we generally give to a company, and that is where we'll take forward our conversation as well. So net True World Bioenergy gets a KYC rating of 6 out of 8. But moving on, the conversation will continue, and we'll have Vijay Nirani, the founder and managing director of the company. It's a very young second generation entrepreneur with more than a decade of experience coming in sugar, spirits and bioenergy as well, with education coming in from James Cook and SPJIMR as well. We are joined in by Vijay Nirani, the founder and the managing director at True World Bioenergy. Good afternoon, Vijay. It's always a pleasure to have you with us, and of course a strong set of quarterly numbers did come in. We want to just understand, you are coming for the first time in KYC with us. You spoke about the circular economy in your presentation. Where does your company actually stand in this, and what's your actual moat? Vijay, yeah, please go ahead.
Also, thank you so much for having us on your show and for covering us. This means a lot. And just to tell you, it's been exactly about 8 months for us to having been listed, and we'll be close to a year old come October. And over the period, we've had a lot of ups and downs, and in fact, downs have all been on the macro levels, only on the psychological front, of course, without scientific backing. Today, True World is the largest